Hey. Hey, leave that stuff alone. Go play downstairs. Go ahead. Go play. Go play. Good morning. I'll be with you shortly. I'm just making some coffee. I'll be right back. Good morning. Good morning. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 21st. Futures are higher off the best levels of the session and still fading. We were up at, 50 handles at one point? All right, I forgot to update Gamma. Let me do that. All right, I'm going to mute you guys for a sec. I'll be right back. Okay, Gamma is updated. Looking at the watch list, looking for a bounce in the futures. We want to stay above 4,300. The put walls have moved lower to S&P 500 and the Spider put put walls have moved lower, 4,300 and 430 respectively. Put wall is now our major support level and the bottom of the current range. Q support is at 355, resistance at 365 and 367. Okay, 367 lines up with the expected move for the week as well, and options that we posted in the watch list under the target expected move section. Okay, we have $8 plus or minus on the SPY. Qs have 875 and IWM has $4.30 either way, up or down. Okay, we've got 2 minutes to go for the opening bell. 2 minutes left to go. Okay, we're starting to move a bit higher. Let me get Woody up and running. Okay, we got Jackson Hole this week. Jay Powell speaking on Friday. Okay. So the watch list looks pretty good. I added the extended watch list down below as well. We'll keep an eye on these today. Okay. Less than a minute.
Be true. This Summer man, Friday after gotta be having bad news.
Palo Alto Networks obviously up, announcing earnings after the close. Very strange on Friday to do that after hours. I was going to take some puts. I'm glad I didn't. I said, you know what? There's really no odds there. I mean, it could have gone up, it could have gone down 50-50. Wasn't really interested. Okay, watching Microsoft. NVIDIA got upgrades. Did my bell didn't go off? Okay. Well, we're open. We are open. It is Monday the 21st, 9:30 opening bell. First 15 minutes, I'm not doing much of anything except taking profits off the table if we have any. Tesla's higher. Tesla's up 550. NVIDIA's up $9.60. Google's flat. Amazon's flat. Microsoft is up $1. Okay, looking for Bitcoin. Let's see, Mara is up. Bitcoin gapping up. No, not gapping up. It's just trending off the early morning low here. Tesla higher. Apple looks good. Okay, NVIDIA fading, people taking profits. I am very skeptical of upgrades at the highs. Feels like institutions rethinking about being long the stock. There's no scientific analysis, just a gut feeling. If NVIDIA gaps up again, power to you. Okay, Cisco is moving higher. Cisco's following through. Cisco. Cisco with a follow through day potentially. Energy was very strong last week. All the cyber stocks are higher. Okay, Adobe. Adobe, nice bounce. Adobe.
J&J shares have been up, I think it's outperformed the S&P by 13.9%, while Kenvue's underperformed by 4.6%. That's of late, since the exchange offer was communicated to the market. J&J is up 9%.
Bounce at the 50-day.
Kenvue down. That's reversing today. Here are the numbers.
All right, Tesla. We got some nice trades on Tesla coming through. Tesla off the 200 level. Thought we might get down there. Didn't happen. That would have been a 50% retracement. Okay, let's go over here, S&P.
And J&J will own about 9.5% of Kenvue after more than they thought they'd own. Yes, I think it is. There was an expectation perhaps that they would own hardly any at all, but they still own roughly almost 10%. But again, it is, you're seeing the results there. That's R. That's not something that happened to J&J. That's R. People have kind of
S&P 500 above some resistance levels. 4,400's likely. There goes Cisco. Amazon trying and going green now. Google going green. Apple's flat, 20 cents. Tesla looking really strong. Tesla looking strong. Nikola gapping down. Rivian on the move. Rivian. Thanks. Thanks, VMV. Rivian. Bid. Lucid bid. EVs today. Tesla higher.
They are, which is why many go for a spin-off as opposed to a split-off. But the buyback was which you just get a certain ratio of shares and you're done. Warner Brothers Discovery and AT&T. That was a great explanation. I went over this and I was thinking, if I was to explain it.
All right, Cleveland Cliff bouncing. What's U.S. Steel doing? U.S. Steel. Okay, U.S. Steel pop. A little pop there on U.S. Steel. Not that big a deal, but it is higher. Going to push. I don't see. Is there any news on U.S. Steel? I don't see any news. Okay, so just shorts covering, it looks like. X. Shorts covering. CLF up.
They're appealing to someone in the Third Circuit who has point blank said, I will not allow this. So what they're really trying to do, David, is get to the streets, believing that this Supreme Court will somehow rein in the plaintiff's part. But it's going to
Palo Alto Networks looking strong.
by the Third Circuit. And I tell you, David, I don't like the way this litigation is going because the tens of thousands since the bankruptcy was defeated in the federal court last, there have been so many thousands more of cases. Yes. Because frankly, if it does cause mesothelioma or ovarian cancer, because people believe that there is a asbestos in the talc that was used, not anymore, then there's a bias in the jury system, including one recently in Alameda, California, to use J&J as a piggy bank to pay people who have terrible lawyers, jackpot, or parents. Very hard.
So it makes it hard to own the stock, is what you're saying.
It's too hard.
During
We had
this
to sell.
period of
We
time.
sold it for the. As soon as they announced this thing, we just thought it got out of the.
XPEV gapping up.
I don't want to be
XPEV
involved
gapping up.
in a litigation situation because these days there's just so many juries that will find against you. J&J, big cap stock, they're rich. Boom. By the way, it's similar. I mean, I don't want to relate too much to UAW, but there are these forces that, where capitalism is not in favor. But the J&J is brutal because if you go
Okay,
back,
NVIDIA
in case they all screech you now,
off the screen, looking good.
very compelling to J&J and the law. But
You're in NVIDIA, right, Frano? I had calls that expired on Friday, unfortunately. Right on direction, wrong on timing. That happens a lot, especially if you're trading options. And another reason why I sell covered calls or sell premium a lot of times, call and put writers, option writers tend to make the money. Disney trying to bounce. CVX on the move. Okay, SP 500. Starting to sputter a little bit here. Pre-market, we hit these levels. Futures a little bit higher. We're currently futures up 20. Okay, I'm waiting for the first 15 minutes anyway, 9:45. Get the algos to finish taking care of imbalances. Then we'll assess the markets, see if we got a trend or if we have a flat VWAP. Okay, we're continuing here. S&P looks pretty strong, up to pre-market highs. $4,400's a major area. It was support. It's now resistance. Okay.
There is still more to come here, but that was an important point to clear. No doubt. We've seen with acquisition, which we're still waiting for, in terms of them getting the approvals they need from that same.
Okay, we're above support levels.
Got to get some more updates there. That's August 29th on the acquisition of deal. The breakup fees will rise. Anything, but that was another case. It's not far away now. Still waiting for something to happen there where we believe, many believe that the path cleared for approval.
Okay. So,
And then on the image
good morning, everyone. Good morning.
that's the other one.
Hope you had a good weekend. It's very productive here. Kids started school today. Yay. Yeah, AMC. Yeah, I see that, Sundog. Yep.
But maybe they want them to say they never will. I don't know if it's something that can say that they won't ever do.
Mr. Bradway did. He said, I'm happy to sign anything. He's already put it out there that he will never do it. It doesn't matter. Mr. Bradway has said, look, I'll do whatever they want. What is this?
Well, we're on Broadcom. I'm trying to get it.
Cisco, nice follow through.
Broadcom, Marvell are these ancillary ways that people are playing the
All right, Cisco. Let's take a look at Cisco. Google. All right, Cisco. All right, we're looking for high stocks with high relative volume.
Mr. Bradway made a very good case for saying, listen, I won't do any of the things that they're happy to, but it doesn't seem to matter. This FTC is ideological. And
All right, ESTE with some volume this morning. That gapped up. I guess that's news. NVIDIA, Caline Petroleum, the energy stocks looking for a follow through. Semiconductors, number one, thanks to NVIDIA in part. Micron, most other stocks are moving higher. Frano posting news that Micron's looking to build a plant, production facility, chips in Idaho. That's nice country. Have you ever been skiing in Idaho? Beautiful up there. I've never been there in the spring, but I imagine it's pretty nice. Okay, so big cap and small cap energy is in on a bid. They're moving a bit higher. AI and robotics are higher. Tech, consumer discretionary, software and services, semiconductors. VIX is up 1.39%, though it is trading off the high 1756 at the moment. All right. NVIDIA. Okay, so Walmart had earnings. Watching for a follow through. Target, the retail stocks, Ross stores. Those did well last week. Ross stores inside day, not surprising. Target. Okay, Merck. Merck looking better. Merck looks good. Looks like Merck pushing off the 50 day. All right, for the last 3 days. Merck pushing out the 50 day. Day 3. Maybe today is the one where we test overhead levels. The 100 period is up at 111. you can almost sense the sentiment, right? We were down big over the last 3 weeks. We had a bounce on Friday, a follow through gap up on Monday. People taking profits. Phew, let me get out of the markets before NVIDIA reports. You know, some people, not everybody, obviously. We had extreme readings in NIMO that we thought would address a more bullish sentiment this morning on a bounce, technically speaking. We're at 70, minus 70. We hit minus 108, I believe. Corey, I think you said minus 108. Last time we did that was back in March, and that led to the rally that just got capped off at 459, 460 on the on SPY. That was the end of July. So in March, we had NIMO down below minus 100 and reversed. And that's what we're looking at right now, potential for that to happen. It's not going to be straight up, obviously. Advanced decline percent also moving higher. All right, so this is a good measure of oversold. Extreme oversold when we start to get to minus 30%. In the upper panel, that's S&P. Mid caps, followed by small caps. And then the lower panel is NASDAQ. You can see the degree of the bounce on the NASDAQ. Thanks in part to NVIDIA getting a nice bounce. Tech and software services, hardware, all bouncing. So look to tech. We need to see a follow through. NIMO, as we mentioned, hit a minus 96 on the close on Thursday. Down below minus 80. The statistic is the next 5 to 20 days are bullish, around 76% of the time. Okay, you can see what happened here in September, October, and then March. Had a nice rally. Okay, let's see what S&P. All right, once we get this out of the way, we'll start to look at stocks showing relative strength with high relative volume. We bounced at the 200-day S&P equal weight index. It came down and touched the 200-day already. Looking for a bear flag or a retest of the 50-day. Number of stocks above their 50-day are down to 35%. So that's energy for upside. Fewer stocks are participating. However, the reverse is also true. If we start to move higher, we've got stocks moving back towards and above their 50-day potentially. CCI is turning. If all three of these turn, that's a signal. In the lower panel, number of stocks above their 200-day are about 55%. So, yeah, we're going to watch what happens here. Okay, so let's go to the S&P again. Starting to see some rejection. 4,400. People taking profits before we got back to the morning highs for a second time. Cisco trying to bounce. Cisco. SOXL is on the move. AAOI, got a nice pop there. Yeah, AAOI, I've been off. Still have shares. Back to even on Applied Optoelectronics. I bought a second time. Okay. Initially, Applied Opto, AAOI, was mentioned by, I believe it was Edmund or EZ, somebody with an E in the beginning of their name. I was down here near 7. We got that run up. We sold. I bought some again as it started to move towards 1590. I waited for the dip, so I'm not feeling too bad. Right back to even. I held through these last 3 trading days because we're below. A good example of holding the 921. Look at the moving averages. Look how strong they are. 9, 21, 50, 200-day, and 100-day moving averages. All 5 are moving higher. They're stacked on top of each other. Doesn't guarantee a follow through, but it does represent support on pullbacks because people who are buying over here, portfolio managers, whoever, institutions, they're not going to let this slip back if they're bullish. If they're bearish, they'll start selling. We're not seeing that. We're seeing a pop. All right. The pullback also was in lower volume. That was what we wanted to see. Stochastics turning back up. RSI rising. So that's Applied Optoelectronics. Don't buy it up here. Look for a little dip. It's up $2 on the day. Okay, let's go take a look at sectors again. Semiconductors are the strongest. SOXL is higher. Here is Applied Opto. Okay. So we bought originally here during the 7s. It had earnings, ran up to 14, then 15, 16, and then faded last week. Held through Wednesday, Thursday, Friday. Today it's gapping up. So we're back to even now. I am on the second trade on this one. 9, 21, 50, 200-day are all moving higher. Doji Day. 1-to-1 up down vol. One-to-one up down vol is a Doji Day. Jay Powell speaks on Friday. There's 11% chance. Yeah, noise of blocking the U.S. Steel takeover. Okay, that's why I'm trading options on that one. If it implodes and drops off, most I lose is the maximum, the cost of my calls. I don't see any news on the news wires. Yeah, I have nothing on the news. So usually I would see it on the news if there's anything on U.S. Steel blocking. Yeah, politicians. Yeah, that makes sense. I mean, they're politicians are getting in the way of progress. I mean, U.S. Steel, if they merge with Cleveland Cliffs, that'd become one of the strongest steel companies in the U.S. Nucor is still a very viable and profitable steel company. So is Steel Dynamics, Ternium Steel. There's quite a few other steel companies. Schnitzer Steel. Yeah, you got ArcelorMittal MT, German steel company, was potentially interested. You got some Japanese steel companies. Keeping it in the U.S., and this is just my opinion. Politicians could give 0 Fs what I think, but keep it in the U.S. makes it a stronger company, and it's not like there aren't other steel companies out there to compete. Anyway, whatever. So I have options on it. So if it takes off and heads to the 35 level, we'll be fine. Walmart starting to bounce. Walmart bouncing. Cisco, a little fade after a pop. I believe Cisco's on the NYSE, right? Cisco. Or is it on the NASDAQ? I mean, I know it's a tech stock, but NASDAQ. Okay. Rivian, high of the day. Rivian, high of the day. Nice job there, Frano. Nice job. Rivian, high of the day. All right, Rivian, after earnings, pull back right to the 50 and the 200-day moving averages. All right, so a reversal and move higher. I mean, what has changed after earnings? The company talked about deliveries, that they would exceed estimates, that they would deliver the numbers. And, it pulled back. People took profits. So the company starts producing, we'll start seeing that news. We should see this area hold. The pullback started to the volume started to taper off, exactly what you want to see. Stochastics on many stocks. Enable stochastics on your charts because if you're considering an entry, make sure that stochastic is down here at the low. Let's go take a look at the watch list, for example. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, all day Monday, 21st of August. Can't believe how it's going to be Christmas before you know it. Man, can't get out of this cycle. All right, so here's stochastic on Adobe. Look at Adobe. Let's go to Candle Glance. All right, so Applied Materials is higher. Applied Materials. Looking good. Did I put that on the top? No, I put it on the extended watch list. Okay, Applied Materials above the 921.50, 200-day, all moving averages. RSI is back above 50. Nice looking candidate. Above average volume. Okay, there goes AAOI. Okay, so cool. All right. This one has a habit of running higher. AAOI, Applied Optoelectronics. Okay, so does it spring off of this level and shoot? All right, so you see that upper Keltner band? That upper Keltner band would be an area where I start to look at selling at 17. All right, so what's the strength of the trend, Frano? The strength of the trend looks really good here. Pointed higher, which is telling us it's not overbought yet. Potential for this to follow through after this little pullback. It took a breather. Now we just need to see above average volume. The volume looks pretty good so far this morning. Let's just see what dollars lower, dollar higher. Okay. So is the 10-year. 10 years at 4.3. That's a headwind going into Jackson Hole. Okay, AAOI. AAOI average true range is traded 137% so far. Daily range 104%. 15, 30, 60-minute are all on buy signals. Our vol is 2 times AAOI. Okay. Okay, so there's insider buys, AAOI, president and CEO, insider buys, disclosures. Insider buys, the president and CEO, bought 20,000 shares. Not a whole lot.
Yeah, David, a year ago, Fed Chair Jay Powell and Jackson Hole, they found a pretty strong landmark in the mountains. Inflation was too high, and no one should doubt the Fed's resolve to bring it down.
AAOI.
This year's summit, Powell and the Fed success. Fallen by
20,000 shares between 1223 and 1247. 1223 and yeah, right in here. Right there. 20,000 shares.
and there's been no increase in unemployment rate. So little loosening in the job market creates concern that continues about wages driving up inflation. Powell's most likely course here, I think, is to stay the course and wait for a slowdown from three things: the lack of effects of monetary policy, bank credit tightening, and of course tightening of financial conditions. We've seen it recent stock market.
All right, between 1223 and 1247.
Embracing this higher for longer mantra from the Federal Reserve. Futures have priced in the year-end 2024 rate of 317 this time last year, and now it puts it at 4.25. The average forecast from Fed official 0.7 percentage points higher. There you go. That's the chart there. Now, if the economy doesn't show signs of slowing, what other problems for the Fed?
Okay, thank you. Thank you, VMV.
Or it could also maintain the current rate. That would mean a tougher real rate.
Don't forget, we had a very large 4,000.
No, but Steve, he has chosen to communicate in the past. I mean, you're a veteran of that event more than perhaps anyone other than the chair itself. What are your expectations?
Well, it's a time to reflect. It's a time when you get a little more confident.
Okay, let's see.
Latest one in mid-September. So I do expect him to maybe explain a little bit, as well as other Fed officials. We're talking to Patrick Harker on Thursday morning. David, it's a chance for him to say, hey, what are we doing with this higher than expected or better than expected growth to that end? How is it that we've had higher inflation but declining inflation at the same time? And also there's talk, some folks been writing about whether or not the Fed, Jason Furman this morning in the Wall Street Journal, ought to raise the inflation target. I don't think that's going to happen. I think he's going to talk tough but suggest some flexibility here if things keep going the way they've been going.
See what happens on Friday. We'll talk a lot about it between now and then. Steve, thanks. Steve Leeson this morning. Champagne time coming off a pretty rough week, as you know. A number of mega cap names now in correction territory, including Apple. Focus this week is clearly going to be on NVIDIA as the chip maker gets ready to report earnings Wednesday. Our next guest believes, quote, the guidance will be heard around the world and could fuel the tech rally for the rest of the year. Let's bring in Dan Ives, Wedbush Securities Analyst, has an outperform. And 490, Dan, is not that aggressive compared to some on the street now.
I think it's just starting. I mean, I think what we're going to hear from Jensen and NVIDIA, it's really about the demand story that I believe is right now skyrocketing. And if you look at tech across the board, this is going to be guidance heard around the world. You could the godfather of AI, and in terms of what we're seeing, that is the best barometer that we believe is really just starting for what we believe is a new tech bull market underway.
What's kept you from goosing your target the way others have? 800, 720 today.
I think it's really just showing the using 425. If you look in 2025, 2026, you're talking about revenues that potentially could double over the next 2 years. And I think the important thing for the market is not just NVIDIA. It's about what this means for Microsoft, for Google, for some of the pure plays, from Salesforce to Palantir and others. And I just think, in my opinion, this is just starting what I view as probably the biggest transformational tech team we've seen in 30 years.
There's clearly a lot of hype going into Wednesday's print. What if NVIDIA disappoints? Is the downside risk symmetrical to, the potential for an upside surprise here?
Yeah, I'd be shocked if there was a downside spike, just because right now, even being in Asia, all the demand that we're seeing, they almost right now going into, call it mid-next year, have already sold through. They're the only game in town. And I think that's the difference right now is that if you look, the best barometer of AI spending, it goes back to Jensen and NVIDIA. And I think right now, if you look at what happened post-Microsoft, I think there was definitely some nervousness. Is there a slower sort of ramp? You've seen tech stocks sell off here. Bears have come out of hibernation mode. I believe this is a tech rally that continues into the second half, and it's going to put fire in the engine.
I mean, when you think about Amazon and Alphabet,
You imagine if Nvidia does beat, that's going to be wild.
Oracle and Anthropic. I mean, you think about all that demand. You have to wonder, though, do they have the capacity, and what is that going to do in terms of some of the language or conversation around it on the call?
Okay.
In terms of saying whether they can actually meet that.
Yeah, and I think to Davis, I think that's an important thing in terms of just supply demand, because right now they are the only game in town, and of course down the road you have AMD and others that will benefit. But if you look going into next year, it's about the second, third, fourth derivatives. What are they hearing from hyperscale? What are they hearing from enterprise? From a use case perspective, because we believe use cases, we're looking at something that's up 5, 6, 7x. And I think that really for the broader market right now.
Who is this talking? That voice sounds familiar.
That's why that is going to be, in my opinion, the guys for around the world.
Oh, okay. Dan Ives. I like that jacket. He's been wearing that. I don't know if that's a jacket for the floor or what is that? Pink jacket. Very interesting. Summer. Some summertime. All right, kind of a slow morning so far. Okay, let me get back to the S&P. Sorry, I'm just making some notes here. Markets aren't moving that much. We have 1-to-1 up-down volume. That's telling us look for a doji. VWAP is flat for now. 4,400 is major resistance. We got support below 43.75, 43.50. We got the Fed this week. Godfather of AI? Oh, NVIDIA. Okay. This is cool. That's a good one. The Godfather of AI.
You look at names like Zscaler. I believe across the board we're going to see strength.
Do you blame the cash for allowing Friday night to become a distraction from the quarter itself?
Look, I think it became a story of itself. And ultimately, the catch is probably in my opinion, one of the best tech leaders out there, period. Now it's water under the bridge. I do not expect them to be doing another Friday night call anytime soon. But I think this year, sort of cybersecurity, you had some of the softness in Fortinet. Now with Palo Alto, I continue to view that as, the sort of this.
Where's Dan Ives from? His voice is, his accent, very interesting.
I don't know if the market's taking some, maybe that combo you're wearing is sending a sign of some kind, Dan.
The Miami Vice,
Yeah, it's beautiful. But what do you make of that? Why the outsized performance versus everybody else just right now?
Sure, it's because the price cuts that everyone was worried about late last week. Now, as we've actually dug into it, I think the market's starting to understand there's really only 10-12% of the models impacted for Model Y. A big sell-off in Tesla was because a lot of these price cuts worries that there's going to be more and more of a price war. We believe 95% of that's in the rearview mirror. The other thing that's important, demand in China, we believe, is actually starting to uptick relative to what we've seen the last few weeks. I think that's why Tesla's reacting accordingly.
possibly get a strike vote later this week. We'll see what it means relative to the legacy.
Oh, yeah. And look, the 313 area code continues to have one hand behind their back at UAW.
Dan, thanks.
Either way, that Miami Vice was definitely helping us. Anyway, thanks, Dan. As we head to break, here's a roadmap for the rest of the hour. Why JP Morgan's chief economist Mike Rowley sees a soft landing ahead.
Plus, concerns continue to grow around China's economy, which U.S. stocks may be more exposed. And Mark Mobius is going to weigh in on all those China risks.
And why there could be more pressure for commercial real estate ahead. Big show coming up on this Monday morning. Don't go away.
What's PayPal doing? There's a couple of people that were asking me about PayPal over the weekend. PayPal appears to be mispriced at this level, it's trading at fair value. Okay, slight discount to fair value, 13 times versus 15 times. The stock's fallen 16% year to date and 41% over the last 12 months. Trading at a discount to operating earnings, 13 times versus 15. Free cash flow also trading at a discount with prospects for earnings to grow modestly. I saw Seeking Alpha had quite a few articles on PayPal, if you remember. Okay. Coming into Friday's close, we had 15 out of 17 sectors that I follow were oversold, with NIMO at a minus 108. We had extreme, we had capitulation. Okay, when you look at this chart, tell me what you see. Okay, so when this gets down to like in October, okay, October, we hit this low into the green zone, meaning time to buy. Okay, start looking for a bounce. March, same thing. Here we are at minus 70%. Okay, this is volume percent. So this is capitulation selling. People freaking out, throwing the baby out with the bathwater, right? That whole scenario. So we're looking for a bounce. At the last time was March. You know what happened in March. We rallied up, we faded back to a higher low and took off to the upside. That end of July high was the most recent high. Still trying to get back to the bear market highs. I think we're going to get there. But short term, we could pull back. We saw those puts added at the 4,000 strike. Don't know what to make of that at the moment. That's the lower part of the range. 4,300 for now. 4,350. 4,400. Those are all the levels we're dealing with right now.
Hey, Leslie, U.S. companies were betting on a strong turnaround in China's economy this year, but so far, most have been left waiting. Dow CFO said on the company's earnings call that the anticipated economic rebound.
I don't know.
Zero-COVID restrictions have yet to fully materialize.
They're looking for a rebound. I don't. This article is. This segment on CNBC makes no sense. Did you see the weather in the last couple of weeks in China? Whole neighborhoods, whole communities, whole cities getting wiped out by the CCP so that they didn't flood Beijing. They opened dikes and levees and let the water flood these areas. Man, what a mess. What a mess. Okay, Apple pulling back a little bit. All right, so right now, Tesla's holding the highs. Watch the EVs. They appear to be in play today. Cisco, flat VWAP now. SPY pulling back below VWAP. Flat VWAP. 1-to-1 up down volume. NYSE is right at 1-to-1 right now. Tick cumulative has yet to cross back up. On the 4-hour, look at the short time frames. Let's see what that looks like. The 5-minute. Nope. 15-minute. Nope. 30-minute. Nope. 60-minute. Nope. All right. So we need to see a crossover. Tick cumulative needs to cross up. Bull cross to tell us that institutions are buying more than they're selling. It's 1-to-1 down volume. So that's selling a lot. A lot of the selling was last week. So even though we got these oversold readings, we have to wait for it to give us a signal, meaning it has to turn back up. That'll be a product of volume and price. So we're watching that at 10:16 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. This is a good example of what I mean when I give you the idea that and post in the email that I'm looking. Let's wait and look for a clear directional signal on Monday. Okay, that's usually what I'll say in the weekend video and in the emails I sent out. What I mean by that is what we're seeing right now. It's not a clear directional setup. Okay, the S&P looked like it was going to rally. It popped up to the highs pre-market and faded. We're fading right now. So right now, VWAP is flat. So we'll go with that for now. Kava, nice little bounce on Kava. U.S. Steel had a little pop up to 32.50. Looks like shorts covering. Some conflicting news out there. Politicians looking to block. How do you block? As a politician, how do you block the unions? All right, XPEV still moving. China, XPeng. This is the pattern that you're looking for. If you are a day trader, you should look for these patterns. Okay, VWAP up and to the right, price pulling away, high relative volume. XPeng is currently trading below average volume. That's the daily. Let me go to the 5 minute. 5 minute. It's on a buy signal. It's trading. Okay, there goes the dollar's ripping higher here. Dollar breaking out. So is the 10-year. Okay, that's a headwind for U.S. equities. Dollar. That's bearish. 103.46 is probably back above the 200-day, the dollar. Looking for a clear directional setup. If you're looking for ideas to follow through, then watch what's in play right now. Semiconductors were the high. We had the EVs, EV stocks all moving higher. You've got the US dollar. I showed you this in the weekend video. US dollar, 103.46. Okay, so it's above the 200-day, that magenta colored line. It's breaking above this descending wedge. So that's a bullish maneuver here. If you were trading a stock, you'd be looking for this as a bullish play. Buying dips, selling rips. Okay, the 10-year yield, 10-year. Okay, the recent highs match that of October. It looks like we're above the October highs now. Uh-oh. Rut-row. Okay. Okay, we're above the October high now. 10-year. Trading 4.35. 4.35%. Bearish. That's bearish, folks. The 10-year is above the October highs right now. Just be careful. Okay, so we're above. Here's the October high over here, 4.33%. We're at 4.5. 0.5%. Breaking higher, 921.50 are above the 200-day. This is a bullish trend. Okay. So what I was thinking was oversold conditions could lead to a pop. Need to see some longevity in this pop. The 10-year needs to back off for starters. So does the U.S. dollar. U.S. dollar needs to back off. Not going to do anything, giving what we're seeing. 1-to-1 up-down volume. Going into Jackson Hole meeting this week with Jay Powell speaking on Friday. Fed governors will be talking it up. Are they going to talk it up? What do you think? All right, so the UUP, US dollar, Deutsche Bank, US dollar index. Okay, so that's breaking higher above this range. What is the CRB index doing? We want to see lower, not higher for the CRB index. Okay, it did pull back last week. Okay, bouncing at the 10 EMA. S&P 500 on the weekly needs to get back above the 10 EMA. Looks like consolidation for now. What would be most frustrating would be for us to go nowhere and into Jay Powell's speech on Friday and just chop around here. All I'm doing right now is looking for signals from money flow. Not seeing much right now. VIX. VIX is bearish. It's red. Look for lower lows and lower highs. We know 4,000 is a major level. Puts that were added last week. Okay, so these EV stocks do look good, though. Let's see. Lucid was bid this morning. Okay, it's okay. Tesla. Okay. Fading back to VWAP, wouldn't be surprised. If you traded Tesla the first hour, almost the first hour here, you probably want to take some profits off now. What's Cisco doing? Cisco's flat VWAP. All right. Bitcoin is hanging out at 26,000. That's risk off.
Some drama in the hedge fund industry involving that company right there. It's Sculptor Capital. The former Oxif, our viewers may recall, went public quite some time ago. Not great performance, a lot of internal instability, if you could call it that. But on July 24th, a firm called Rhythm Capital signed a definitive agreement to buy Sculptor. The price then $11.15. In the intervening weeks, a group of very well-known hedge funders that includes Bill Ackman, Mark Lasry, and perhaps
Moved up to New Jersey in the late 80s, 87. I bought my first condo. The rate at the time was 8%. First job, first architecture job.
They do not believe that higher offer is reasonably likely to lead to a superior proposal. Why not? Well, they cite
all right, SPY moving back. Why is Woody not giving us a signal?
And in their opinion, at least, underestimates the amount that would be necessary by several $100 million. And therefore, they say, no, not likely or reasonably expected to lead to a superior proposal. Let's be very much
I see why.
My understanding is that Danny Ock is still on.
Audio is going to my Bluetooth headset. Duh. All right. Should be good now.
Their needs for new funds to finance a deal. That may be something that perhaps the special committee is unaware of. I don't know what has been communicated to them, but the history here is also very interesting. Of course, Danny Ock really losing control of the hedge fund to Jimmy Levin, right?
Mhm.
Well, what has both.
Who was his protege at one point.
All right, so we got 1-1 up down volume. Just went red. So
No, you're right. It's
the
very
Bears are winning, but it is a flat VWAP situation for now. There we go. There's my audio. All right, so S&P flat VWAP.
a lot of litigation surrounding that. Ultimately, that led to a succession.
A lot of catching a lot of bulls.
After a few stops along the way, ultimately it landed in the hands of Jimmy.
Okay, blocks wise, there's very few blocks. We got 5 blocks, 5 Q blocks, 3 SPY, and 3 IWM.
And then, of course, shortly thereafter, you see this new consortium bid come to light. You're right in that Boaz Weinstein seems to be the driving force here, the one who's fully in support, and then he's gotten some of his hedge fund
Right, well, the idea would
friends
be
on board.
most of the portfolio has Sculptor's credit.
It is.
The Weinstein's expertise is in credit.
It is.
So one would anticipate perhaps being able to merge
them together.
Saba and this.
But worth noting, this is an LP money.
Yeah, I bought the house in 87 December,
So it would be their own
right after the closing. I bought IBM.
Some interesting nuggets that I just wanted to flag here. They say that at least the belief from the special committee to the board is that the consortium underestimated financing by $217 million.
Low ticker alert minus
And at
800.
least my understanding is that from proposal 1, the idea was that they needed to sell the CLO to raise the capital to finance this transaction.
All right, we'll continue to pull back. Okay, so these resistance levels from last week are now support. Fingers crossed for the bulls. 43.50, 43.70.
No, although you are talking about principals who can conceivably get a hold of that money. What I'm hearing, they're going to figure out a way to try to fix it. I don't know to what extent there is at least a contemplation of a roll-in by the likes.
Semiconductors are still up 50 cents, off the best levels of the session.
But it's an interesting potential battle. I didn't know Rhythm at all, by the way. I don't know if
They're
you've
a
heard of
REIT, a real estate investment
Yeah.
trust. And I think the strategic
Kava pulling back.
is worth noting as well.
Lucid pulling back.
There really aren't that many asset management and
Walmart.
very few and far between. A big reason behind that is just the idea of combining kind of two cultures. And asset management firms are really kind of creatures of their culture. So to see this in a situation where it's not even a friendly deal per se, is very interesting. And you brought up the point about the AUM, it's sizable credit portfolio. $34 billion in AUM. I mean, this is not a
No.
small firm by
It's not a small firm, although it used to have been one of the leaders,
It
and its
did.
performance was not good.
well, they're up about 8 over
Over
the
the long period.
Yeah, and the stock
All right, down to support.
relative to AUM.
We'll be keeping a close eye on it.
Okay, very few blocks. Block trades.
Indeed. A quick programming note: don't miss our Delivering Alpha Investor Summit.
SPY,
28th in
3.
NYC, where some of the three biggest investors.
Qs, 5.
We'll talk where they see risk and reward ahead. Scan that QR code or
IWM, 3.
for more. And still ahead, a big test for the Fed and stocks in Jackson Hole this week. JP Morgan's chief economist joins us to break things down. Don't go away.
Okay, so this time of day, last week we had about 5 times as many blocks as we do now.
Low ticker alert minus 800.
That's just telling you institutions aren't active. Yeah, last week the longs didn't work. Okay, so that was the other thing. The other part of the watch list comments is that, use a bit of caution coming into the week. Let's see a clear directional signal. Right now, the clear directional signal is a bit lower down, down to support. Microsoft up $1.60. Still needs to get back into the 330s, 340s. Sectors, let's see what that looks like. Sectors were very strong this morning. We are now 55% red, 45% green. Still being led by semis, tech, consumer discretionary, XLY, biotechs, AI and robotics. That's up 0.3%. Small cap energy. Where's large cap energy? Where are you? Small cap, large cap energy is off 0.8%. Okay. Junk bonds are off 0.24%. Junk bonds. We want junk bonds to be bullish. Okay. If you're a bull, you want junk bonds to be above key moving averages. Right now, junk bonds have pulled back. Okay, junk bonds have pulled back. Okay, so a rule of thumb is the junk bonds and high yield corporate, a risky asset, tend to lead the markets. So if we can't get back above the 10 EMA and produce a higher low and a higher high, we'll see that weakness in the next few trading days, next couple of weeks. Over here, back in 2020, when we had this waterfall event, that was COVID, obviously. And again, here in 2022, even if you missed the first 5%, 10% of the pullback, you missed a lot of carnage. Okay. The point I'm trying to make is junk bonds are still hanging in there, but it's something that we need to pay attention to every day. Let's see. High yield corporate debt, HYG. Okay, that's still holding there. IBB also needs, it's a risky asset. IBB needs to move a bit higher. Okay, you can see back in 2020, 2021, 2022, this had a cascade lower after the vaccines were no longer, constantly being pumped. We've been moving sideways. IBB, really nothing there. We also want to see IWM, small caps. IWM looked pretty good on Friday. All right, so IWM sideways range could come all the way back to 160 and still be in this range off the high. So here's the daily. You can see what happened on Friday. We had a nice bounce. This had a lot of promise. 200-day, 100-day. Here's a 50-day up here. Best case scenario is we consolidate in this area. S&P 500. S&P 500. Okay, we had made it 6% off the high on the bounce, right at 236 and 50% confluence area. The reason Fibonacci levels work is because a lot of people use them. Algos use them. All right, RSI is still below 50. That needs to turn up. And this indicator needs to turn up. All right, so we're at extreme oversold. So we're close. We're close to a bounce. NYMO hit minus 108 last week. Let's see what NYMO looks like. NYMO. This could just be a shakeout too. NYMO's at minus 84, so still pretty weak. Number of stocks trading above their 50-day are at 35%. Number of stocks above their 200-day are at 50%, right around 50%, which means a lot of stocks have pulled back from extreme levels of overbought, that red zone. And when the volume picks up to a degree, aka capitulation, when everybody's selling, I say everybody, but when everybody's selling, that's extreme. That's a capitulation. We get down into the green zone. We're looking for a bounce. Does it mean it happens right now, today? No. But we have to keep our eyes open for it. Right now, we're just showing weakness. So it's probably going to take a little while to get used to this flat VWAP area. We're at support 4370, resistance overhead 30 handles higher, 25 handles higher. No clear signal except for weakness at the moment. NIMO, NAMO still weak. The dollar's higher. So we need to see the dollar, the 10-year, and the VIX all roll over. The dollar's still showing strength. Looks like a bear flag on the S&P. Looks like a bear flag. S&P bear flag. SPX.
Do you pay any attention to that? Is that the precursor that it once was, or are there other forces you think at play that are dictating kind of the direction of that curve steepening?
Yeah, so no, we do look at that, and it would be kind of foolish to disregard a statistic like that has a pretty good track record. And it is one of the reasons, even though we are a little more optimistic on the outlook.
ArcelorMittal making an offer on U.S. Steel. Okay. I don't see it. I don't see it. Where do you have it? Where do you have it, Al? Dente. I don't see anything on maybe breaking news. Let's see. I don't have anything. Newswatch. Briefing.com.
Last week was a whiff of U.S. exceptionalism, and I just wonder how you think about the U.S.'s place right now in the global economy. Best house in a bad neighborhood by a long shot?
Yeah, I would say so. If anything, it's looking.
Okay, suck the bears in. Reverse this.
Inflation numbers continue to come in softer without any real increase in the unemployment rate. And growth, as we started this discussion off, coming in pretty strong. And I'd add to that productivity growth is looking pretty good. So overall,
Cisco bouncing. All right, XPEV, XPeng, China EV, XPEV at the highs of the session, pulling back a little bit now.
We'll take a quick break here, but before we do that, check out the biggest gains on the S&P this morning, led by Palo Alto. Of course, we discussed it. That takeout on Friday, people concerned perhaps with the expectation that we deliver bad news after the close. No, it actually was a good quarter.
You have it on TD Ameritrade? Okay. Should show up on TOS, Thinkorswim too. Let's see. X. Thank you. Thanks. Okay, so maybe we do get some more news this week. It kind of fell off on U.S. Steel last week after that $35 offer. Escart, I guess it was Escart that offered 35. All right, so we're bouncing off support. Thanks for the news. Thanks for the news. On U.S. Steel. Okay, good. Good. Teamwork in the trading room, always appreciated. Not just by me, but your fellow members. Benefit. Share ideas. Okay. Microsoft still pretty tight range, up $2.50. Microsoft bouncing back to VWAP. Microsoft. FANG stocks. Let's go take a look at the FANG. FANG stocks. So we're at extreme oversold, capitulation wise, as far as volume is concerned. NAMO hit extremes that we saw in October, November, also in March. That led to a bounce. So we're still waiting. Caveat is we've got a lot of puts being added. Some down at 4,000 to end the week.
I'm Dominic Chu. Stocks, as you can see right now, mixed to start off the new trading week as investors digest rising U.S. Treasury yields and look ahead to any commentary that comes out.
Advanced decline percent is
Wyoming. Now we are taking a closer look at the
okay, a little hooked down now. NASDAQ looks the best.
Regional banks like KeyCorp, also Fifth Third, PNC are up by around 10% or more just on a month-to-date basis alone. So just keep an eye on this one key area of the market that we are watching as we try to get a sense for the Fed's policy outlook later on this week. Now I will send it back over to Post 9 for you folks, Leslie.
Dom, thank you so much. Sticking with those regional
Thank you so much, Dom.
65 banks in the Northeast. It says, quote, while deposit pressure has stabilized over the past few months.
NVIDIA squeezing at the highs of the day. NVIDIA earnings.
Bring in Ocean First Chairman and CEO Chris Maher. Chris, thanks so much for being here. So we looked at, pretty sizable over the last month or so that Dom just showed us. How much of that has to do with just the overall rate?
All right, looks like a bear flag. Could roll over here.
Kind of worsening sentiment surrounding the sector.
Great to listen. So I think it's a couple of things going on here. The first is there's a little bit of uncertainty around regulation and capital levels. So in that,
Okay, stocks just flattening out. Not much to do.
Primarily about that, about concerns or questions about the rate cycle. Higher for longer. How does that impact different banks? How is everybody positioned? So I think it's a bunch of things kind of wrapped together. On the positive side, though, I think the credit outlook has gotten better. As it looks like there's a bigger chance the economy is going to hit maybe a soft landing, or certainly have less of a recession. I think we can all be a little bit more, you never want to be relaxed, but you can be a little bit more thoughtful.
TJ Maxx bouncing off the low. TJ, last week we had Ross Stores with breakout of a cup and handle. Today, inside day, Ross Stores. Looking for a break and a push higher. Keeping an eye on what sectors are showing the most strength will help you as a trader. Semiconductors continue to show strength, so looking for higher lows and higher highs in individual semiconductors. Let's see, what's Intel doing? Intel having difficulty at this 35 level. T-Doc. Wow, Teladoc made it all the way down to 23.
The recession fears have kind of abated, at least in recent weeks.
Yeah, there is a lag. Everybody wants to make sure that their portfolios are performing the way they like. Our customers are doing great. So we operate Baltimore to Boston. We have a big presence in the Jersey Shore. It's a seasonal market for us in New Jersey. So we're seeing our clients doing pretty well. Although things have slowed. You can see the slowdown in a couple sectors. You can see it in transportation. You can see it in warehousing. You can see it in a few other areas as well.
Does that mean you think delinquencies top out here or sort of plateau?
Carl, it's a really hard question because delinquencies are so low right now. And charge-offs.
All right, so either this is a bear flag or they're going to hold this support level and push off. All right, so we got to get back above 43.75. NVIDIA at the highs. Google off the high of the day. Looking for buy signals. Just cautious because we don't have a lot of momentum at the moment. Tick cumulative needs to turn up. We need to see up IM 2 to 3, 3 to 1, 2 to 1 at least. NASDAQ is still green, 1.18. But probabilities are not that good. We got to bounce, so that's good. Like to see yellow bars starting to show up on the Squeeze Pro. Yellow bars. Still have red bars. The dollar is starting to reverse off the highs. The 10 years up there at 4.34%. VIX is starting to back off. All right, so we might get a bounce here. Might get a bounce. The dollar's starting to fade. We just need a 10-year to roll over.
What are you seeing overall? How have you been able to do that?
Yeah, things have really stabilized. And I recall, I think it was here with Carl the day after Silicon Valley went under. So it was an exciting spring, not in a good way. But I think things are stabilized. You're seeing deposit flows normalize at most banks. You are seeing customers that were taking money at non-interest accounts and shifting them to interest-bearing accounts. That was a big movement, and that started like late in 2022 and into 2023. That appears to have abated. People that were going to move their money have moved their money. And negotiating rates, so there's still pressure. You still have to pay up for deposits, but the deposits are increasingly there. And I think the consumer confidence is much better than it was a few months ago.
So you feel like deposit betas at this point have effectively peaked?
I'm not sure they've peaked, but they're certainly slowing down, and they're approaching.
So far, 43.70 support is holding.
A bit of pressure on funding costs, but I'd also point to this: the 75 basis point moves by the Fed are a lot different than 25 basis point moves, and then the pacing of those moves is really slowed down. So it wasn't just that rates were going up; they were going up very fast and very frequently. And that curve is flattened, so I think you're starting to see this kind of ease off.
So the pause really gave the banking system time to kind of alter.
All right, it's very slow. It is very slow. Still not a whole lot of blocks. 1, 2, 3, 4, 5, 6 on the SPY. 4 on the IWM. 4 on IWM. 6 on the SPY. And 8 on the Qs. That's very low volume, block volume. That's telling you institutions are not participating very actively at the moment. Eight, 6, and 4. 8 Qs, 6 SPY, and 4 IWM. So the selling isn't intense, but yet, like it was on Thursday, Friday, market muscle, need to see that turn up along with tick cumulative. Tesla hanging on to VWAP just off the highs of the session. All right, looks like a bear flag. Bear flag. VWAP is flattening out again. If we lose this level, 43.50 is the next level down. 43.50, we tested that, moved through it last week. Looks like we got down to what, 43.38, something like that. Not the futures, but on the S&P. 43.50, we rebounded on Friday, got back above it. We're below that 4,400 resistance overhead. So there's like a 50 handle range here. 43.50 up to 4,400. Right now we're right in the middle, but forming a bear flag. So it looks like we could roll over here. U.S. Steel starting to catch a bid again. More selling. We're right back down to the low. Let's look at the 15-minute. 15-minute. Nothing. Hope everyone had a great weekend. I did as well. Got a lot done. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 21st of August. We got Jackson Hole this week. We got the Fed, Jay Powell speaking on Friday. As of Friday's close, we were down at the close 5.4%. We had touched 6%. The Qs were down 6.4%. Despite the declines, realized volatility has remained pretty contained. Not as choppy as it was last year, this time of year. If you remember the high that we put in August last year, we promptly dove lower. Saw a lot of weakness last year. We finally got back above the August 2022 high this year, and we continue to make higher highs and higher lows. Right now, we're consolidating. In the short term, we're consolidating. We pulled back. We can consolidate in two ways. Obviously, we can do it in price, which is what we chose, what the powers that be chose to do, or we could trade sideways in time. That didn't happen. Oscillators are getting reset. Most stocks, if you look at any of your stocks, most of them have oversold stochastic. Okay, when this thing does, if it does get moving, the bears are going to have to cover. Okay, here is the S&P on the daily. Okay, RSI is starting to turn. You can see stochastics winding up in the green zone. Once this starts to move, MACD as a function of price will turn. You can see what looks like a shorter histogram bar. Okay, shorter histogram bar. If these start to get shorter and start moving the opposite direction, we could see the sentiment and bias start to turn. For now, we're right at the 50% retracement from this May pivot low up to the high. And if you take the October low up to the late July high, we're at 236 right here, 236, 4340, 4350. And we chose to bounce there off 6%. We closed off 5.6% for the week from the high. So this could go either way. Got to watch this closely. We got NVIDIA earnings. That's going to be fun. NVIDIA. Got an upgrade today, right? NVIDIA. So NVIDIA reporting Wednesday after the close. IV is 70% on the daily, 70% IV on NVIDIA. So it is about 30% above its historical volatility. HV is at 44%. We're trading 70%. So we're almost 30% premium being paid up for the options. We're just off the highs, NVIDIA. So Wednesday should give us a lot. Tesla holding at VWAP. Apple trying to push higher. U.S. Steel is back to 32. It hit 32.20. Lots of comments out there. Even that news item on U.S. Steel reads kind of funny. Hearing. Who's hearing? Who's hearing that ArcelorMittal is making an offer? I want to know who this person is that's hearing ArcelorMittal is making an offer. That's the thing about Reuters. They usually won't post this. Well, I don't say that, but news items that usually show up on Street Smart Edge have been confirmed most of the time. I don't see anything on US Steel yet. So hearing ArcelorMittal making an offer of 38 to 39, working through advisors of Bank of America. Now, somebody at Bank of America or Credit Agricole might have slipped and said something. Maybe. At any rate, price action is what I'm watching on US Steel while the markets just sit here at the low. Stochastic, once this thing comes unwound like it did back here in March, aligned with everything else that we've seen, capitulation selling on the NYMO volume oscillator, advanced decline percent at minus 30. Once all of these elements reverse in the opposite direction, we could see a pretty violent bounce. What I'm thinking is we retest the 50-day and then get rejected and then revisit into the end of September. Why? Because the statistics don't lie. We generally see a fade this time of year. The reason why we see this fade, there's a number of reasons, but one reason in particular is institutions meet with companies a couple of weeks before they announce earnings. Now, they don't get any inside information, but they get a flavor for, what are sales for NVIDIA, for example? What are sales, for Micron, and then they come back to their firm and they have that information. They might position accordingly. What I get really skeptical when I hear institutions upgrading a stock when it's trading at highs after a huge run going into the next quarter earnings. That said, I'm of the mindset that price action dictates what I do. In this case, we're breaking out of a descending channel back above the 50-day. Volume is starting to pick up. We're almost half of Friday's volume already. Look at MACD. MACD's about to cross. Stochastic's rising. So you have to go with price. Price is telling me to be bullish right now, with a caveat that's going to be gnawing at me until earnings are actually out and we see how markets digest. Imagine if this breaks out again like it did over here. Jeez.
Cashing in on chips ahead of earnings and a potential house of cards for Xi Jinping.
Allianz Chief Economic Advisor Mohamed El-Erian's on deck to weigh in on all of that, along with these strategic...
Oh, Mohamed El-Erian's up? I like Mohamed. He's really, really good. Mohamed El-Erian. Okay, the S&P is not doing anything, folks. So when institutions are trading few blocks and the markets are a flat VWAP, I don't do much of anything. I follow institutions. I follow what institutions are doing. Let's see what they have to say here. Oh, how clever. How clever, CNBC. Jerome Powell, Jensen Huang, and Xi Jinping, all J's. How clever. They stopped using Magnificent Seven. Got a lot of flack for that. I guess in business you got broadcasting business, you got to be clever. This morning they were telling us the markets have been down for 3 weeks. Okay, we know that. They can't give you any sort of actionable setups. When they do, it's vague. I guess legally speaking, they can't really say, okay, buy the S&P 500 because we're at support. All they can do is report on it. the most colorful way they can. That's why I like listening to Rick Santelli. Rick Santelli tells you about a lot about the bond market, yields in particular lately. Okay, here's Mohammed. Let me listen to him.
Good morning, Paul.
This guy's good.
Laid out some possibilities. Talk to me about what's likely.
So what's likely is that he's probably going to talk about short-term monetary policy issues. I don't think that's the best thing to do because it is a very delicate situation right now. The good news for Chair Powell is that this is a target-rich environment. Whether he chooses to focus on the immediate, whether he chooses to focus on the longer term, or whether he decides to punt, as others have done in the past, and look at a very narrow economic issue with no policy implication. He has a lot to talk about, Carl, and that just shows you how fluid the current situation is.
Right. Speaking of target rich, you probably don't envision any attempt to make adjustments to the inflation target, or do you? I'm just thinking in light of Nick's piece in the Journal over the weekend about R-Star.
Well, there's more and more people saying, look, if we were to decide on an inflation target today, it would not be 2%. It would be slightly above that. And I think there's a very strong argument for that. Having said that, it is very hard for a central bank to change its inflation target when it has been missing it so consistently. So yes, there's a theoretical argument for a higher inflation target, but don't look for Chair Powell to touch that issue in any significant way.
Interesting. Mohammed, I wanted to turn your attention to China. I know you were tweeting overnight that the news and just the overall sentiment in the region is a reminder that old-fashioned, I'm quoting you here, old-fashioned stimulus measures are not as obvious or as easy of a go-to for the government as they used to be. At this point in time, do you see any additional stimulus from the region as they try to at least improve GDP in the region to kind of what the market expectations are?
Look, Leslie, they have two issues. They have a growth problem and they have a debt problem. And because they have that second issue, don't look to them to do major stimulus. You know, the market was hoping for more, but they didn't deliver more. It's not because they're not worried about economic growth. They're very worried about economic growth. They're very worried about youth unemployment over 20%. The reality is that they cannot use the old-fashioned stimulus measures. What they need is a fundamental revamp of their growth model, and that's not coming anytime soon.
Are there any takeaways you think for other nations who have employed kind of infrastructure spending in the way that they have? Obviously, here in the U.S., we have been embarking on a lot of spending, a lot of fiscal spending, in certain pockets of the economy. Do you think there are lessons to be learned here, or just a different situation altogether?
No, there are lessons. This is an important time to redirect economic growth. Look what's happening around us. We have a green transition that we have to take seriously. We have fragmenting globalization.
U.S. steel is ticking higher.
Are changing, and certain countries like ours have tight labor markets. And when you look at that, you need a major emphasis on the supply side. And Carl was asking earlier about U.S. exceptionalism. U.S. exceptionalism is not just in economic performance, which is significantly better than most other countries, but also in the approach taken to future economic growth potential. There's been a major emphasis on revamping the energy equation to make it greener, to make investment in growth areas. And I think other countries are looking at that and they're jealous of us because they don't have the ability to do what we've been able to do.
Right. We had a discussion with Jim this morning about this piece on the tape today that basically argues that Xi is running the economy cold on purpose because he knows they need to break this addiction to the empty calories of, for example, real estate development that is run on debt. I wonder if you think that they're being that sophisticated about it.
I think they are, Jim. I think Jim is absolutely right. They've had a scare, a major scare, and they've recognized they can't just pump in liquidity because they've got pockets of leverage and excessive indebtedness that are turning systemic. That's the issue they've learned. This is no longer about isolated pockets of leverage. these pockets have turned systemic, and that's why they are being so cautious. And to the rest of us, that looks like they're not being decisive. In fact, they are being decisive because they don't want their debt problems to become bigger.
So finally, and we asked J.P. Morgan's economist about this last hour, can we take some solace in what some would argue is a silver lining in the export of deflation to the U.S., and now we have German PPI negative year on year?
Yes, look, Carl, our problem is not goods inflation. Goods inflation has been coming down. In fact, we've had disinflation in many goods, and what's happening with PPI suggests that we'll have that. Our issue is service inflation. And to a certain respect, that remains the key aspect. And that, I suspect, is what the Fed is going to look at. We need to get service inflation down because at some point, goods disinflation is going to stop. So it's really important to start seeing service inflation coming.
I want to assess some of the larger IPOs.
All right, so we're testing the low one more time. Just feels like we're going to snap down through this area and test the low, but sectors are still about 45% green, being led by semiconductors, biotechs, technology, software, consumer discretionary, small cap energy, biotechs, crude oil. Okay, looks like we're going to snap through this level.
Yeah, you always wonder when the window is opening, and we've heard from the banks lately that it might be about now. Interesting, Bassani was talking about ARM going to the NASDAQ, but the NYSE is still leading year to date in terms of dollars raised.
All right, FANG stocks aren't making much progress. FANG.
Has been more of a tech-focused exchange. The NYSE has been trying to change that over the years. And this year we haven't seen nearly as many tech IPOs. So what will quarter, obviously a very hotly contested, war between the two exchanges to get those listings extra important in a year like this.
Okay, we had a really
Very small. Yes, some things never change.
extreme level of selling last week on Thursday into Friday. We bounced Friday. So we're looking for a change in direction or a reversal. We haven't seen it yet. We got 1-to-1 up down volume. Tick cumulative is still dropping a bit. Market muscle is in a bearish trend. So that's telling you not to do anything, to just chill. All right, testing the low. All right, we just made a new low here during the regular session. Let's see what NYMO looks like. NYMO's at minus 82. It's trying to make a higher low. So this could be a little deceiving for now. Okay, let's see who is doing what. All right, so the stocks on the watch list look good this morning. Let's see who's doing the best. Palo Alto Network, obviously. Tesla below VWAP, now fading like it usually does. Runs up in the morning and fades in the evening. Regeneron, Applied Materials. Regeneron still doing well. It gapped above Friday's high. Regeneron, REGN, Romeo Echo Golf November. Regeneron. Applied Materials is above the 9, 21, 50, 200, and 100-day moving averages. RSI is above 50. Applied Materials might be something to look at. It's on the watch list, the extended watch list. It's lacking an A. It looks like it's just MAT, but it should be AMAT under relative strength. All right, so let's see who else on here is doing well. Li Auto bouncing off the 50-day. Li Auto's in a little descending channel over the last 9 or 10 trading days. Li Auto, XPing, XPEV also. While we're moving lower here, XPEV trying to bounce above the 21-day. RSI is rising.
Follows a similar ruling out of the EU. Broadcom now awaits a decision on the deal from China. Obviously, we've been talking about this.
DraftKings
I think we have.
with a bounce off the 50-day on the 100-day on Friday. DraftKings.
But speaking of China, more than a few reasons to be bearish over the last few days. You've got some of the street's biggest names.
International Seaways, a relatively inexpensive name. INSW.
Economic data coming in under consensus. And despite all of this, our next guest is urging caution on being too bearish. Joining us now, China-based book CEO Leland Miller. Leland, this is a pretty contrarian take relative to what we've heard across the street in recent weeks. What gives you confidence that the sentiment is too bearish at this point in time?
Well, the key word is relative, and I think relatively speaking, people are too bearish because all we're hearing about is collapse. Chinese government hardly is coming to collapses here. None of this is actually true. I mean, you have some very, very bad data that are coming out right now. I think that you have the pathetic recovery that happened. It was a recovery, but it was a pathetic one in the second quarter with retail and services. And then you have this property dynamic that's scaring everybody because the shadow banks look like they're under siege. So all this bad news, everyone's saying, it's going to pop, it's going to pop. But that's not the way Chinese financial system. The Chinese financial system works.
Yeah, I think you remember
Apple moving a bit lower now. Apple.
China had gotten used to effectively a moral hazard, just overall support from the Chinese government wherever there's a pocket.
VIX spiking.
And that's a key point that people are bringing up, that this time around there hasn't been that huge stimulus push to fix
10-year yield
and they're worried that
topping out around 4.34%.
What do you think ultimately transpires with regard to the Beijing response here?
Okay, we continue to move lower. I see targets of 43.50. All right, S&P 43.50 is the next level. $43.50.
I've seen some commentary about investors saying, we know what this would look like if it were taking place in the U.S. We know what would come from this and how to
Tupperware, Palantir.
we haven't seen such a deflation in many, many decades in that region. So what would you say to investors?
Farfetch, AMD, XPEV. All right, so XPEV looked very strong with a upward sloping VWAP early, then started taking profits. when the market started pulling back. Apple's off, Amazon, Intel, AT&T. Nice upward sloping VWAP. Cheap AT&T. You think AT&T is going out of business? Yeah, me neither. AT&T, let me go take a look at the daily. That one got slammed in April, trying to bounce. AT&T. Maybe some in the money leaps on AT&T. January. Let's see what they go for. AT&T. Do. Okay, let's go take a look at the market heat map. Okay, here's the market heat map. You can see that you should be more cautious. Got too much red on the screen. We got pockets of green in the technology sector. I'd be focused there. Semiconductors, software, internet, networking services, hardware, consumer staples, utilities, materials, energy, financials, industrials, red, cyclicals, mixed. Healthcare looks okay. Some of these names in the healthcare sector. We still have about 30%, 35% of sectors are green. That means the majority are red on the day right now. NASDAQ 100. Let's go see who is leading. Palo Alto Networks and Moderna, number 1 and number 2, respectively. Tesla's number 3. NVIDIA's number 4. CrowdStrike is number 5. Zscaler, number 6. Broadcom, number 7. Regeneron, number 8. NetEase, number 9. And Fortinet, number 10. All right, so we're about 55% red on the NASDAQ 100, about 45% green. Okay, we'd like to see that shift in the opposite direction. We'd like to have this turn more green. Okay, AT&T, just watching AT&T here. I might buy some leaps. Mikey, I assume you saw those 4,000s, right? Okay, so we got a nice group of stocks that are higher on the day. Okay. Here, I'm going to post the top 30 NASDAQ 100. Okay, another bear flag. Looks like we're going to test 4350. That seems to be the target. Futures. Futures. It's still 1-to-1 and very few blocks.
Data suggesting inflation is easing overseas. Part of today's market story is German producer prices fall at their fastest pace since 2009. 6% drop, driven by a sharp fall in wholesale energy prices, which leads us to our story abroad this morning. That is energy. That sector leading today's gains as OPEC suggests crude oil supply will tighten. Nat gas futures also rising over potential coordinated union strike in Australia. Crude oil regaining its footing after a rare down week last week. Prices had posted 7 straight up weeks prior to that. And Carl, if you look at kind of the month to date, what sector, the only sector in the green month to date, month of August, is it energy? It is energy. The only one. Quarter to date up about 8%. And it's looking good in the green. The positive year to date. It's definitely a laggard year to date, but at least the month of August had a decent rise.
NIMO. All right, so the dollar's starting to roll over. VIX is pushing higher. I'm really surprised we hadn't got to 20% yet. We kept expecting 20% over the last couple of weeks. Another bear flag.
Starting to see some four handles more often, that's for sure. Meantime, Dow's down almost 200 on this Monday. Let's get a news update with Silvana Hanau. Hi, Silvana.
Hey, Carl, good morning. I'm Silvana Hanau, and here's your CNBC News update at this hour. Ukrainian President Volodymyr Zelensky hailing what he calls a historic agreement to supply F-16s to combat Russian air superiority. This morning, he tweeted that Ukraine would get 42 F-116s from the Netherlands and 19 from Denmark, although the Dutch government has yet to confirm that number. Former President Trump confirmed he will skip Wednesday's Republican presidential primary debate, but that's not the only one. In a Truth Social post this morning, he said he wouldn't be doing the debate. His campaign has not clarified whether that means the two currently scheduled debates or every future one. And a new report from the World Travel and Tourism Council projects travel will be a $15 trillion industry in the next decade. That accounts for more than 11% of the global economy. By 2033, the industry is forecast to employ one of every 9 workers on Earth. As Leslie, back to you. Oh, that seems like a good thing. Everybody going and visiting each other, and or we have to get used to just those really long lines at the airport. Yeah, I feel like we already are at this point. Thank you, Silvana. Up next, UBS says investors don't fully appreciate the macro challenges facing U.S. consumers, and a retail reckoning is on the horizon. They're warning about the industry coming up.
Quick check on the markets here. As we said, Dow's lost about 200 this morning. S&P's given up some of its gains, down about 2 points back to 43.67. Don't go anywhere.
Yeah, not much to do. Looks like we're gonna continue lower here. S&P continuing lower. Okay. Friday lows over here. 43.50 below that. 43.50. We got back above 43.50 about 10:35 on Friday, right there. Coming back and testing it now, potentially. Get all the bears to bite, reverse it back towards VWAP. That'd be kind of cool. Unless you're short already. I haven't done much today. Just watching US Steel and the EVs, semiconductors, NVIDIA. I'd like to buy some NVIDIA. We've got about 55% of the NASDAQ 100 is red on the day, about 65%. We have about 45% green, being led by Palo Alto Networks, up 15, almost 16%. Moderna, 8%. Tesla, number 3, up 4.5%. Tesla's in a flat VWAP right now. NVIDIA, number 4, up 4%. NVIDIA. Okay, let's go see what's working again. Just seems like NIMO's a minus 86, so that turned back down. NIMO. AMD, trying to go on a buy signal here. AMD. Meta, nothing there. Okay, so do we get bears to cover here and bounce back up towards VWAP? Continue lower. FANG stock still showing weakness. Apple starting to turn. US Steel squeezing just below 32. US Steel. Supposedly ArcelorMittal interested still with a bid 38, 39. I haven't seen it on my news feed yet. All right, so Thinkorswim, U.S. Steel shares are trading higher following a report suggesting ArcelorMittal is weighing an offer between $38 and $39 per share for the company. They're looking at Credit Agricole and Bank of America to help them out with the deal. I don't see how the union would approve that. They've already supported Cleveland Cliff. So did we get in a bidding? Well, it'd be nice to see a bidding war. All right. So I see the other one that you guys noted earlier. Okay. It's kind of weird because now that Schwab has acquired and rolled in Ameritrade and Thinkorswim, their news feeds should be on I should be able to add a tab here to my news feed so that I have theirs as well. Anyway, so there's ArcelorMittal supposedly working on a deal with Bank of America and Credit Agricole. Okay, we're still at about 55% red on the NASDAQ 100, about 45% green. Top 10 have stayed top 10. Most of them are up over 2%. Palo Alto's up 15. Watching US Steel to do something here. Apple coming off the low. Trying to produce another higher low now. NVIDIA above VWAP. NVIDIA earnings on Wednesday after the close. That should be very interesting this week for all the FANG stuff, all the semis. I might take a straddle on the SMH. SOXL is already leveraged 3 times, so I'll probably take a straddle at the money straddle on SMH on Friday, or excuse me, on Wednesday, intraday. Look for a big move on NVIDIA. That would take semis with it. I'd like to do something on NVIDIA for earnings, but I'd have to do maybe like a iron condor or something, you know. But even then, I mean, one leg could absolutely get blown out. So that's the concern. It's not your average stock potential. Last time it broke out, it jumped, what, 150 points or whatever it was, 100 points. NVIDIA. Prior to earnings, NVIDIA was trading, drum roll, prior to earnings, it was trading right near 300. It popped up to, what's that, 380? So it jumped 75, 80 points. Yeah, NVIDIA looks good. I don't know. I'll probably do it on the semiconductors or the Qs. Yeah, probably the semiconductors. SMH makes more sense. That'll get more bang for your buck. The Qs have too many other things affecting it right now. Amazon continues to fade. I have no position on Amazon. Looking to get back into Amazon. Tesla, no position in Tesla. Looking to get back into Tesla. JP Morgan initiating QSR at overweight. All right, restaurants, QSR. Let me take a look at QSR. Okay, QSR, JP Morgan initiated coverage to overweight. right at the 200 period moving average. That could be an interesting play. QSR, did they report? QSR. Yeah, their earnings, that was a couple of weeks ago, August 8th. They beat by 6 cents. QSR, I don't know if Warren still has a position in QSR, but Restaurant Brands, I believe he might still have a position, Warren, but JP Morgan initiated overweight at the 200-day. All right, so what I will do is I'll watch this tomorrow. I might buy some, maybe some in the money leaps. Lately, I've been using options in the money leaps, reducing my risk exposure, defining exactly how much I could potentially lose versus having shares during this 3-week downtrend. SPY. Okay, more downside. Okay, so we didn't get back to the 50-day. We had pulled back 6% at the low on Friday. Okay. Let me lighten this up a little bit so it's not so distracting. No, thank you. By the way, the JP Morgan collar, 4210 puts coming into view. Can I help you, miss? Okay, let me go back to this. Those 4210 puts, those have shifted a little bit. I got to move those down. 4210. It's a bit lower here. Okay.
welcome back. Workers at companies like UPS, GM, and Verizon are pushing for higher wages. The question for investors now, how will those costs impact earnings?
All right, let me just do a quick calc here.
For the $30 billion in new money, the Teamsters say they gained their new UPS contract that the union will vote on tomorrow. Just one of the labor deals that have investors concerned about wage inflation. That includes UAW and auto workers, pilots at a number of companies, including FedEx, telecom workers at Frontier. And the Teamsters say they plan to unionize Amazon workers.
Okay, 4210. Those JP Morgan puts, 4210 would be a 9.5% pullback.
We've seen more of the margin deterioration has really been on a lot of the supply chain issues than it has necessarily been on pure wages. The wage growth has actually been a net tailwind, I think, for earnings.
According to research from the San Francisco Fed, wages and benefits have increased right around 3% since the start of the pandemic, if used the Department's Employment Cost Index. However, the estimates show that has only created a roughly 0.1% of core PCE during that time.
Interesting. I wonder if something like that is strange through ESG. You know, they kind of look at the social issues as well. Frank, thank you so much. Let's dig into the news level we've seen across the major indices this month. Our next guest called today, quote, healthy reset of expectations, moving closer to a sector-neutral approach with an eye on a potential slowdown later this year. Joining us now, Truist co-CIO Keith Warner. Keith, you're still in the slowdown camp for later this year.
You know, great to be with you. I mean, the economy has been extremely resilient, but there's this, you know, this tension between this fiscal dominance and monetary policy that's still, you know, tight and likely going to move tighter. So we still think things, you know, slow down, but you know, near term, as we all know, if you look at some of the Atlanta GDP, we're looking at a really strong quarter, but we do think those rates will weigh on the economy later this year. We'll also continue to see some tightening in the lending standards as well.
So you see some
Low ticker -800.
More broadly for the market, you know, we came into August thinking the market on a short-term basis was somewhat stretched and vulnerable to some type of correction in time, meaning moving sideways, or price, meaning pulling back. And we're seeing a little bit of both. I think what the challenge for the market right now is there's just a lack of catalyst. You know, we just got through the earnings season, and the earnings season was really good. The average margin of the beat was about 7%. But here's what the most interesting thing is you know, stocks that had positive earnings actually declined. And that's an unusual circumstance. And it's really, you know, basically, we have a lot of good news, a lack of catalyst, and we're just digesting these big gains from the first half. Just one last point is, the good news is we are seeing that reset. We're seeing the amount of stocks.
All right, stocks. Looking for Apple to bounce here. Not much going on. It doesn't feel like institutions are doing much of anything. We haven't added much. We added another IWM block. 1, 2, 3. 1, 2. We got 4 blocks on IWM. That's ridiculously low. That's telling you institutions aren't that active. 4 on the IWM. 8 on the Qs. And 6 on SPY. Normally, by this time of day, going into lunch, we would see at least 4 or 5 times as much, given what we were seeing last week. Last week, we had a lot of block volume. Today, we have nothing, hardly. The largest block is 475,000 shares. That was on IWM. Right at 183.99. That was a bid at 183.99. IWM, let's just take a look.
Low ticker -800.
All right, so that was at the bid, 183.99. That looks like a short from this area right in here. So being IWM is a risky asset class, small caps, you'd want to see this bouncing along with junk bonds. Junk bonds are hanging tough off the best levels of the session 3 weeks, best levels of the summer, if you will. July was the highs, and we pulled back. For the most part, just holding up fairly well. So mixed signals on junk, a little bit lower would be more bearish. Markets are just sitting here doing not much of anything. NASDAQ 100 still 55% red, 45% green. US Steel keeps trying to tick higher, just below 32 right now. And the SPY is just drifting. It's set adrift, a dead calm. Dead calm. S&P, Cisco. Cisco with a doji on the day. Tesla, flat VWAP. This just looks like everybody walked away. We traded the first hour of the trading session and just walked away. That's what it looks like to me right now. Rivian had a bid earlier along with Tesla, EVs. US Steel looked like some shorts covering. What's Cleveland Cliff doing? Cleveland Cliff. CLF. ArcelorMittal, MT. That's lower. ArcelorMittal continues to move lower. Over the last couple of weeks. Since the July highs, ArcelorMittal is moving back down to what could be a double bottom on ArcelorMittal, MT. Michael Tango. And we're just drifting lower on the S&P. S&P is just drifting. 43.50 seems like a good target downside. Here's the deal. Here's what I'm thinking. Okay, so just so you know what I'm thinking. What's he thinking? Okay, so we've got the 100 period moving average right below. The 200 period is down here below that short, or rather long puts that JP Morgan has. They have the 42.10 put. They're short the 46.65, so they're making money on that too. As we pull back, RSI is near 30. So here's what I'm thinking. Okay, so we've had capitulation selling, and I've mentioned this several times now. What I'm looking for is for this indicator to start turning up along with NIMO and advanced decline percent. If I can get those three to turn, we could see a nice bounce. Not much to do otherwise. Yeah, TLT, I could see that. How much higher do you think the yields can go? That's the question. That's not a rhetorical question, but how much higher do you think yields are going to go before bonds start to reverse? All right, so this is the 10-year yield. This is the 20-year bond. So not apples and apples. This continues to move lower. Okay, if this gets down, if the 10-year continues to move higher, the 20-year yield, both of those start moving higher, continue to move higher, then maybe you get a better price on TLT, Scott. Let's look at this here. Let's take a look at yields. Okay, all yields are moving higher. The 2s, the 10s, 7s, 20-year TLT yields, and the 30-year all moving higher. Let's look at the yield, the inversion, yield inversion. Okay, that's started to reverse. So whereas it was bearish all of 2022, inversion is starting to reverse. Okay. So the last time it reversed from these lows over here in late 2019 into 2020. The fact that it's been inverted for so long during the bear market, if this starts to move higher, I would think it would be the opposite. It should be bullish. Let's look at the 30 B. Vanguard Index Trust 500 versus the Treasury Fund. That's continuing higher. That's longer term and intermediate term bullish for equities. Okay, we continue to move lower, S&P. Okay, the 10-year versus the 2-year yields. This is reversing. That should be bullish eventually. $30-year bond. All right, we're just grinding lower. Marvell, we got buyers of the 66 call into earnings, nearly 5,000 of those into earnings, Marvell. Looks bullish. Yeah, it looks bullish. Looks bullish too. All right, NVIDIA, lots of open interest. NVIDIA, let me go take a look at the options for the week. NVIDIA, wow. Wow, wow, wow. There's a lot of open interest for this expiration. A lot of premium, about 30% premium on historical volatility. NVIDIA, historical volatility. NVIDIA historical volatility is usually about 40%. It's right around 44% right now. So you're paying a 30% premium on the options because the dealers want you to pay up for them to sell you those calls or puts. about a 30% premium. Okay, so this is going to be a week. I've said it before. I'm more than likely going to take the day of NVIDIA earnings. I'm probably going to take a straddle, at the money straddle, towards the close on Wednesday. So wherever SMH is trading at the time, going into earnings, I'm going to more than likely take a straddle to play the NVIDIA move. I don't feel like paying up $25 for an at the money straddle. Call side is $25. The put side's probably about the same. So it's about the $5,000 per straddle. Okay, so SMH, a little bit more reasonable. Okay, so depending on where we are, probably around the 145. SMH, let me look at SMH. That's a couple of days away. Wednesday, after the close earnings. All right, they have 148s, close to 148, 147.50s. All right, so the 50-cent increments on SMH. Let me see what Friday. They're going to be about $600 per straddle. $3 for the call, $3 for the put, something like that. All right, with the indices continuing this grind lower, I'm not doing much of anything right now. You know what the volume oscillator looks like? Advanced decline percent and NIMO, all of those are at extremes. So I'm more bullish than bearish, even though we're drifting a bit lower right now. The dollar's starting to roll over. The 10-year is starting to lose it right here. We're about 12 basis points off the high right now. The 10-year. VIX looks like it's going to start backing off. And the dollar looks like it wants to back off. All right, I'm going to take a couple of minute break, go outside, get a breath of fresh air. I'll be right back.
Okay, so it does. I think what it impacts most is the competition for equities. That's really the biggest
biggest challenge about yield spiking. Now, let's understand, it's the 2-year going back to 5%. It's the 10-year returning to levels that we haven't witnessed since 2007. It's the 30-year going back to 2009 levels. And it's inflation-protected securities above 2% for the first time since 2009. And it's just, okay, the risk-free rate versus the rate of return on equities, do I want to assume the risk or not? And that's the conversation right now. I don't think it's in any regard about where we were in 07 and 08 regarding residential real estate. Let's remember something, that there was a very well telegraphed message from the Federal Reserve about the impending rise in rates. So corporations got well ahead of what their debt maturity needs might be and extended those maturities. Fortunately, corporations, S&P 500 companies, are talking about over 70% of debt maturing 5 years from today. Consumers, home buyers, okay, they're maintaining their, sub 4% 30-year mortgage. They're not going to forfeit that. They're not going to trade that out for an 8% mortgage. So I don't think it's the pressure that's being exerted on consumers and corporations in the debt markets. I just think it's the competition for equities. It's an uncomfortable place for us to be in, and it really falls on Chairman Powell on this Friday to ensure that he strikes a balance. Because if Chairman Powell doesn't strike a balance, if he has the type of tone where he did last year in that 8-minute remark that sent the S&P down 3% over the next week, it's going to be the bond market that's going to go parabolic, and that's going to be a problem for the capital markets.
So Jim, this is very much about the competitive dynamic for your money. And the number of conversations I've had with sophisticated individual investors, let alone corporate executives that deal in treasurers' offices or CFO type roles, have talked a lot about this idea that with yields, the way that they're trading right now, in that kind of 4 to 5% range for anything from savings accounts to money market funds, really makes it attractive to just hold your money there and not deal with any risk whatsoever because it's all guaranteed by the full faith and credit of the U.S. taxpayer.
Yeah, certainly that makes a lot of sense. By the way, I agree with what Joe said about this being competition for equities and what Chairman Powell needs to do at the end of the week. But Dom, I just want to push back a little bit, not to what Joe said, and you're not insinuating this, but the dynamic of how attractive these yields are will change when equities get a rally. I mean, that's what you saw until you got to August, right? Is that equities were rallying, and then all of a sudden people started flooding in. I think we've got to put August in its place. This is seasonality that's happening here. When you get a pullback like this, there's always a reason. There's always a reason. It's rates, it's China, and there's always a legitimate reason. But what we have to understand underneath this is we've got a darn strong economy. We've got a really strong economy. Now, I'm not saying I believe the 5.8% figure from the Atlanta Fed GDP now. It's probably lower than that, but that's a pretty big number on the face of it. And you got jobless claims in the low 200,000. You got retail sales picking up. We have got a strong economy. So in addition to the analysis that Joe just did, I want to say there's a basic reason why the 10-year is going up in yield. It's because of economic strength. And this yield curve, which has been inverted and vexing people for so long, is uninverting by the long end of the curve coming up. Now, what's interesting and what I think we should all be looking for is what happens on the short end of the curve, what happens at the 2-year. This is going to depend critically not only on what Chairman Powell says on Friday, but what happens with inflation. I'm looking at one figure from our friend Ed Yardeni, put it out last night, that said, excluding shelter, CPI headline is at 2.0%.
But shelter is so important. We all need food.
But it lags. Right? It lags like crazy. Inflation is likely to come down, which is likely to take the 2-year down as the Fed can take its foot off the brake a little bit here. I'm not calling for an imminent rate cut, but the 2-year can come down as the 10-year comes up, and it doesn't have to be catastrophic. The one canary we got to look out for, though, is the regional bank index. What you got to look for, it happened in March. Interest rates are now higher. You got to keep an eye there.
There's still relative weakness there. Bryn, I want to bring you into the conversation right now. Jim laid out a couple of interesting points with regard to why we're seeing yields pick up the way that they are. One of them could be that the strong economy is in play and that, there is a growth factor behind the reason why we're seeing interest rates tick higher. Another one that some would argue is maybe a more substantive driver of lower bond prices and higher yields is an inflationary threat that is picking up again. It may not show it maybe in the last day or two, but we've been seeing a steady uptrend in crude oil prices. It's translating into pain at the pump for a lot of folks. I drive every day to and from work. I know how much more I'm paying per fill up to fill up a tank of gasoline. It's about maybe $8-9 more than it was at any point over the last 6 months. Why is the inflation story not getting as much attention right now than it should?
Well, we know that they take out food and energy, so we can't do that with our budgets, but Fed takes out food and energy, so I think you have to really separate those from what Powell would do, what the Federal Reserve would do. But I do want to go back to what Jim was saying, because it's so important, because this is like bond 101, and bonds have been really disagreeing with stocks all year and last year with this massive inverted yield curve. And so to Jim's point, but it's worth reiterating, what you're having, part of it is just the bond market recognizing that, hey, the stock market was right. We actually have economic growth picking up. If the Atlanta Fed is even remotely close to their expectation, well, the bond market actually has a lot of uninverting or steepening to do. And so I think that 100%, if the 10-year, which is breaking out, and trillions of dollars of assets are priced off of the 10-year, if the 10-year continues to break out, number one, the Fed is absolutely watching this. That's incredibly restrictive. That's naturally happening. The Fed is also doing quantitative tightening, but you're going to have a headwind to equities in general with that 10-year, well over that 420 was the October 2022. We're now well above that. And so I think we're going to be pressured here until we get some reconciliation of what's going to happen. But if you just think about a stock that's breaking out, typically it goes higher. And that's where I think the concern in the market is. And the last hour, we end up fading because the yields are high and no one wants to stay in this market at this point because of the concern of what could happen. Because don't forget, SVB was not the only thing that didn't know how to properly manage their balance sheet. So this is the level I think people start to get fearful that things start breaking again.
All right, so Steve, brings up an interesting point there with regard to this kind of idea that as yields go higher, it takes some of the attractiveness away from stock valuations. But, I can't help but notice, and I'm sure viewers are right now, the interesting juxtaposition in that kind of lower right-hand part of the screen, where you see yields touching their highest point on the 10-year side of things since 2007. At the same time, the NASDAQ composite is outperforming the so-called value parts of the market. I thought it was the conventional wisdom that the technology stocks, the more tech-heavier indices like the NASDAQ, are the ones that suffer the most if yields go higher and valuations come under pressure. Steve, what's the difference there? Why the disconnect?
Well, that's not what's happening today. Look, maybe the market is selling off. It's not a major correction. It's as simple as the bulls have made so much damn money, and bears haven't. So the bulls said, "Hey, I'm taking all this off, and the bears still got to work to pay their rent." Of course, I'm being facetious, but look, clearly the fact that you have an alternative can take something out of the market. But I think that's really
Okay, nice outside. Should step away from your trading desk every so often. Clear your mind, get a little breath of fresh air. Markets are still sitting here near the lows of the session.
Despite where rates are, has increased by 45%. So maybe it's not as simple as if you've got an alternative. And by the way, two-year treasuries were over 5% not that long ago. Here they're not at 5%. Nonetheless, if you even chart just today's action in the market, what you would see is that the market started off on a very high note, and then as yields moved up, the market came down. So there's sensitivity to that, but I don't think it's because people all of a sudden said this morning at 10 a.m., I'm going to take some out of equity. What you're saying is, I'm a little worried that it's taking a little longer for the massive tightening cycle to filter through into the market. They're paying attention and saying that household savings have now been
Semis continue to come off the low.
spent all that excess cash, that credit card levels are at the highest they've been in a long time, and delinquencies are starting to tick up. So you need to pay attention to the headlines and pay attention to what's going on. So let's turn to Powell. So Powell is very critical. I don't expect him to be dovish. I don't expect him to be more hawkish days. He's going to continue along the same timeline, which is that, hey, basically the machine is heavy, but inflation is still stubbornly high, wages are going to be high. That's what the market is focused on, not just the seasonality. All right, so Joe, you were kind of moving your lips, nodding, moving your head a little bit.
S&P back on a buy signal. S&P on a buy signal.
Whether it's vacation or sending kids off to college, whatever they might be doing, and there's less liquidity in the marketplace, and we're awaiting Jackson Hole on Fridays. You're waiting Jackson Hole on Friday, so I don't put too much into what's going on in the moment right now. I just think the big question is, you're getting a pullback in the market. What do you think about that pullback? Do you think that pullback, which you asked me 2 weeks ago, is the inflection point? Or do you think the pullback at some point is a buying opportunity for those that have missed out on the 2023 rally? And I'm still of the belief that at some point very soon you're going to look upon equities and realize you have a nice buying opportunity in front of you.
Okay, so because speaking of buying opportunities, and because the door is open, just Weiss mentioned.
I bought some SMH calls, the 148 strike at the money. 148 at the money. I was thinking about that straddle while I was outside. I was thinking about the straddle on the way when I was outside. And if we continue to see a bullish trend in SMH, I'll just ride this trend higher into NVIDIA earnings. I'll make a decision on what to do intraday near the close on Wednesday. For now, though, SMH coming off the lows Friday into today. It looks like a bullish trend. Here's SMH. Here's SMH. Semiconductors looking pretty strong. Back above VWAP. So more than likely, we're going to get back to the top of this range. Or a flat VWAP. Looking for a move back up here. It's just a day trade for now. The dollar, the VIX, the 10-year all rolling over.
Resiliency that's represented in those earnings. I said to myself, I want to go back and maintain the exposure to cybersecurity. I am going to utilize the funds that I raised from CrowdStrike. I'm going to take a position in Palo Alto and back into CrowdStrike. So I own Palo Alto, I own CrowdStrike, and through the Joe T ETF, I own Fortinet. I own them all. I also have Cisco in the Joe T ETF. The only one we really don't have is Checkpoint Software, but I'm going to maintain my exposure here to cybersecurity, CrowdStrike, and Palo Alto. Those are main things in the portfolio. I'm not going to trade around them anymore. I'm going to stay more consistent with it because I kind of screwed that up a little bit.
Okay, so Steve, I want to get onto you here. Palo Alto is a name that you also held in the past. The cybersecurity thematic trade.
Okay, so the dollar, the 10-year, the VIX are all rolling over. That's bullish for equities. We're seeing a bid come into the market.
I was actually hoping Palo Alto would miss, and that the hysteria and the woe is me from the sell side analysts, they actually had to work on a Friday afternoon during the summer when the company reported, would lead to a miss. But nothing's that obvious. So I'll be patient, Palo Alto. I love the company.
Bug. Global X cybersecurity. That's a good symbol to watch. Let me put that in my security. BUG. That's pretty cool. I haven't seen that one before. Cybersecurity. Bug. All right. Let me save that. Software.
So I do want to do the Joe T because I own Joe T, but yeah, I'm tempted. I'm just not buying the stock at 10%.
IT security. There we go. IT security. All right.
All right, that's fair, Bryn. The idea that somebody could want to buy something with momentum is not unheard of. But I wonder if you're looking at these types of companies, whether or not you feel as though there's one that sticks out versus the others, or if there's a way that you do it without having to pick them either through mutual funds or with ETFs.
Yeah, I mean, I'm a big fan of certain ETFs, and so I own Bug, which is a Global X, concentrated pure cybersecurity. So I wouldn't own like a Cisco, which just has, part of their revenue from there. And actually, the number one holding, which hasn't been mentioned, is Zscaler, and which is the biggest. And so the top three holdings are Zscaler, CrowdStrike, and Palo. And so those are chunky positions around 8 to 7% each. And so I think, Joe's spot on as well. This is a secular story, a long-term story, but you have to understand it'll have to manage through the cycle. I did think it was interesting, and not that it really affects Palo, but just thinking through what Steve said about how more of their customers are going on credit, which to me just is interesting.
All right, they're talking cybersecurity right now.
But this is the way I play it. I think it's a smart way to have a concentrated portfolio where I'm not going to get shaken out, because ultimately all of these companies won't be the winners. And so I just want to have the exposure, and it's market cap weighted. And so the bigger they get, they'll naturally become a higher percent in the portfolio.
Palo Alto popping up. The rest of these, Okta is right near the 21-day and 50-day. Qualsys is above.
Network specifically, you don't want to miss a CNBC exclusive interview with Palo Alto CEO Nikesh Arora happening tonight with Jim Cramer, Mad Money, 6 p.m. Eastern Time, about the state of cyber, stock valuations, technology overall, and just about anything else Jim is going to think up there. So Mad Money tonight, 6 p.m. Eastern Time, Palo Alto CEO Nikesh Arora. Now, turning now to the other big event this week, we've got NVIDIA, which is set to report its second quarter results on Wednesday. The shares are up at this point more than 200%, which is just an easy way of saying it's tripled.
All right, SMH looking good here. SMH, semiconductors.
Deliver on those results. Jim, you tell us that you are looking to buy into this name. This is one that's been off to the races.
Semiconductors. Looks like an ABCD pattern. Flat VWAP for now, though.
Joe looking at me with these raised eyebrows. He's wondering what I'm going to say. I'm curious. No, well, look, I'm a cautionary tale, right? Of what happened.
All right, so we're above the 20 EMA on the 60-minute.
I haven't owned it. I owned it 2 years ago. But now this is what you do. I'm certainly not the only person out there who doesn't own this stock.
All right, we try to get above the 20 EMA.
I'm probably going to take a 1% position sometime in the next couple of days.
Looking for a higher low and a higher high. If we get above the 20 EMA, that could start a counter trend rally back towards the 20 EMA and the 50-day overhead. So that's something I'm watching as well. S&P 500. Okay, S&P 500 building a higher low. A higher high would put us back above the 20 EMA, that green line. We've been in a bearish trend since the end of July. Dropped below the 20 EMA. So the reverse is the case. Once we get above the 20 MA and that starts to turn, like over here in the left side of the chart, back in late June when we jumped, when we were below, and then we jumped back above the 20 MA. We went on to, you know, what, 5 or 6 weeks upside. So this is what we're looking at right now. So we need to see this turn back up. Semiconductors starting to go. All right, these calls are making money. Semiconductor calls are making money. SMH, I bought some SMH.
He does point out that NVIDIA will be a big test this week, and the price action may be more important than the actual.
I just bought 5 for now. I'm looking to buy maybe 10 or 15 more if this continues. We'll see if it continues tomorrow, but this looks pretty good. Semiconductors. Starting out the week knowing that NVIDIA got an upgrade. All right, let's take a look at NVIDIA here. NVIDIA.
It seems as though Jim calls this something of a position that you have to be in, but that you don't have to be career long or short a position.
NVIDIA, Powell, Goldman to shed another consumer business, Apple, Spotify.
Well, I think we've been pretty clear over the last several weeks that if the market is looking for any form of
Analysts raised their price targets on the stock ahead of the company's Wednesday report. HSBC, Frank Lee, maintained NVIDIA with a buy and raised price targets from 600 to 780. You know what? If these guys aren't right, they're going to have egg on their face like big time. So I don't know. He's starting to think more and more that this is going to beat. Yeah, me too. KeyBank analyst John Ben maintained NVIDIA with an overweight and raised the price target from 550 to 620. What did they all go to the same bar and like say, okay, let's upgrade on Monday? That's what it looks like. Dan Ives, who I respect, is a very good guy. Another clear sign from NVIDIA with robust guidance that enterprise demand is skyrocketing for AI buildouts and will be key data points that further validate our tech bull thesis playing out into 2024. So Dan Ives is bullish. Sounds pretty bullish on NVIDIA. Okay, so that's good. That looks pretty good, don't you think? I think so too. Yeah, that's good. NVIDIA.
just because this company has done so remarkably well so far in 2023 that you dismiss that secular theme that's currently attached to NVIDIA. And then the last point on it, where's the competition for NVIDIA?
Well, some would say AMD. I mean, it's distant, but AMD could be up there. Some would also point out to ARM Holdings as a possible beneficiary from a chip design standpoint. And we've got
Why is this so zoomed in? Oh, there we go. I didn't know you could do that. Oh, you can. Oh, shit. All this time, I didn't realize you could zoom in on the price target on a trading view. You know, yeah. Okay, this is good. Good. All right, semiconductors on the way higher. Oh, damn. See that? Learn something new every day. I've been using stock charts for about 30 years. Thinkorswim for about 10, 15. I just started using TradingView because I like this indicator. Super trend with the buy and sell signal, super trend. Just adds to what I already look at. All right, so here's a clean chart, adding super trend signals. Okay. And a nice buy signal on the Van Wyck. John Van Wyck. John Wick. All right, so nice looking chart, looking for a higher high now. NVIDIA. All right, NVIDIA making new highs. Okay, a lot of people buying puts, having to reverse the trade. The dollar continues to drop off.
play the big banks coming up next. Halftime is back after this.
Getting your flu shot. CVS is pretty flex. Want to schedule one online while prepping dinner? Gravy. Avoid the wait by scheduling for you or the whole crew. Or if you prefer to just pop in, do you? And if you want to even tap out a COVID-19 vaccine to your flu shot, feel free. And speaking of free, our flu shots are, well, free. Really? Yes, really. Healthier is getting a flu shot on your schedule. CVS, healthier happens together.
With Verizon Business Unlimited, I get 5G, truly unlimited data, and unlimited hotspot data. So no matter what, I'm running this kitchen.
Make the switch. It's your business. It's your Verizon. Private market alternatives help you outperform the traditional portfolio by up to 40%.
All right, NVIDIA higher. Looks good. S&P.
Our family is a legacy of civil rights activists. I'm ambitious for the nation. I'm ambitious for my people to make things better for all. To lead a movement like the National Urban League, you have to love the people you serve and work on behalf of. There has to be a purpose in your work. And that purpose has to go beyond you. It has to go to something bigger, broader.
All right, semiconductors continue higher. Semis, SMH, ripping and roaring. SMH looking good.
Any idea that they can sell their life insurance policy for cash? So they're basically sitting on a gold mine? I don't think they have a clue. It's crazy. Everyone knows Coventry sells thousands of people sell their policies for cash, even term policies. I can't believe they're just sitting up there, sitting on all this cash.
If you own a life insurance policy of $100,000,
Yeah, old people, sell your policies, old people.
for cash, combination of cash and coverage, no future premiums.
Stories to tell them. They're sitting on a gold mine. You have no idea. Hey guys, you're sitting on a gold mine.
Can you hear that?
I don't hear anything anymore.
Find out if you're sitting on a gold mine.
All right, semis continue to rally. All right, so these calls are up. These calls are up now, moving higher. All right, we've gone from 45% green on the NASDAQ 100 a few minutes ago, or this morning. We were 45% green. Now we're about 55% green and building. NASDAQ 100 adding sectors, 50-50 on the sectors. They were about 70-30 before. Only about 30% were green into the noon hour. And then all of a sudden we got a nice bid. The market started to shift higher. Apple back above VWAP.
They're getting out. Look, very few of these companies, I'm not sure of any that make money in online, fintech, etc. So I'm glad they're getting out, and then we'll move forward. So it should actually be accretive to earnings. It's already known that the businesses just aren't profitable, that they're not making people internally happy. I think the bigger issue is, what is David Solomon's future? I just don't.
All right, one other thing to reflect on in the trading room. One other thing to reflect on. Let's go take a look at the watch list. I want to show you something. Pointed this out in the weekend video. Okay, look at your stock. Look at your stock, whatever you're trading. Most stocks were extremely oversold last week, and you got this double dip in stochastic. Watch stochastic. MACD is starting to turn. You see that shorter histogram bar? They're starting to ever so slightly turn back up. We had an extreme reading on capitulation volume. Okay, we got down to the green zone. Whenever these drop off like this, like they did in March, like they did in October, that's extreme selling. The reason it's green is because we're looking for a bounce. Okay, previous extreme levels. You can see bounce here in October, November. Again in March. A little smaller one here back in May. But this one, we got all the way back down to minus 70%. So if this turns up, this week could be pretty interesting. If NVIDIA comes anywhere near close to those targets that they're talking about, wow, that would be a nice rally to sell into. I have some SMH, bought some SMH, looking for that to follow through into Wednesday and maybe even hold some into Thursday. If NVIDIA earnings are good, I'll probably sell some into strength. Still thinking about a straddle, at the money straddle on Wednesday. Right now, I'm just trading some SMH, trading the strength in some of these semiconductors like Micron and Marvell. Bouncing, Marvell, Broadcom, AVGO. What is Qualcomm doing? Qualcomm. Okay, so some of these are bouncing, some aren't. TSM, Taiwan Semi, ON Semiconductor. Okay, so you see what's going on here. Semiconductors look pretty good. Okay, pushing away from VWAP, looking for a VWAP to turn up and to the right. We got weakness early in the morning out of the way. So the consensus is the early sessions are amateur traders. You do have an abundance of people who trade the first hour or two. I like to trade the first hour or two. Get some fast profits, day trades, and then look for a follow through. Reassess the markets after 10 o'clock, 11 o'clock going into noon. Right now, it looks like institutions bought the dip like they did on Friday. We're well off of the morning session highs. Okay, so the high pre-market, what is that, 8 o'clock? Right around 8 o'clock, we hit, what is that, 4407? 4407, futures, 4407. So we got another 20 points we could see here.
It's 5-year chart. It's 2x. Okay, it's 2x. I mean, this is back step. January of 2019. Where was Goldman Sachs? It was 1.7. I told you a 5-year chart. I don't know what happened in the first 3 months of that.
Let's see if we can show a 5-year chart of Goldman versus Morgan Stanley.
So, is it that Morgan Stanley is the biggest issue, or is there, just going to call it what it is, there seems to be this personality issue related to David Solomon, and there are individuals there.
Morgan Stanley pulling back. JP Morgan sitting on the 50-day. You got the big money center banks pulling back. So we need financials to follow through. Most of you know that. Semis. Just the high of the day. Maybe take some off. Can we get more out of this? Looks like we were reversing the trend. SMH. Okay, here's SMH, semiconductors on the daily. Okay, we came down to the 100 period. The 200's right down here at 128, 127. NVIDIA earnings on Wednesday after the close. Be nice if we saw this follow through. And NVIDIA, let's see, NVIDIA. Similar look to it. NVIDIA looks very similar. Pulled back for several weeks. Now we're back above the 20. 921.50 day. Everything is up and to the right. You got all those upgrades. Imagine if those upgrades are right and this thing gaps up again. Look at the volume last week. Last week, Monday, Tuesday, NVIDIA had a lot of volume. We're more than half of Friday's volume already, NVIDIA. And we've got another 4 hours, 3.5 hours to go.
Latino-centric superhero movie has struggled with a reduced marketing campaign impacted by those ongoing Hollywood strikes. Don, I'll send it back to you.
All right, Seema Modi, thank you very much for the headlines there. Next up, artificial intelligence investing beyond NVIDIA. Off the Sonic details, that's straight ahead in the ETF Edge show today. Halftime is back after this break.
Okay, XPEV, a little dip. Looks like they're bidding on XPEV again. Xpeng Inc., Chinese car maker, EV car maker, trying to get back above 17. US Steel fading from the high of the day. I'm going to keep some calls on US Steel. So I presently have US Steel 35 calls, right around where I'm average right around 15 cents. US Steel, if we don't hear some news and get a pop this week, I'll probably buy some more, maybe monthlies, looking for this deal to go through. I don't want to buy shares. I don't want to put that much money to work. These calls are pretty cheap that expire on Friday. So watching that. All right, looking for a higher low to print here on the S&P. S&P looks like it wants to print a higher low. VWAP is right overhead. So if you're trading intraday, you want to see price action get back above VWAP in this 43.75 support zone that is now resistance. RSI, RSI, stochastic RSI is turning or trying to turn. So I'm looking for a higher low. S&P. A lot of stocks are green that were red earlier. Tupperware up 22%. AAOI, Applied Optical Electronics, it's off the highs of the session, right at VWAP, but it's up 16.5%. Cisco following through here. What's Cisco doing? Cisco was a kid and a friend of mine. All right, we're right at VWAP now. Cisco.
Was the big stock story in the first 7 months of the year, but that narrative has started to sputter as higher rates and perhaps too much hype have dented AI. A bigger problem is a small number of choices for AI investors.
Cisco kid was a friend of mine. Wah, 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 wah. Do, 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 do. Wah, 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 wah.
Sunk in August. What's the problem? We have valuations, interest rates, China. I think all of those points are valid, but I think you have to look at the broader story. The CapEx cycle has been super strong. Year over year, 9% for S&P 500 companies. Companies are looking to improve efficiencies. And in bots, artificial intelligence, and robotics ETF, you have a broad cross-section of companies, whether it's healthcare companies or companies, and they're helping improve efficiency. So I think this theme can play out for quite some time. Buy NVIDIA was the answer to every AI question in the first half of the year. But who are the broader beneficiaries? What's in this box that you think is going to be the real beneficiaries of AI?
Well, if you drill down and look inside the ETF, Intuitive Surgical, that plays on robotic technology, certainly. Fano, Keyence Corp. These are companies that will help improve efficiencies of other corporations.
Industrial automation,
Yeah.
robotics, and they're going to be a beneficiary of this, obviously. Dynatrace, for example, is software intelligence, right?
Yeah, all of these companies can help improve the overall efficiencies of other companies. And if you look at the CapEx cycle, it's super strong. So companies.
All right, Cisco's coming out of a 60-minute squeeze. Cisco.
For private companies that are going to benefit from AI, coming up on ETF Edge at 1:10 p.m. Eastern Time. I'll be joined by Todd Sohn. He's the ETF and technical strategist at Strategic Securities. ETFedge.cnbc.com. Halftime. Back right after this.
All right. Well, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 21st of August, 42 minutes into the lunch hour here on the East Coast, the best coast. Hope you're having a good day. Enjoy being here with you, giving you the play-by-play, watching stocks, what we do. Look for trades, look for setups, watch for market sentiment to change. Looking for a nice trend. We got one starting at around 12:30 as the dollar, the 10-year, and the VIX continue to move lower, giving us a nice signal. Okay, still looking for that elusive yellow bar on the daily Squeeze Pro histogram. Looking for that elusive yellow bar. We've got 1, 2, 3, 4, 5, 6, 7, 8 red bars. Last time we had 8 red bars was in December. Again in March. Once we see NIMO turn and we get this sustained bounce, right now we have a little doji on the bounce. Once we see that sustained bounce with capitulation selling, reaching a climax, we start to look for the reversal, okay? We start to look for the absolute reverse of what we had last week. And it's pretty clear to see on this particular volume oscillator chart. Okay, I've been beating this idea up. But once this starts to turn, the bears that don't pay attention are going to get run over if and when it turns. It could still continue lower. We could see 43.50 first, but for right now, price is moving higher. So we got this capitulation selling. We got down to minus 66.90, very close to the March pivot. And if you follow this green line higher, you can see what happened thereafter. So it wasn't initially just complete blowout to the upside. We had a little wiggle, and then we took off. Okay, so we don't even have a turn yet. Working on a doji, 50 days overhead. So my guess is that the next resistance level above 4,400 is going to be the 50-day, if we can manage to follow through. This is a big if. So right now we're just watching how VWAP, how price responds to VWAP. Still don't have that many blocks, so institutions aren't really making their presence known. IWM, we added 3 more IWM. We got 10 blocks on IWM. The biggest block was 475,000. SPY. We got 9 blocks on SPY. The largest block on SPY was 252,000 shares. That's not very big. We're used to seeing on big days, we're used to seeing 500,000, maybe several of those, or a couple of million share blocks. So modest block volume, but showing that institutions aren't doing a whole lot.
Yeah, John, I really think you want to stick with this here. I like your entry point, even though it's down. So I'm going to give you an A on this because I think there's a lot of gains to be had here. It's being held, the stock is being held hostage.
What's PayPal doing? PayPal. PayPal. Block. MasterCard. Visa. Okay. Capital One. Prony. Okay. S&P. Let's see if we can follow through here. S&P is right at VWAP, 43.75, right over the head.
I like it. So it's an A because you listen to me, and it's also an A because it's a great company. Look, in their quarter, they announced they've already booked $500 million worth of business for next year.
What was that?
In the world, and they also have room to make some acquisitions. So I would actually add to it here.
You just gonna leave the door open?
And it's in the right spot to see more onshore coming into the U.S. and also into Europe, where more of their business is from. So again, it's favorable to your mind. I'd say. All right, thanks to the committee for their
All right, got a nice rally going here. All right, we're through VWAP. Let's see how the volume. Minus 89 on NYMO. So it's still running against the wind here. The dollar's helping. Dollar dropping pretty fast. Pretty fast move on the dollar, building a bear flag on the 10-year yield, 4.33%. And VIX, another bear flag breaking down right here. If we can continue to move lower. I'm going to put you guys on mute for a sec. All right, so we're just above VWAP. A lot of times we'll move above VWAP, take some stops out, and then reverse. So we've had a nice rally from about 12, actually about 11:55. Okay, we're at 43.60. About 15 handles. Can we continue? Apple continues higher. Always good to keep a chart. Always good to keep a grid of charts. Apple, Microsoft, Google, Amazon, Tesla, etc. So you can gauge the markets. If you're taking a long or a short on the indices, just paying attention to the FANG stocks a lot of times will help you out. Not always. I mean, sometimes they're weak, in which case bearish trades work out well. But if they're all pushing higher, it's only 15 stocks, but if they're all pushing higher, that gives you a tailwind. More calls being bought.
Good performance. They don't really have any broad competition nationally. There's some regional players like County Sports, but Dick sort of owns a category to himself. And once again, I don't think you can disintermediate them from an Amazon standpoint as much as others.
SPY.
What I would say is that as the stock gets closer to 150, 160, that it's not getting expensive, but it's getting fairly valued. So I'd like to see some upside to the quarter here, as I've seen with prior quarters. But, you know, I go back and forth.
Okay, we're back down to VWAP again. All right, so do we bounce here? Let's get a higher low. Let's get a higher low. Let's see.
this is a Joe T stock, so Joe Terranova, Ulta, expectations, and what do you do with the stock, regardless of what happens with it?
Well, I think first of all, the comp setup is a good one. I think they're going to be able to maintain their margins. I'm obviously speaking about the fundamentals. Unfortunately, there's been a breakdown in price, so that's testing the strength of overall momentum. I think earnings, which will be reported on Thursday, will be the ultimate ultimate resolution in terms of whether it's the factor of the fundamentals or the factor of the momentum that's going to win out. It's a name that we maintain positioning towards right now in the portfolio, but I think Thursday's earnings report is incredibly important to where we go in that regard.
And Brendan, we'll give you the last word on the consumer here. It's been very much a mixed picture with regard to the corporate results that we've seen so far. Walmart versus Target, other discretionary type names. Is there anything that stood out to you so far that would make you either more bullish or less bullish?
All right, so we're right at VWAP. A nice rubber band back, counter trend back to VWAP. Right now we're watching for either a higher high or for rejection and dropping off. I like to take puts if we get rejected at VWAP. If we don't and we continue higher, watch for calls. Problem is we're so close to next resistance. We could get a couple of bucks out of this though. S&P. Okay, you've got 43.75 and then you got 4,200 overhead. 4,400, sorry. Did I say 42? 4,400. Okay, so we got a lot of stocks still looking pretty strong. Okay, I don't recognize any of these names except AAOI. That pulled back a little bit. Palo Alto, NVIDIA, VMware, Zscaler at the highs of the day. Zscaler, high of the day. Okay, Broadcom. Pulling away from VWAP, Broadcom. Let's go to the 5-minute. Okay, so we're getting rejected at VWAP right now. S&P getting rejected. Let's go back to S&P while we're getting rejected here. Looking for a higher low and a higher high. Flat VWAP. Still have potential to come back down and test the lows. Wreck the bulls. Wreck the bears. That said, Apple is making higher highs, trying to make a higher high here. Just printed a higher high, looking for a higher low. Google doing the same. So is Amazon. So is Microsoft. Applied Optoelectronics, just a little pop off of that 1480 level, just popped up to 15 real quick. CEO bought 20,000 shares last week on the dip. AAOI. It's trying to break out again. Let's see what the weekly looks like again. Weekly. Pretty extended. AAOI, pretty extended. Recent high last week was 1590. All of the FANG stocks look pretty good. So I think we're probably going to push higher. Okay, just judging by what the FANG stocks look like. Let's take a look at them real quick. Here's Apple. Okay, up and to the right. Here's Microsoft. Up and to the right, sort of. Google, coming off the lows anyway. Google, all right, they're not dropping off, in other words. Did I say Amazon? Amazon. Tesla. Okay. NVIDIA. Up and to the right, higher new highs. Netflix. Okay. Berkshire Hathaway. RKB. Berkshire Hathaway. Can't really trade this on, okay, BRKB. All All right, so this looks pretty good. All right. JP Morgan. All right, so S&P 500. S&P 500, Doji. Okay, we got 43.75 and VWAP to get over. Looks like we're going to do it with the Apple, all the FANG stocks looking pretty strong. SMH high of the evening session. High of the day was around 10 o'clock. That was about 149. We're about 20 cents away. Looking for a new high of the day on SMH. I took some calls looking for a follow through. Those look pretty good. I only took 5. I wanted to take 10, but I said, you know what? Let me just see if this follows through because we were just turning off the low. And if we do continue higher tomorrow, I'll probably add to SMH. Looking for a tailwind to blow us into NVIDIA earnings on Wednesday. I'll probably take profits on these calls that I took at the money calls. And then I'll probably do something like a straddle at the money straddle towards the close on Wednesday before NVIDIA reports. There goes S&P. All right, so we got a higher low, higher high. Okay, we're breaking out now. I like Bren. She likes to do cover calls a lot. Very similar to what I like to do.
All right, Steve Weiss.
Microsoft, all talk about NVIDIA just
Wow, Weiss is fucking talking Microsoft. I just said the F word, sorry. Shocked.
All right, Joe T.
I'll see you Microsoft and I'll raise you a Broadcom.
All right, Broadcom. And then Jim. Farmer Jim, happy birthday.
Thank you, buddy. Thank you.
Farmer Jim, he looks like he's like 40.
All right. That does it for the
50, maybe 50. Farmer Jim, Labenthal. All right, so all of the FANG stocks are making higher highs in the evening session on the 5-minute chart. Higher lows, higher highs. So I don't see the markets rolling over with that in mind, at least not yet.
That's the fresh 16-year high. We're just a hair below that level right now. The question is whether this is a real breakout or a late summer head fake. We have full team coverage this afternoon from the bond market to the impact on the mortgage market. Going to want to hear about that. And how Fed Chair Jay Powell might react in Jackson Hole later this week. Let's start though with Rick Santelli out at the CME. And Rick, why today? Why now?
Well, I think because technically we broke through some very key levels, not only on a daily basis last week, but on a weekly close Friday. Let's start at the beginning. There's a 24-hour chart, Kelly. You can clearly see that right around midnight, we really started to race higher. And the reason is, let's make a 2-day chart. If you look at the hump in the middle of the left side of that chart there, that was the high session for Friday. Once we traded above that in the wee hours of the morning, we have not looked back. Virtually everything in our time zone has been above Friday's highs. And Friday, we basically closed a smidge of
Running against the wind.
which, if you go to the next chart, in my opinion, is the key to your question. It's about technical analysis and the fact that 2-year yields did not close above their big spike high from March, and it took 10 years and 30-year bonds quite a while because this all occurred on October 24th. But nonetheless, this is going to be the 4th session in a row we've closed above that key technical level, and that includes a Friday, which is a high priority technical close. Now, if we go back to the last time we
Yeah, Bob Seger. I like him a lot.
of
2s and 10s at these levels. You have to go back.
SMH is ripping higher. SMH going.
11. And what's really interesting is today's going to be the first day 30-year bonds closed above their key technical level from the 24th of October, and that was 4.38%. We've hopped right over it, but it doesn't change anything. It's still an aggressive close. And you asked whether it's a move or just year end or just something towards the end of summer. I think it's already been a type of move technicians are capitalizing on for no other reason other than this chart. 2s to 10s. I cannot tell you how many traders the last 3 months have told me the next big move on yield curve is going to be steepening, and they were spot on. Because at the last day of July, we were at minus 91. We're currently at minus 64. So we've de-inverted or steepened quite a bit, and pretty much all long-dated moves.
The only thing I want to mention, Rick, for people who look at that and go, hey, we're steepening again, the yield curve isn't as inverted, and therefore we're all, it's going to be fine. Well, usually once, if it's been inverted, then it starts disinverting. That's usually the bad kind of disinversion that comes before the actual economic slowdown. So it's hard to feel too good about that.
I couldn't agree more. It's not the type of thing where it's a closed system. When it goes inverted, it's going to mean potentially a recession. And as you become less inverted, less recession, it doesn't work that way. You're exactly correct.
Very good.
There can be ways where the curve would de-lever or re-steepen, but currently we are not seeing that type of trade.
All right, back down to VWAP.
And Rick, just to put a point on it, so basically the only real reason that you're hearing for why this is happening now is basically because it's been happening for the last couple of weeks. But when I think about overnight catalysts from China to you name it, it's not as if something really jumps out.
No, I think it's a cumulative effect.
Yeah.
There are handfuls of reasons for this market move.
Rick Santelli, such a bright guy, pays to understand what he's saying. If you hear him talking, especially when he's in the pit in Chicago.
And anyone who doesn't agree with that, just look at the way the market's pricing.
All right, Rick, thank you. Rick Santelli.
Smart guy. Very smart guy. Okay, we're pulling back down now. So how many times have we seen this? We push above VWAP and come back down.
Well, Kelly, as you know, mortgage rates loosely follow the yield on the 10-year Treasury, so no surprise. Here it is. The average rate on the popular 30-year fix touched 7.48%.
Holy smokes. 7.48%. The yields rates.
So 23 years. Last year at this time, it was around 5.5%. Home prices had peaked last year, but they've started gaining again in the past few months, and all that just adds insult to injury.
Balin, Bryce, are you, Mr. Bryce, are you in the mortgage market? Do you real estate? Do you do real estate? You say that you quit doing mortgages at these rates. Makes sense. I mean, if you're a real estate agent, I mean, how much can you do? How much effort do you have to come in? How much effort do you have to put in to sell a home? Unless you got really well-heeled borrowers. How much effort do you have to put in to sell a home and then find out that your borrower can't afford a 7.5% 30-year rate? 5% is at 6.2%.
People are having to redo what they can afford, but for sure there is still pent-up demand for housing, and there's just not enough. And then you add on that all the folks who might have wanted to sell their house are now saying, well, I have a 3% rate. Why? It's just getting worse and worse every day. First, why would I trade it for 6%? Now, why would I trade it for 7.5%?
Right, 7.48%, just a hair below 7.5. For all intents and purposes, 7.5. Diana, thanks for bringing that to us. We appreciate it, Diana.
Wow, it's pretty interesting over here in 2021. We're talking about 3%. Now we're up here at 7%. Yikes. Yikes. That was a 30-year.
How's the surge in higher long end yield going to play in the mountains? Since mid-July, it's also bigger than expected. Treasury issuance.
All right, so Apple hanging in there, Google hanging in there. flat on the day, 19 cents, up 19 cents. Google. Apple is up 50 cents. Microsoft is up $4.50. Microsoft, $4.50. Amazon is flat plus 50 cents.
But the Fed is going to have to ponder if this is more than it wants on the long end. Those 7% plus mortgage rates Bannon was talking about, they could be crippling for the housing market. Banks could be under renewed pressure like they were back in March. And companies are going to have to refinance those bargain basement debt rates they had from the pandemic. And it would see these yields as appropriate amid a world of higher growth and higher inflation. And Kelly, of course, maybe a higher real neutral rate.
No, you didn't. You didn't go there. You didn't. I was looking up academic paper titles that have R-star puns, and I don't think you can top Richmond Fed, the fault in R-star from 2018.
Yeah, okay. I want you. I punned about that long before they did. I just want you to know.
It is coming to me. Saying the Fed should raise its inflation target to 3% over the next 10 years, and I don't know that the entire basis of that argument is that you want more cushion in a zero rate world. And yet all of these academics are at the same time arguing we're no longer in that zero rate world because, you know, all this stuff is structurally higher. This feels exactly the wrong time to raise a price target that was supposed to cushion us to the downside when we're talking about the actual sort of impetus now maybe pushing us higher.
So I'm old school on this for two reasons. One is I think it's very bad form for the Federal Reserve to change the target at least before it hit it. If maybe down the road it hits 2%, stays at 2% or under 2%, it may have the luxury or the ability to change it. The other thing is I'm pretty sure that's the way Powell feels, and I think my ability to communicate that is probably the most important thing I can do rather than what I think. I'm pretty sure that's what Powell feels. And Kelly, indulging your inner econ geek is one of the great pleasures of my job. So.
I need those name prompts here and there. Steve, thank you very much. A lot more to come. We really appreciate it. Our Steve Leisman, who will be reporting from Jackson Hole later this week. Let's turn to my next guest, who is a buyer of short-term bonds here, but is warning you do need to stay diversified, especially if the Fed begins to cut rates as early as next year. Here on set with me is Michael Cucino. He is president and portfolio manager of the Permanent Portfolio family of funds. First of all, Michael, welcome. I think it's the first time since COVID you've been back here. So,
Pre-COVID, 2019.
Yes, we appreciate it. You don't have to get into the R-star, all of these econ geeky things, but I guess they all come back to this question, which the 10-year is kind of pressing upon us today, which is where are interest rates really headed, and what would your investment advice be?
Well, I think they're likely going to be higher for longer, roughly where we are. I mean, I think the big question that we haven't really talked about yet is the timing. The Fed wants 2%, somebody else says 3%, great, but when? And are they willing to raise rates to a point to choke off economic growth, which we seem to be having, to get to 2% quicker rather than later? I don't know the answer to that question, but that's a legitimate one. And so, for investors, I think this is all interesting. If you're a very conservative investor, you have your CDs at 5%, 4.5%, you don't have to do much. We think you can do better through a diversified portfolio.
Yeah.
If you have conviction in equities, there's certainly arguments to be made there. Mm-hmm. There's been a great stock market. And equities do have some competition for bond yields right now.
It feels like a strange world where we can make the case for both bonds and equities at the same time, but maybe it's just the flip side of what happened in the 2010s, where you could also bonds and equities at the same time, just again for different reasons today, I guess.
We've been doing the seesaw thing all year between bond investors and equity investors. The equity investor sees the Fed being done or close to it. Multiples are are good. They're reasonable. There's the excitement of AI and all these growth stories out there. And so that's why equities have bled up, because we've been an absence of real negative
Do you think
news.
multiples are reasonable though? Because they seem high by historical standards, not least, and this is the part I don't understand the most about this whole thing. They seem to be high relative to interest rates. You know, it's so odd that we'd say we're going to go from 0 to 5 and the stock market multiple is going to go up and be near its historical highs. That seems so strange to me.
The broad market multiple is no longer as cheap as it was, no question. But there are definitely some opportunities that are below market multiples. I think energy, natural resources, real estate investment trusts. I mean, now you have to have a strong stomach to do that, but there are opportunities there. The bond investor sees tightening credit. It sees an inverted yield curve. It sees the Fed saying that they might have to raise more quickly in a recession. And that's that seesaw battle that we're having, and it tends to change on headline risk week to week.
Well, let me maybe ask the question differently. So for those who in the past kind of owned bonds but traded stocks, should you do the opposite now, where you own stocks but you trade bonds, right? You know, the yields being as high as they are feels kind of like an opportunity to pick up some extra cash. I don't know how far out on the curve you go, but it doesn't feel like anyone really wants to say, oh yeah, I want to own bonds, you know, for the long run here. It's more just, does this feel like the kind of moment to strike while the iron's still hot, you know, depending on what happens next year?
Well, this gets to the investor that was buying equities for yield several years ago, right? They no longer have to do that. And so they have to be a true equity investor to want equities. When you look at the comparable yields between, let's say, earnings on the S&P 500 and bond yields right now, if you're a growth investor, you're going to look at that and say, well, they're comparable, but I like the growth perspective and the long-term nature of growth, so I'm going to weight it that way.
Right.
If you're more conservative or you have liquidity needs going the other way, you take your 4 or 5% and short duration, and you go with that until you have more clarity.
Right, although it's not that tax efficient, but what do you do about that piece? It is what it is. You get what you get.
Great point. Dividends are more tax efficient than interest income.
Yeah. So for the person who might be more interested in that, they can tilt that way. So you mentioned energy, you mentioned rates. We also have some stocks in particular.
All right, we're back down below trying to go back down below VWAP. Remember, you got a flat VWAP. So what do you expect? You expect price to be above and below VWAP and not go anywhere. Okay, you've got 1-to-1 up-down volume, 1.8 on the NYSE down, and the NASDAQ 1-to-1. So NASDAQ is holding up fairly well, trading at 1-to-1. Okay, if you're looking for a short, this is the area to look for it. If we can't follow through and get through 43.78, look for it to drop back down into the bottom of the range. I'm not doing anything. Flat VWAP generally. I don't look to do much. All right, I'm going to check on my lunch.
Well, it's come off its highs, and I think rightfully so, given the uncertainty of the interest rate environment and the strength of the dollar. The dollar has been very, very high lately, and that tends to put the dampers on gold. Our view in the long term is that it's going to be more valuable years from now than right now. I think the dollar is at a high. It's going to come off from that globally at some point. The Fed at some point is going to stop raising rates and likely will cut if there's a recession issue out there. Those are bullish for gold. Gold tends to do pretty well if you have a recessionary environment for many of those reasons.
All right, a little bit of everything.
Absolutely.
Michael, thanks so much. We appreciate it today.
Thanks, Kelly.
Michael Cugino with the Permanent Portfolio. We got a ton more on deck for Jackson Hole later this week with interviews with Philly Fed President Patrick Harker, Cleveland Fed's Loretta Mester. That will all kick off Thursday on CNBC. You don't want to miss it. And coming up here, a sort of surprise rate cut out of China. We'll ask one China watcher what's happening on the front lines of the property sector there, as the MSCI China ETF is having its worst month in nearly a year. Plus, a ton of names on deck to report earnings this week, from Nvidia to Peloton. We'll preview some of the retailers out right away, like Lowe's and Macy's. That's coming up in Earnings Exchange. And as we go to break, let's get a quick check on the markets, where we see the Dow under pressure by about 125 points, a third of 1%, but the S&P is higher by 8. The NASDAQ is up almost 1% today, and the Russell's down 0.5%. 434 on your 10-year. That's the number of the day. We're back after this.
This is The Exchange on CNBC.
All right, so we're bouncing at VWAP. That's a good sign. Keep an eye on your FANG stocks, Apple, Microsoft. That's 13% of the weight. Actually, it's about 13.5% of the weight of the S&P. Adding Google, NVIDIA, Tesla, and the others. They give you a good signal. NVIDIA is still pushing higher. NVIDIA. NVIDIA pulling away from VWAP. All those upgrades looking really good for NVIDIA. SMH, the semiconductor index, and the 3-time bullish SOXL, all rising. Looking good. Looking really good.
Welcome back to the exchange. China's central bank just cut its one-year benchmark lending rate for the second time in 3 months. The reduction was more modest than expected, though, showing China's reluctance to take more forceful measures to reverse their economic slowdown. And Chinese stocks, well, they extended their losses on the news, with the Hang Seng down nearly 2%, Shanghai Composite a little over 1%. Let's get some perspective here from Brendan Ahern. He's the CIO of Crane Shares, and China Market Research Group founder Sean Ryan, who joins us from Shanghai. It's great to see you both again. Brendan, I'll let you give the
Apple, Microsoft, new highs.
Listen, I read the reporting from Ling Ling and others, and you just think they don't want to do big stimulus, and I'm not sure what else the bull case rests on at this point.
Yeah, they've certainly taken an incremental, as opposed to a bazooka type approach, that they've slowly implemented reforms, but they're really not willing to pull the Band-Aid. I think some of that's driven by Fed policy. It's driven by some of the geopolitical macro narrative, a little bit about the global economy slowing. So they're taking this incremental approach, which obviously has left investors a little wanting. It is worth
There goes the S&P. Goodbye.
45% off its October lows from last year. So we've certainly given up some of these gains. And certainly, as your previous guest noted, the strong dollar has been a real headwind for non-U.S. equities in general, including China.
Yeah, although just one more to follow up on this. We were speaking with Derek Scissors the other day. I think it was Scissors who said, look, the Chinese stock market peaked in 2007. This just isn't a good place to put your capital.
Yeah, I think our long-running argument has been that the China proxies, MSCI emerging markets, MSCI China, 10 years ago had 11% and 2% in tech. So these were really value proxies, 50% financials and energy during a period of great growth outperformance. And that's really why we developed KWEB, was it gives investors an element of the growth in China's economy, which is simply not captured by broad indices like broad EM and broad China.
Yeah, that's fair. Sean, I'll turn to you. You're back in Shanghai. I'm very eager to hear how you would describe things on the ground there. What's going on with the property sector? What's the mood generally?
Well, Kelly, it's great to be back since I saw you last month in the studio. As you said, I'm back here in China,
And right now, we're facing a crisis of confidence. It's not a crisis of liquidity, which is why the government isn't lowering interest rates too much, because at the end of the day, there's no demand, both from consumers and from companies, to borrow money because they don't think that they can't get that money to work anywhere. People are really scared. Now, I painted a really negative position last month when I spoke with you and Ty, Kelly. Now it's gotten even worse. There are really three reasons why consumers and companies right now are even more nervous than before. The first,
You listening to this?
you saw Soho, a major property developer, just announced that they had 93% profit.
China property developers.
Of a terrible 2022. And the big elephant in the room is what's going to happen with Country Garden, which was the largest real estate developer in China with over 3,000 different projects. They have missed paying bonds on a coupon last month. That sent a lot of ripples throughout the marketplace. Investors ought to be really cautious about getting exposure to China in the next 2 to 3 week period. You know, consumers now are nervous. They're cutting back. Some of the numbers might not be great for the coming 2 to 3 weeks.
Well, I'm looking through your notes, Sean, and Brendan, I'll put this question to you. There are some bright spots. You know, he spoke with a lot of real estate agents and consumers, seeing a lot of trade down at restaurants, but says tourism remains a bright spot. EVs, the EV brands, BYD, battery maker Cattle, still strong. Some, you know, and maybe we're getting to the valuation point at which you can look at some of the bigger name online retailers. What would you say in response to that, Brendan?
I think in general, we've known that this real estate issue is not a short-term fix. This is going to linger, and it's going to be Evergrande. It's going to be Country Garden. It's going to be Sunac. And there's a whole host of these distressed property developers that are continually going to flare up and have problems for years to come. It's the key is that the Chinese government wakes up every day with one mission, which is stability. And are they going to allow real estate to unfold into the quote-unquote China economic, Lehman moment, this huge collapse? I don't think so. And I don't think any investor in China believes that this is going to unwind itself in some catastrophic matter. So yes, it's a problem. These companies are problematic. And it's worth noting the Chinese government isn't going to save them. We threw a bone to a lot of financial companies when they got in trouble, and the Chinese government's not going to do that. So, yes, I mean, consumer confidence, to Sean's point, is the problem. That's the problem with real estate. It's weighing on consumer confidence, which means domestic consumption remains weak, which is why they need to get property prices higher. You're going to see that done on the local level. And we do believe domestic consumption, that the companies within KWEB can benefit as consumer confidence, as consumption comes back. And certainly, we're still in the thick of earnings season. We got Baidu tomorrow, and Meituan and NetEase on Thursday.
Yeah, we're going to have more on Baidu in a moment. Sean, you were bullish on China for 25 years, one of the biggest bulls before you became bearish during the pandemic. Are we going to be bearish for 25 years too? Or what are you looking for? What would it take for you to kind of see more bright spots on the horizon there?
The next 3 to 6 months, Kelly, are going to remain quite rocky. You saw retail sales only went up 2.5% in July. Consumers are saying, we're going to hold off buying the big ticket items like autos, like houses. I think that the luxury sector could be in for a little bit of rough waters too. I'm not going to turn bearish in the next 3 to 6 months, but I do think in 2024, maybe at the end of Q1, things can get a little bit better. And I think the key is what's going to happen with multinationals. Right now, they're just not investing into China. They're scared. They're taking a wait-and-see attitude about the geopolitical tension in 2023. But I'm starting to talk with a lot of global CEOs of Fortune 500 firms, and they're starting to say, maybe we should invest in 2024 in Q1 and Q2. That could jazz up the economy a little bit. I also think you're going to see a surprise on the positive side on some numbers like tourism. I'm actually sitting in a Park Hyatt hotel right now. The place is packed. We've been talking with hotels. They're seeing numbers that are as good, if not stronger, than 2000.
All the FANG stocks are breaking out.
Is also booming, so I'd be looking at Galaxy, Sands, and the casinos right there. So I think if you start to see some numbers from multinationals like a Hyatt, like a Marriott, like a Lululemon that are reasonably good, then I think there's going to be confidence by multinationals to invest in 2024. The second thing, hopefully we're going to see an end to the relentless attacks by the Biden administration on China. Last week, they just imposed more sanctions and more bans on American investors, venture capitals investing into high-tech sectors like semiconductors and artificial intelligence.
Right.
We should not underestimate the geopolitical tension that's weighing on consumer and business sentiment in China. If we can see sort of a detente between the two countries, maybe the economy will get going. But I don't see, I'm not hopeful in the next 3 to 6 months.
That's
And frankly, I'm not hopeful for the next year.
All right, Sean, thank you. Sean, Ryan, Brendan Ahern, we really appreciate it. And that's a perfect segue to our next discussion, because investors here at home are trying to figure out whether their company's China exposure is a good or bad thing to hang on to. We turn to Seema Modi for those details. Seema.
Well, Kelly, some of the biggest companies in America have been challenged by the ongoing troubles in China. After banking on a turnaround, executives have had to scale back their expectations while at the same time hold out for potential stimulus. The Council on Foreign Relations China team, they say don't hold your breath, writing that the appetite for big stimulus is not there as Beijing relies on so-called precision-guided monetary tools that focus on targeted credit easing. Evercore ISI strategists warning clients over the weekend that if China's economic backdrop worsens, S&P 500 companies with more than 20% revenue in China could be at risk of seeing investors scale back their exposure. They point to names like Intel, Tesla, Advanced Micro Devices, Western Digital, among others. Most of these stocks are housed in CNBC's China Trade Index, which you can see here has underperformed this year, up just 5%. Compared to the S&P 500's 14% rise. And fund flows data from Roundhill Investments shows that market participants continue to diversify their holdings, with China bringing in less than $1 billion so far, while India-related ETFs have seen inflows of $1.8 billion, Japan at the top at $5.8 billion, which also tells you the story, Kelly.
I thought that was fascinating what Sean said, that multinational is going to be one of the keys to which way China goes over the next. And it's funny because they want the multinationals to invest first, but the multinationals are waiting for better numbers before they, obviously want to make these big investments. So it's a little bit of a waiting game.
Yeah, and we're talking about 10 to 15 years of investment, so it's not an easy market to just pull out of. At the same time, there are a number of bright spots. Companies like Starbucks this past earnings season talking about how they're seeing the highest number of 90-day active users that they have ever seen at over 20 million Starbucks Rewards customers. Booking Holdings CEO Glenn Fogel a couple weeks ago referencing the China outbound travel story is starting to gain momentum. So there are these strategic, selective stories within the consumer space that is holding out.
Yeah, pockets. For sure. Seema, thank you. We appreciate it. Seema Modi. Still ahead, SoftBank's ARM is expected to file to go public today with its valuation front and center. We'll get all the details coming up in Tech Check. The exchange is back after this. Stay with us.
Okay, so the 105 continues to ramp upward. We got green signals. Tick cumulative on the 5-minute is starting to go green. And we got all of the FANG stocks giving us green signals. Nice job, Prana.
higher.
Now the whole country is like linked into it, and they have a
News update. After bringing high winds and heavy rain to Southern California, Tropical Storm Hillary was downgraded yet again, but it is still threatening central Nevada with potential flooding and moving towards Oregon and even Idaho. National Weather Service reports 1 to 5 inches of rain expected across portions of the Pacific Northwest through Tuesday morning, which could result in more significant flooding. Wall Street Journal reports that private equity firm Roark Capital is close to finalizing a deal to buy Subway, the chain of restaurants. Sources tell the Journal that the $9.6 billion deal could close this week. The company reportedly began exploring the sale back in January. The chain has been owned by its 2 founding families for more than 5 decades. Are you looking for a new car under $20,000? Well, there were at least a dozen small cars that met that criteria just 5 years ago. The prices for most vehicles, new or used, have soared since the start of the pandemic, so now there is just one. The Mitsubishi Mirage under 20 grand, and maybe not for long. Reports suggest it's being discontinued after the 2024 model year. Kelly, back to you. See you in a little bit.
Wow, the only new car under 20K post-pandemic. Get it while they're hot. Tyler, thanks. Coming up, 3 big-name retailers are set to report before the bell tomorrow. We'll get the numbers and narrative, and I'm going to sneak in a fourth. It's kind of unrelated, but we're going to ask Kilberg anyway. Before we head to break, let's also get some show and tell, where we show you a chart and tell the story. Palo Alto Networks leading the S&P and on pace for its best day in 2 years. How amusing and ironic is this whole story? They reported a beat on earnings and a slight miss on revenue on that infamous Friday late afternoon summer earnings report. After all the attention, CEO Nikesh Arora tweeted that more than 5,000 people dialed into their earnings call. That's 5 times the average over the past 5 years. Here's what he told Jim Cramer about the timing.
We're trying to make sure we get our earnings out there and give a full year forecast, but you want to give it a longer term context because there's lots of uncertainty in macro. Also, we're seeing security companies a bit all over the place. So we want to make sure people see us as who we are, which is different. So we want to get that done. 2, we have about 5,000 people in Vegas who are right now getting pumped up to go deliver phenomenal FY24 like they have at FY23. We want to make sure we didn't have to stand there and hum and haw about what our results are likely to be. So honestly, it only worked out that we could do this on a Friday. So we did.
I think we call these sound bites from the future because you can watch the full interview tonight on Mad Money at 6 p.m. Eastern. Hopefully more companies don't think, man, Friday night's the way to go. We're back after this.
need prices.
Welcome back. Quick market flash. Sentinel-1 jumping sharply and briefly halted for volatility in just the last few minutes here. Reuters reporting the cybersecurity company is exploring a potential sale.
All right, so SMH is already up. What is it? 106% of its ATR daily range, about 82%. It's extended zone 7 right now. Still looking good. Amazon, highs of the evening session. Microsoft. Okay, NVIDIA still going. All right. So bears got trapped. There goes Apple. Apple's starting to go. Google trying to take out the high of the day. Amazon's going. Microsoft's going. Everything looks pretty good now. Nice.
All right, you're looking for 130. It's at 124, so we'll see if it gets that bounce today. And we'll move on to Lowe's meantime as we turn our attention to a couple of retailers here. Lowe's shares are on pace for their worst month in about a year, down about 7%. They lowered full year earnings and sales guidance.
Okay, let me just take a look here. SMH.
From last year. So with record high home equity, good gauge for consumer spending, people feel richer, and the housing shortage.
SMH has the 21-day and the 50-day to deal with tomorrow and Wednesday, going into NVIDIA earnings. Amazon looks good. Let's see, Amazon is trading 57% of its ATR, 72% of its daily range. Amazon has more upside potential.
Which is just at $209. If earnings disappoints, and if you own Lowe's, I think that's
excuse me.
Switch over to Home Depot, and this is more of a trade. It's not beating up Lowe's. The stock is at a decent run, but at the end of the day, it's just too high beta, too small a stock. As we're seeing
Amazon 57%,
All right, so you're sort of
and daily range 72%.
$8 below where we are right now, so that's a good round number to keep an eye on. And finally, Macy's, former behemoth, this market cap has just dwindled. It's seen 3 double-digit monthly slides this year. It's on pace for a 4th, and the strength of the consumer is one question. Buyers are also taking on more debt in the face of higher prices. And interestingly, some Macy's vendors are already reporting some price squeamishness. I'm surprised. Are you a buyer here, Jeff?
I am a trader and I am a buyer here. Now, yes, you're absolutely right. This is almost a micro cap. Just kidding. It's still
Not sure what you mean, Balin. It all depends on, it could be day trade.
Diversification, but you're right. If you look at a chart, Kelly, under $13, look out below. So I think you can be a buyer here. But whenever we buy a stock this high of volatility, I think you have to understand you need to buy it with a stop. So as soon as you buy it here, if you're going to buy it here, you have to put that stop in, because under $13, it could be a free fall. And that's where you have to understand this is not a long-term investment. This is a trade. And this could be some profit really short-term if you own Macy's going in earnings.
All right, so that leaves about $2 of cushion to the downside before you tell people to pull the ripcord. I just got to quickly ask you about Zoom, because I continue to find it relentlessly fascinating, especially, they're pulling people back to the office now at Zoom's corporate headquarters. The stock is just about unch year to date.
It is, and it's only down 77% from the peak of COVID.
So it has had just a hellacious move lower. And this was really the darling during COVID when everyone was not only working on Zoom, we were having cocktails on Zoom. Sure. So I think Zoom right here is just fascinating because at $20 billion, it's kind of a takeover target. But with the one thing that gives a little bit of optimism why I look to trade and buy this stock, yes, Kelly, another odd buy by myself. But I think you have to understand that the AI, they're racing to make new artificial intelligence tools to enhance their platform. That can be attractive to someone like Sir Elon Musk, who wants to incorporate more and more into his super app X. So I think Zoom is attractive here, despite the fact it's been decimated.
All right, I believe they report tonight. If I'm hearing you right, you're saying there's still a $20 billion market cap. That's shocking to me.
Hard to believe.
Impressive. All right, let's see if we can take it for a trade. Jeff, thanks so much for your time today. We appreciate it.
See you, Kelly.
Jeff Kilberg. Still to come, Tesla, Amazon, and Seagate are all among some of the most expensive stocks in the S&P 500. Is that a warning sign? We'll dive into it. But first, SoftBank-owned ARM is expected to file for a NASDAQ IPO this afternoon. What to expect and whether ARM has the AI prowess it promises next. Before we go to break, to also take a look at the COVID vaccine makers. Novavax shares are up about 17%. Moderna is up nearly 10%. BioNTech almost 7% as new variants of that virus emerge here in the U.S. All three are still well off their year highs, but keep an eye here as we hope to see not so much COVID action, but some moves that are rewarding those investors. We're back after this.
Yeah, there's two, Balin, there's two, two strategies that I use, very common strategies. Okay, if I'm thinking about options on the SMH, I took some SMH. Let's just use that as an example, okay? So SMH, posted that in the trading room. SMH. Today's the 21st. Okay. Okay, at 12:14, right here, as we started to push through VWAP, I bought calls. Okay, so we had a flat VWAP. I could have bought over here, but it initially dipped. All right, so VWAP needs to be up and to the right. You see how it's moving up and to the right? So for an options trade, I'll take a 40 delta call, which is what I took, and I'll look for a buy signal. Okay, I got a buy signal there. VWAP is up and to the right. Price is moving higher, and all the stocks in the group are moving with it. So if all the stocks in the group are moving, most of them, doing the same thing, VWAP up and to the right, then I'm looking to take a long near VWAP or a bounce of VWAP, and I'll take the 40 delta calls. 40 delta calls are generally right at the money or just slightly out of the money. Anything beyond 40 delta, your odds are much lower because you can think of it as, okay, so let's say you take a 20 delta. You think you're going to make it big because NVIDIA is going to report earnings. 20 delta gives you about a 20% probability of winning and about an 80% probability of losing the trade. So that's just a benchmark that I like to watch. Now, if you're taking a swing trade on SMH, a swing trade is set up like this. Okay, so here's your swing trade. Okay, so you got the long on SMH calls. Okay, so you got this long. All right, so you're already in the trade. You're making money. Now, I'll more than likely take these SMH calls off because we're trading at over 100% of its ATR. That's the other thing. I look at the ATR. Okay, average true range on this one is about $3.50. Okay, so it's up $3.80. So right there, okay, you see that? 380. And if you don't have Grover Scripps, you can see that it's up 351. So it's already traded 100% of its ATR. So I'll probably take this off like very soon. I'm going to take them off right here, actually. Okay. So I just took some SMH off the table. Now, let's say you weren't interested in taking profits intraday and you were thinking about a swing trade. Well, the swing trade it's going to take a little bit more effort to get through the 21-day and the 50-day. Once you get through the 21-day and 50-day, maybe we do it tomorrow, going into Nvidia earnings on Wednesday. So swing trade, I like to see price above the 921 day. So I'll take dips. I'll take a dip, I'll buy the 40 delta call. I'll look for a follow through and for higher prices. As long as the 921.50 and 200 day, everything is pointing up and to the right, I got a pretty good trade. Right now, we still got to get through the 50 days. So that's the reason why I just took SMH off there. SMH just made a 90% profit, right? Let me just check my entry exit. 40%, not 90%, 40% profit. Okay, SMH probably keeps going.
Companies, and the key question for ARM and what kind of valuation it's going to ultimately fetch is this an AI adjacent company or an AI centric company? How involved is it in this space at a time when investors kind of in show me mode? They don't want to hear about how it's going to, capitalize on AI in the future. It wants to know how companies are doing it right now.
Yeah, and what did you say about why they picked the U.S. instead of the U.K.? And I love also it's the Nasdaq versus the NYSE and the U.S. versus the U.K. All these stories we haven't been able to talk about in a couple of years.
I know it's been 18 months, right, since we've been able to talk about IPO stories. And I mean, hey, if ARM is successful, that could open the window for many more. But it's always this debate, Nasdaq or NYSE, who is going to be your left lead on the IPO filing.
Yeah, you're welcome.
Why it chose the UK over the US? I mean, it's the reason a lot of companies, right? It's the bigger market, bigger capital markets. It's sort of also seen as having all the glory as well. So it's seen as a loss for the UK that it couldn't keep that listing.
Yeah.
There, we went through this in another era with Hong Kong versus New York. And it'll be interesting after an 18-month freeze, sort of which IPO markets, if that's going to happen, which international markets heat up quicker.
Do we know the ticker? Is it weird that that's the thing I look forward to the most? It's got to be ARMH. Wasn't that it in the past? Wasn't it ARM? Wasn't it?
I think it was ARMH. Yeah, I wonder if I mean, how do you not just do AR?
Okay, so I'm all out the calls now. Okay, that was a nice 2-hour trade, right? No, not quite 2 hours. 1 hour, 45 minutes. Okay. I do have SOXL. I do have SOXL calls too, for what it's worth. 4,400 major resistance. Yes, Grant, I would say yes. Netflix. Let's take a look at Netflix for Tony. Yeah, I like it, but it's still below the 921 and 50 days. So it's technically Netflix is technically a counter trend trade. $9.21 50 day R overhead. Yeah, and it's technically a counter trend trade if you're thinking long. Okay, the 921 and 50 day are all overhead. The 200 day, the 100 day is right below. I like chips. I like chips this week. I like chips this week because we have Nvidia. That's going to be a big deal. They're going to be talking about that nonstop. So I'll be trading chips most likely this week. All right, I'm going to go check my lunch. I'll be right back.
couple of weeks ago, my next guest made the provocative call that Verizon, yes, Verizon, will outperform Tesla over the next year. And so far, so good. Verizon's down about 3% since then, so is the market, while Tesla is down 15% despite today's little turn up. So is he closing this pair trade or sticking with it as Tesla stock rebounds? Well, the key, he says, is valuation. Let's welcome back Chris Grisanti, Chief Equity Strategist at MAI Capital Management. It's good to see you again, Chris. Welcome.
Double top. What are you looking for? A double top on the S&P?
The guy who's going to take off a trade after 1 month, but it's worked out pretty. Maybe it's met your target in advance.
Well, being down 3% isn't my idea of a great trade yet, but I think over the year, I think Verizon stands a terrific chance even continuing to beat Tesla from here. And it's more honestly a statement about the markets and the economy than it is about these two companies.
The dollar and the VIX are holding at the lows.
Sure. So the valuation, the first half of 2023 left stocks like Verizon completely behind. Like a year ago when mortgage rates started to go up and the home builders were absolutely demolished, that's really what's happened to Verizon here. It's the first investment grade company I've seen in more than a decade that has a higher dividend than its PE ratio. You can just think about that. We think the dividend is completely safe. Payout ratio is less than 60%. Cash flow is strong. It's actually getting better because 5G spending is peaking. But Verizon has languished. And folks say to me, what do you care about? Nobody cares about Verizon. And then I say, well, that's not a bug. That's a feature. That's when you want to buy a stock, is when nobody cares about it. Everybody's left it for dead. Now, let's compare that with Tesla, of course. Tesla, for all its brilliance, still makes cars. And if the economy slows, folks will buy less cars than analysts are now expecting them to buy. And that's the hurdle they have to beat. And it's okay if you're the 7 PE like Verizon does, not to quite meet expectations. But when you have a 60,
Okay, I'm here with you. I'm just eating lunch.
you need constant reassurance, which comes in the form of making or beating the numbers. And I just think in a slowing economy, which I strongly see over the next 6 to 12 months, I think that's going to be tough for Tesla. And I'm not saying Verizon's a better company, whatever that means. I'm just saying I want to make money and I want to protect myself over the next year. I think Verizon's a better way to do that than Tesla.
So the sort of rejoinder to that would be Verizon's the value trap, and Tesla's growth is worth paying for. Like its performance is worth paying up for. And there's both of these kind of continuing to go where they've gone is more likely than not.
I think that's right, but you have to, and I think that's right. That's the contrarian argument. But what
devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange on Schwab Network. Thank you for being with us. Here's what's coming up on today's show. We'll break down the recent market slide.
All right, so I'm looking to get back into SMH. I just want to do it at a lower level. I don't know if it'll be today. We got the overhead resistance levels to deal with. Got overhead resistance levels to deal with. And if we can manage to get through the 921 day, we're above the 90 made now. The 21 day is next, and then the 50. Maybe we do it tomorrow. Maybe we get through it tomorrow. That would be nice. And then have NVIDIA earnings on Wednesday. So we had a successful trade on SMH so far today. Stochastics. The other thing, Balin, if you're listening, the other thing is watch your stochastics. If you're going to swing, having stochastics down here below 20 is ideal. Look over here in April, SMH. Look what happened with SMH. It went sideways for a little while, but then it took off to the upside. So from a swing standpoint, I'm watching stochastics to turn, and along with MACD. MACD is getting ready to turn too. You see those shorter histogram bars? RSI is turning back up. It's going to get back above 50. Like it did over here with stochastics when it was below 20 in late April. Look what RSI did. RSI is doing exactly what it's doing right now. So the setup with SMH is pretty good right now.
Positive spin on Tesla, saying he acknowledged, that price cuts will affect the overall profit margins for Tesla, but there's many catalysts that could cause positive movements in the stock. First, of course, the Cybertruck is about to launch. The wider adoption of full self-driving is going to be very positive. Continued growth in the energy storage space for Tesla, and then expanding into new markets possible in the AI format. So he mentioned, even though the overall price cuts will hurt the margins of sales, there's several reasons to be excited about Tesla. And right now, Tesla, I've got it up about $13.40, up just about 6.25% as we get to the 2 o'clock hour, Nicole. Pretty strong day, pretty good bounce back day here for Tesla.
Without a doubt. And I look forward to speaking to Steve Wesley later. As you know, he was a former board member of Tesla, and he continues to be a fan, so I want to hear what he has to say. In the meantime, one name on the move, Palo Alto Networks, after the earnings release on Friday. I mean, when we saw that stock sink for the whole month of August, because they made this announcement of
There you go, VMB.
report. No S&P 500 reports on a Friday, except for Nike in December of 2020. It just doesn't happen unless maybe something's up. But this ended up being some good news.
A Friday afternoon earnings release and a 2-hour conference call, frankly, had investors worried going into this. It turns out all for naught. $1.44 share beat earnings estimates of $1.28. A slight miss on revenue, 1.95 million or billion versus 1.96 billion expected. Goldman Sachs reiterated a buy. Remember, this is, Nicole, the clear leader in cybersecurity. And so, yeah, you're right. The stock had sold off pretty dramatically into this earnings release, now jumping right back up to where it was before. So you're right. Nike did this before in 2020. It caused a lot of investors some concern, even so much that the CEO said, sorry to drag you out on a Friday, but he had nothing but good news to talk about. And as you can see, the stock here now up almost 15.5%, Nicole. So having a great day. A big two stocks we're talking about today, both with snapback rallies today from recent sell-offs.
Yeah, we'll wait to see about Zoom Video later, too. Kevin Hanks, thank you for that. We have a big week ahead of earnings, but we'll begin with Zoom Video today. So we'll have that and much more coming up right here on Schwab Network. We'll take a quick break, and we will be right back.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
At each and every angle, the whole picture, everything comes full circle on Trading 360.
All right, so we pretty much top tick SMH.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free.
Microsoft.
Schwab Network.
Yeah, I like Microsoft.
Join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Yeah, Scott, I'll wind up adding soon. All right, Tesla looking pretty good. Tesla, nice buy signal. Yeah, good signal there, Grover. I agree.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Taking a look at some more market movers for you right now. Shares of EV maker Xpeng higher today after B of A upgrading the stock to buy, raising the price target on shares to $22, up from $16.30. The analysts now expect Xpeng to turn a profit in 2025 versus a net loss in its previous forecast. We're also watching shares of golf company Acushnet climbing today after Jefferies upgrading shares to a buy and raising the price target to $84 from $61. The analyst said it has underappreciated the value of its best-in-class portfolio in a healthy golf industry. And NVIDIA is higher after HSBC and KeyBank both raising price targets on the chip maker. HSBC keeps a buy rating, saying bullish AI server momentum should continue to surprise on the upside. KeyBank kept an overweight rating and expects it to report guidance meaningfully above consensus. NVIDIA is Wednesday, by the way, folks, so watch for that.
All right, Tesla looking good. It's sitting here. I'd like to see it pull back a little bit more to start something, but what I'll do is I'll wait I'll take a look at Tesla tomorrow if we get another follow through trade. I mean, you've got a good entry so far on Tesla, so looking for that to continue.
They were hoping it could hold 30,000, but hasn't been able to do that at all. 26,025. For more on the markets, let's welcome in Mish Snyder, Chief Market Strategist, MarketGauge.com. Mish Snyder, great to see you. Thank you so much for being with us. We want to talk about the market first. I want to get your feeling. The Nasdaq soaring, even though the 10-year and the 30-year yields are surging, but the Nasdaq is having a beautiful day today, of course. I mean, from Palo Alto in there. But tell me a little bit about your big picture on the market.
Well, Nicole, you're absolutely right that the classic relationships that everybody has banked on has proven to be completely distorted this year, and you can no longer bank on them. Ergo, growth stocks and interest rates, right? So I think right now we're looking at August seasonally. It's generally
Nice job there, Grover. Yeah, I see that you responded. All right, I posted that on StockTwits for you.
teeny caution maybe emerging with gold, possibly starting to outperform the S&P 500. So for us at this point, as long as we hold basically Friday's lows, particularly in the Russell 2000, we like to really use that as our major index gauge. Cautiously maybe creeping back into the market, but really still taking it easy as we get through the rest of this month.
As you talk about risk on, you do like some areas such as semiconductors, right? Tell me about some of the types of investments or even names of investments that you think could work.
Well, semiconductors, of course, unless we have some major event like China, Taiwan, that kind of thing, short of a major event like that, they are really doing pretty well.
Love to see 2 more white soldiers on Tesla. All right, we got a white soldier today, Tesla. If you don't know what I'm talking about, 3 white soldiers is a premier or a primo reversal signal. Okay, let's look at Tesla. The opposite of 3 white soldiers is 3 black crows. You can see here, 1, 2, 3, indicating a bearish reversal from the highs. You got 3 or 4 over here, 1, 2, 3, 4. Okay, you got several 3 black crows here. Now, obviously, the candles are red, but if they were black and white, you'd know what I'm talking about. So we got a reversal, 3 candle reversal.
Information like India cutting back on exports for onions after they've just done it with rice. So we think that that's a big point, and it looks to me like silver is starting to pick up here and gold, and I don't think that they should be discounted. Other than that, we really like commodity-based names.
Yeah, understood. And then if you were doing something a little more risk off or being more cautious, where would you put your money to work there?
You got 3 white. You had a Morningstar Doji. You got a Morningstar Doji on NVIDIA. Okay, you got the red candle. Okay, you got the Doji and the reversal candle. That constitutes a 3 candle pattern called a Morningstar Doji. Okay, so that's a big reversal pattern. Now, if we can add to this tomorrow and Wednesday with 2 more bullish candles that overlap a little bit, that would be a 3 white soldiers reversal pattern. Very strong pattern. If it's accompanied by volume, so we're watching the volume today. Look at RSI. I think Bobby T bought Tesla. I think he bought on Thursday, right? So we're back to your level. Looking for Tesla to continue.
Super discretionary, probably not my top. I would say more consumer staples if we were going into the consumer area. And in terms of safety play right now, I really in the whole equity space, I'm trying to pick and choose here. But I really do believe rising in certain commodities, particularly in energy, which we haven't even mentioned yet. And like just something like natural gas, which has been desperately trying to hold on here, that could emerge. And of course, anything to do with
Tesla.
like LNG.
Thank you, Tesla.
But yeah, biotech is
Let's see. Let me go to
everything. So
6 months.
Yeah. And what about, you mentioned the Russell. Tell me about small caps. Do they fit in your portfolio?
well, right now we're aside in them, but I think that they're an incredible indication of where things are going. So if you look at the Russell 2000, I mean, even in this whole rally, it got up close to about 2000, wasn't able to get through it. We thought it was going to cap out at 1950, so, went up a little bit higher. And the same thing with the downside right here. If they can hold on really at about 1800 right here, then I think that would show that the soft landing may not be so crazy, that in spite of the higher rates, the market can absorb it, and that the retail investor is still very much interested in getting in, and the small caps would actually indicate maybe some kind of an infrastructure, manufacturing, industrial growth to get into 2024.
I know everybody's watching real rates and inflation has come down in the big picture. But do you think that the Fed will raise in September and or November?
I actually think they'll raise in September 0.25%. And I think it's because they're going to be looking still at the
All right, so that looks really good for Tesla traders. Morningstar Doji with a big bullish candle today. Very nice.
What happens in the next 6 months after that remains to be seen. But for now, I'm going with a 0.25% rise in September.
Yeah, and so far earnings are better for the most part than anticipated when you look over the year. And some people are still waiting to hear from NVIDIA, for example, on Wednesday to get a sense on tech. Where do you stand on tech or anything else you may be watching as a final thought here?
Well, we know that it got a little overzealous and oversaturated, and that's what any critics of NVIDIA are saying at these current levels. But I think that in terms of tech, regardless of what happens, even as you said in the very top, which was that the interest rates don't seem to be affected, it is definitely in its own fumes. And of course, AI is not going away anytime soon, and we're not the only country developing AI. Even China bought $5 billion worth of chips.
All right, beautiful.
So, yeah, I think the future for tech is good. I mean, buy opportunities would come at dips. I wouldn't chase strength, though.
Right. Mish Schneider, great to see you. Thank you so much for being on with us today. Mish Schneider of MarketGauge.com. Thank you. I want to continue talking about the market, your investments. Anthony Siccaro is with us, President, Providence Financial and Insurance Services. Anthony, thanks for being here. I know you say a recession is something to watch. I mean, you have to be.
Tell you what, that Tesla Cybertruck, that is one ugly car. Oh my gosh, that's so ugly. Ugly. I mean, yeah, I get the whole futuristic thing, but man, that's an ugly ass car. NVIDIA, wow. All I can say about NVIDIA is wow. If we achieve any of these targets that was updated today, wow. I'd be impressed. I will be impressed if we hit any of those targets in the next few weeks. Nice.
Okay, so what do you tell investors? Because you said for younger folks, they can look for dividend payers, right? But for folks that are on in their years, maybe approaching retirement, a different picture, right?
Yeah, I think for AGs, it's going to be focusing on the income, focusing on the dividends or interest. If you are younger and you're getting dividends, you're getting paid to wait, and you can dollar cost average those dividends back in, and over time with the volatile market, even if the market is flat over the next decade, like a lot of people think, well, at least you're getting paid to wait. If you're a little bit older and you're actually taking money out of your portfolio, then by investing in dividend and interest producing investments, you can live off the income, which doesn't affect your shares. You don't have to sell shares which then means it doesn't matter what volatility there is because you're living off the interest and dividends.
Right, understood. Tell me about Jackson Hole. You know, this is the economic symposium. It begins on Thursday in Wyoming. Everybody's waiting to hear what Jay Powell has to say on Friday. What are you listening for, if anything? I mean, where do you think the Fed goes?
Well, with the core inflation still in the mid fours and their target rate of 2%, I think that they're going to raise rates. I don't think it's going to be 50 basis points in September. I think they're going to go a quarter in September, and if that doesn't cause inflation to come down dramatically, I think they'll go a quarter again in November. I think they have to do that. They've said many times in the past, Jerome Powell specifically has said it's the lesser of two evils. You know, what do we want to do? Do we want to raise rates so fast that could cause recession, or do we want to not raise rates fast enough and inflation gets out of control? And they have chosen that the former is the lesser of all evil. They would rather have a recession than inflation that is just rampant. And inflation has come down a lot. We've made a lot of headway, but they're still 2.2% above what their 2.7% rather above what their target is. I think they're going to keep raising rates. I think they have to keep raising rates, especially because they got it so wrong the first time. And nothing says that inflation is going to stop here. If they don't keep being aggressive at it, inflation could turn around and start going the other direction, and they don't want to see that. I think it's all going to be about.
All right, so we got a 3-candle reversal on Tesla. Thank you very much. Grover, thanks for the chart. It was a really nice chart. As you know, I shared it on Stocktwits. I made some Maryland crab cakes with a recipe I found online. I found the key is you got to have really big chunks. They have I don't know if they're still there, but they have a restaurant in New Jersey called Legal Seafood. Man, they have the best Maryland crab cakes outside of Maryland, of course. We got Tesla's about to break out here. Tesla's about to break out. Tesla about to go.
Right, and then for the folks that are closer to recession or in recession, I mean, you have very high bond yields at this time. You know, everybody's running into the market. Money market funds, we've seen that for inflows. But the 10-year, the 30-year are at the highest levels, you know, in over a decade. That's easy to say.
Yeah, I mean, that's going to create conflict. That's going to create conflict for the NASDAQ, right? That NASDAQ.
Okay, Tesla. Tesla looking good. Beauty. ABCD pattern. ABCD pattern on Tesla. Now you got a D. Well, everything is working on Tesla. I don't want to jinx it, but everything is working.
Equity investors have a place to go other than equities for income, and that's the significant difference between now and a year and a half ago.
Yeah, and where does the China story fit in? Because I know trade has come down with China. We have tensions increasing. You know, Japan, we're seeing growth there. We're seeing in India 6% growth. I mean, there's growth in some of these other countries, but when it comes to China, and an area where a lot of our companies are sort of counting on some growth there, or at least some demand, it's just not happening. Anthony Scarra, what are your thoughts? Final thoughts?
Yeah, I think you want to stay away from China as much as you can. You know, the fact is that when it comes to our inflation on our end, that's not good for them because it costs more for them to buy our goods and services. It costs less for us. And that whole China scenario has actually had a dampening effect on the consumer when it comes to inflation because so many things come out of China. But from a geopolitical standpoint, you have to keep that
All right. So, yeah, looking very good today. Congratulations in the trading room. Most of you are on the right side.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a video when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before
Mm-hmm.
proud of offering a good product at a fair price. I think he'd be extremely proud of me.
All right.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network. At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern.
Okay.
Every morning, every trade.
Back up to the highs. Let's see if we can blast through 4,400. That'd be nice.
In-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to
Tesla high of the day.
on the Schwab Network.
Cool. All right. X. Yep. I was just gonna put that on. I was just gonna type that.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. There's a big event on everyone's calendar this week, and that is Jackson Hole, Wyoming. The economic
All right. We've got an ABC looking for D on NVIDIA on U.S. Steel. I went ahead and bought some September calls on U.S. Steel. This time a little bit closer to the money. Okay. On the dip here, I bought some September calls. I'm hoping that we're gonna have a resolution this week. October. I bought the October 33 call. That's a 45 delta.
August, September, and then as you said, Jackson Hole's coming up on Friday, and that's what's got all our attention. Ironically enough, when we were Jackson Hole last year,
45 deltas
he spoke
at
very sternly in
33.
with like padded walls and not this bucolic setting we want to see at Jackson Hole. He kind of put fear in the market, and ironically now we're 43.25, the level we're watching here in the S&P 500.
Yeah, definitely stubborn.
From the upside to the downside. So let's see what Hal has to say. I think we're retracing.
Mm-hmm.
Somewhat healthy, but there are a few things that have skittish, and we'll keep an eye on those.
Cisco, no follow through. Okay.
Yeah, right now I think we're going to pause. I think what Powell's going to do is he's going to
KDF Pharmaceuticals.
as crazy and as negative as it was.
All right, so that got above 30.
Victory lap by any means, nor should he. But there's going to be work to be done. Let's look at the continued labor force that come in. We'll take it point by point, economic data point at a time. But I don't think he's here to scare the market. I think he's very happy with the way things have gone and the way the market's reacted. So I'd be surprised to see him do something.
Looking for a higher low in the S&P. Looking for a higher low to print right here on the 5-minute. 4,400 is a major level overhead, so that's resistance. 4,400.
I'm concerned that we could see growth stocks take another leg lower as rates climb towards maybe 5%.
Yeah, I agree with you, Corey.
And you take away the inflation rate, look at the nominal rate. I mean, that's what people are really focusing on here. And the idea is that inflation is here to stay, at least for the near term. And
we're likely to see another 1 or 2 rate hikes from Jay Powell and the team there. What about different sectors? How about something like healthcare? That's a group you really like. I know there were certain names in there, UnitedHealth, J&J, Merck, and Amgen that were sort of highlighted. But tell me a little bit about this group.
Yeah, healthcare, if you want to be a little defensive, I think this is a perfect sector to go. We've talked about rotation, and now we're starting to see some of the bigger healthcare names start to catch a bid. It's a mishmash. I wouldn't touch a Pfizer right now, which is down 27% year to date. But there are stocks like United Healthcare that are in the midpoint of a range, just starting to get healthy. It's the biggest weighting in the Dow. That's at 500. It could make a run towards 52-week highs at 550. But Amgen of those is the one that I like the best. It had a nice breakout after its last earnings. It's having a little healthy consolidation, but I think from a risk-reward setup, you have stocks like J&J, which tested a nice level today after it diluted from the Kenvue tender offer this morning. That's holding, that you can get into these names, and if you are a little skittish on this market, this is a good defensive way to play it. And overall, I am seeing a nice rotation, and then Merck is another one. It's actually flat year to date.
All right, looks like we're going to get a higher low. It looks like a higher low is printing right along ATR, that green line. We've been on a buy signal since 12:10.
So I'm really looking forward to that call and the guidance.
Yeah, and I've heard some more good things about it more recently than not. They own Bloomingdale's, which seems to be a bright spot for the company. Names like Affirm and NVIDIA are on your radar. Why?
Well, everyone's watching NVIDIA. I mean, it's one of the Magnificent Seven. They report earnings on Wednesday, and that will move markets, especially the NASDAQ, which has been under pressure. It already corrected 12% from its high, so that's a healthy little retracement. And then, after last quarter, how can you not watch it? They crushed it last quarter. Their guidance was pretty good, too. So let's see what they have up their sleeve, because this could be a very big moment for the semiconductor stocks overall and the NASDAQ. It could be a good moment. Jensen Huang is yet to really disappoint. Up 24% last quarter, 14% the quarter before that, and everything was positive the quarter before that, and they crushed it. So I assume the guidance, which was very positive, was still undercutting what he thinks they're really capable of. So I think NVIDIA could surprise. Will it follow through and get to old highs, make new highs? That's the question. And then Affirm is one. The buy now, pay later stock has been under pressure tremendously. It is up 50% year to date. 13.5 is a nice line in the sand. It's trading just above that. You could get a nice pop, but every time we see something happen positively in the stock, this $19 level, which would be a nice quick pop, don't get me wrong, it fails to hold. So over the long term, it's still 91% off its high. I don't think the buy now, pay later story is really to be told. I prefer Visa. I prefer MasterCard. And if you're looking for a quick trade, Block is looking interesting right now. It tried to form a double bottom. We'll see how it closes today, but it's an interesting one.
You mentioned Zoom as you were coming in on the set, and so, it says Zoom expects to post higher revenue. I mean, Zoom is flat year to date. 1 year is down 35%. What do you think? Is there anything you're watching there?
Zoom is one of those stocks that we all know. It's a verb in our common language now. We all use it. Ironically, that they revolutionized work from home, and now they told everyone to come back into the workforce last week. I want to hear what they talk about on that. But 62 to me is a level. If it does miss, if it does sell off, there are some big lines in the sand. Risk-reward setups are kind of scary right now in Zoom. I would wait to see how it plays out. But the stock, since it went public in April 2019, has only closed below 62. That's when it closed on day one. It was priced at 36, closed at 62. It's only closed below there 6 times. If it breaks that, there is a big gap to fill. But on the other side, it's consolidated so much. If it can close above 70, then you have a nice little return and a good upside there. But it's one I would wait to see how the earnings shake out, see how it closes after day one, and then get in the stock.
So are you bullish more long term, just quickly?
Definitely bullish. I think the seasonal headwinds are here. I think the fourth quarter is set up for us to move higher. I think Jackson Hole will hopefully be a non-event, but last year it wasn't, so I'm not going to say anything against Mr. Powell.
Yeah, right. You have to wait and see. Okay, Jay Woods, thank you so much. Great to see you, Jay Woods of Freedom Capital Markets. Thank you. Still ahead in the second half of our show.
Okay, so I don't think we're going to get through 4,400. By the way, market's trading right now. We know that gamma major level is 4,400. Boeing, I had some Friday calls. They expired. Didn't pay a whole lot for them, but they expired. Boeing, looking for a follow through and start trending. So here's the deal with Boeing. If you guys are trading Boeing, see Corey posting. All right, here's the deal with Boeing. Okay, so we came out of a 7-month base. Okay, so we popped through that, consolidated. Now I'm waiting for the next breakout. The breakout above 243, 243.25, 243.50. When it does that, I'm looking for the next target, 270, 280, 290. Okay, this pivot over here. Once we break above 243, I'm going to take some leaps and look for January leaps and look for a test of 280, 290. Okay, so had calls last week. They expired worthless. Looking for leaps once we get above 243. Okay, so that looks good. Thank you, Corey, for bringing that to my attention. I forgot I wanted to cover that. Boeing's got so many contracts that it's signed. It has to have like 700, 800 planes under contract. They delivered like 100 so far. They also, not just the 737 MAX or whatever, 757 MAX, whatever the number is, the MAX, they also do military applications and space. So nice to see 2 quarters in a row. Free cash flow positive. The last time they were free cash flow positive was 2018, 2019. And we all know what happened after that. They had the crashes. They had all sorts of things go wrong. The stock pulled back over here and went through consolidation. We had a couple of times we made some bullish trades, made money. Over here, 2021, 2022, not so much. Got this W-shaped pattern. We broke out. November of last year, there was a company shakeup. They consolidated divisions from 8 to 4. What followed was volume. Institutions like what the management had to say, and you had this really nice bullish breakout in October, November. Then we went sideways for 7 months. Now we're breaking out. So Boeing has lots to look forward to. All right, so here goes S&P. So looks like we might even test 4,400 today. We got close pre-market. I think we were 4,407 on the futures. So anyway, I made some Maryland crab cakes. Man, those suckers turned out good. Perfect. Really? John Warnock is gone? Oh, wow. That sucks. Thanks, Rhino. Wow. And Adobe looked really good this morning. Adobe. It's consolidating. Okay, so look at Adobe. You know, Adobe PDF, Adobe Photoshop, Illustrator, Creative Suite. I'm well versed in Photoshop and Creative Suite. Illustrator. Love those applications. Nice looking pattern though. Weekly. Okay, building the right side of this pattern. It's above the 10 EMA. Taking a pause for the last few weeks. Once it breaks above 552, 553, that'll be an indication that the next leg higher has started. This is a bullish side of this pattern. Bearish side over here below the 10 EMA. You don't want to be long below the 10 EMA, except for maybe counter trend trades, very, very brief. Just as a rule of thumb, I like to be out when we're below the 10 EMA, looking for longs when the 10 EMA gets flat, and then long when the 10 EMA is up and to the right. Look at Boeing, right? 10 EMA is up and to the right. What about Applied Materials? 10 EMA is up and to the right. What about Tesla? And so on. Okay, Tesla below the 10 EMA, but it looks like it's going to reverse. All right, so this is a counter trend trade in a bullish trend. Okay, you've got a 3-candle reversal. Morningstar Doji, very bullish pattern. Now, the only thing that could be more bullish now is for 2 more bullish candles like this or 3 white soldiers. Okay, the reverse of 3 black crows up here on the top. Okay, so that reversal right there, Grover's scripts gave a sell signal. Okay, so S&P looking good. We're driving up to resistance, 4,400. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. What's the dude's name that used to trade, that was big into chess? It's got to be 20 years ago now. He got shit-faced drunk in Florida. He drove his car through a bus stop. You remember that guy? I forget his name. He must have changed his name or whatever. He got really shit-faced down in Florida. He was a pretty well-known trader. GTO knew him. He was a chess grandmaster, I think he said he was. Or at least a master, chess master. Forget what that guy's name was. But yeah, he got shit. He was at the Fontainebleau or something like that. That rings a bell, Fontainebleau, because there was a Fontainebleau in New Orleans. There was one in Miami or someplace. That's the thing about social media. You screw up on social media, man, your life is over. You know, you gotta be straight and narrow. Yeah, nobody's selling. You're right, Mondo. Probably won't. NVIDIA. All right, so we're making new highs, 4,400. Tell you what, if we get through 4,400, lickety split, that would be awesome.
GAC at 6%, Volkswagen at 4.7%, and SAIC. So 3 of the top 5 selling EV brands globally are Chinese. There's a changing in the guard here.
Yeah. Take some water. There's so much going on. We had a great conversation with the chief of General Motors today. They're doing their push in EVs. There's concern about strike by the UAW. They talked about how much inventory that they have to keep on hand in case of a strike. Where does that fit in for the Tesla picture? Could one man's problem be another man's, win here? Where does that fit in here? And does Tesla have enough inventory?
I think Tesla will have inventory. Look, they've got 5 plants in full production now. They just broke ground on another plant in Monterrey, Mexico.
Look at this market. Beautiful. I mean, complete contrast to Thursday of last week. We got a nice bounce on Friday. All right, let me go see what we've got going here. All right, NYSE. All right, NYSE update on NYSE. Are we starting to turn yet? Starting to turn.
I think a lot of people are not going to feel comfortable with that. And the other big question is Tesla's lead in software that drops 99% profit margins to the bottom line going to outweigh China's big advantage in low-cost batteries? Those are the big questions. We'll see how it shakes out.
Yeah, understood. At this point, what are some of the things that, when we think about Tesla, we think about AI, we think about batteries. When people, obviously the Cybertruck's coming, and I do want to talk about that. But what is Tesla, even software services? When you think about Tesla, what do you think is going to drive Tesla to the next, higher price point for shareholders? Because there's a lot of folks that are out there that think it's worth less than $100. Then you have those who are very positive on Tesla. Where do you think it's headed and why?
Look, I think it's going to go up. And what people need to understand is Tesla has 4 core advantages. One, they're one of the first to take battery production in-house. They have lower cost batteries than virtually anybody but the Chinese. Second, they've got an advantage in what's called over-the-air software. That gives them a big advantage. Third, they took their dealerships in-house. That gives them a big advantage over others years ago. And fourth, they've been a leader in the robotization of manufacturing. They will manufacture cars in a fraction of the time. They've got large stamping machines. They just have fewer parts in their vehicles. But if you step back a little bit and look to the not too distant future, Tesla's got this other huge advantage no one's talking about yet, but they will be soon. Tesla deployed 3.7 gigawatts of energy storage in Q2. That's enough to power all the homes in Chicago and Los Angeles. Their mega-packed batteries combined with their AutoBiddo software enables them to provide turnkey solutions. In a nutshell, Tesla is quietly becoming a global utility. Now, Q2 energy revenues were only, I say only lightly, $1.5 billion, 6% of total revenue, but they're growing 222% a year. If they can keep up and expand their energy business for another year or two like this, their energy division may be their secret weapon.
Oh, okay. Steve Wesley, thank you for that, of the Wesley Group. Really appreciate it. Thank you, Steve. Great to see you. Love having you on the show, always. Still ahead, our panel is ready to talk all about Home Depot and Lowe's. So we saw the numbers from Home Depot last week. Stock closed higher in reaction, but has since declined. Want to know what we can expect from Lowe's? That's the competitor, right? That's next here on the watch list.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus, the satisfaction.
All right, so S&P. Jeez. All right, so this has been a nice one today. 4,400 major resistance.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at 2 on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Remick, for the biggest earnings coverage, insights from the smartest minds on Wall Street.
Okay, we got some sellers up at 44.10. All right, let's take a look. Right, really good day. Take some profits off the table. Feel good about your trade. Keep some on for tomorrow, just in case. We've got a little bit over an hour and 10 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a bright, sunny, well, not anymore, a nice day on the East Coast, the best coast. We're right about to smack into 4,400 resistance, major gamma level. Okay. About to smack into gamma.
Thank you both for being with us. Brian, you're not on set, so we'll give you a little head start. Your thoughts? In fact, you have an outperform rating, and that one is on Lowe's, right?
Yeah, that's correct. We have an outperform on Home Depot as well. So, look, as I think about this report tomorrow, which is before the market open, I think we're gonna hear from Lowe's something very similar to what we heard from Home Depot. And in my mind, that was, things are still soft, but they are not getting worse. They might be getting a little bit better. The stage is still set for a much better, more solid, if you will, 24 and 25.
That before I get to Seth, what do you think will actually drive a better 24 and 25?
Well, this is going to be a silly answer to start off with, but I think the first answer is just time. I think right now we're in this post-pandemic reset for home improvement. We're working off of, there's been outsized demand through the pandemic. I think we're getting past that. So time.
Okay, Tesla.
I also think, look, inflation.
Tesla still pushing the D in ABCD, pushing the D in ABCD back above 230. All right, looks good. Tesla looking good. Okay, I got a feeling people are going to start taking profits up here. If we close above 4,400, like measurably above 4,400, like 4,420 or so, that would be super bullish. Nice catwalk. Good job. Nice work, Steven.
Discretionary piece is soft. We expect continued negative comparable store sales.
What do you think comes into this? I mean, whatever negative right now, could that last? I mean, I know we have high mortgage rates and people are using credit cards and things like that, and actually credit is getting tighter too. But why do you have a neutral as opposed to an outperform?
Yeah, we think it's going to remain soft for at least a couple more quarters. While the medium-term outlook is good because of those soft comparable store sales.
All right, so man, I would love to see a close above 4,400. Then we could look at 4,425, 4,450. That'd be awesome.
Consumer to afford to borrow and spend on their homes. There's low consumer confidence for home improvement spending right now. Professional backlogs are down materially year over year, and the housing market's not ready to rebound.
Yeah, understood. Brian, when you take a look at the housing market, we still have relatively high prices. I know we've had some fluctuation. Rents are still very high. Where does that all fit into the? I mean, you need the big housing picture to make all of this work, right?
Yeah, first I would say I was listening to Seth's comments. I think he's right on. I agree with exactly what he's saying.
Nice reversal.
Equalizing factor. He didn't mention this is the valuation. So I agree with him very much that there are these near-term headwinds. I think, like he said, at least a couple more quarters. But in my mind, the equalizing factor on Lowe's stock is the valuation. I think a lot of what Seth is talking about, what I'm reiterating Seth's saying, is baked into the stock. Now, as far as housing goes, look, I mean, there's a funny tie between housing and home improvement retail. It's not as direct as maybe the market likes to believe, but I tend to think And again, this every time I say this, I realize how silly it may sound, but I tend to think these higher rates are now actually a positive for home improvement retail, because what they're doing is they're keeping homeowners in their existing homes, and then while those homeowners are staying in their existing homes, they are more likely to undertake projects. So I think the home, as far as one time the housing market, I think these higher rates are actually a positive for home improvement retail.
Right, understood. And you have Home Depot, you have a 360 price target. Seth, you have a 350 price target. That does make sense because people have such a great rate that they have secured. It would cost them a lot to sell their home, maybe pay more for a lesser home coupled with higher mortgage rates. Tell me about Home Depot versus Lowe's. Which one do you prefer and why?
Yeah, and first on the question of people on their mortgages, staying in their homes, spending more on home improvement.
Sure.
We're not necessarily seeing that right now. Consumer confidence on home improvement spending is down. Backlogs of projects are down. And consumers are not taking the savings that they have and spending on the home like they were the last couple of years. So that pressure point is one that's not going to resolve in the next quarter in our view. But when we consider Home Depot versus Lowe's, we prefer Lowe's. Lowe's has a bigger exposure to the do-it-yourself business, and that business is doing better relative to the professional business that's done in the last couple of years. And the company has stronger margin drivers for the next 2 years. And valuation is also attractive relative to Home Depot. So those three things make us favor Lowe's over Home Depot.
Yeah,
All right, getting rejected.
You said, Brian, final thought. Which one do you prefer more than the other?
Well, I agree with Seth. I like, for those exactly the reasons he laid out, I like Lowe's better too. Cheaper valuation, what I call is more operational slack within that model. They still have lower operating margins, more potential for operating margin improvement. But I'll say this somewhat jokingly. I mean, I've been saying that for a long time, and Home Depot stock is, the stocks tend to move together. So I believe that once we start getting this all clear, as money starts to flow back into these names, as maybe we get, as a market, we get a little less concerned with some of these nearer term pressures. Home Depot is going to be a recipient of these money flows just as much as Lowe's. But to answer your question, I like Lowe's better.
Brian Nagel of Oppenheimer & Company, Seth Basham of Wedbush Securities. Thank you both for being with us. A great preview of Lowe's today and also some comments on Home Depot. That's going to do it for us here on The Watch List. Thanks for being with me. I'm Nicole Petalides. I see you every day here on Schwab Network, 11 a.m. and 2 p.m. Keep it right here. Oliver Rennick, Market on Close, is next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was her, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago
And from the heart of Wall Street at the New York Stock Exchange.
up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Okay, we're just below resistance. Would love to see the call walls. I'd love to see the call walls shift higher.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
All right, let's do this. Tesla, let's take out the high.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. We have 1 hour left in the trading day. Stocks are doing quite well. The NASDAQ is starting this week with a battle as bulls are showing up finally. Hopefully not using all the ammo if you're long in the market, because we've got a lot ahead of us to get through over the next 5 days. That includes, but is not limited, of course, to Jackson Hole and Jerome Powell, to NVIDIA, the king of the AI trade, which today is doing a lot of legwork again. So there's certainly some optimism shining through despite a sell-off in bonds and a fresh new 1-year high, which is also more than a 15-year high in the 10-year yield, which now rests around 4.3.5%. Stocks finding a way through it, very, very encouraging, especially
If we close above 4,400, that'd be huge.
looked like we were going to do as you might expect and have an opposite move to yields. Didn't quite get it though. Still 2 out of 4 indexes down, but the fact we've had that very reliable relationship between the treasury market and stocks, when yield goes up, NASDAQ and tech has been down. That has been the hallmark of the last
Nice move here.
stock market, and of course, the main theme of last year's bear market. So to get a little relief from that relationship today is definitely a very nice start to this week. If you're looking for the market to firm up, it's about as good of a beginning as you can ask for. We've got a great show coming up. We're going to be talking about some of the leaders of the growth trade that is working today. We'll spend some time, of course, with NVIDIA, the chips, and Tesla, some of the EV trades that are working nicely as well. Gary Black, big time Tesla bull, will be joining us, but also an NVIDIA bull. We'll talk about Jerome Powell, the pickle of the Fed, with William Isaac joining us at the top of the show, the former FDIC chair. So we got a lot to get through in the first half here. That's just the first half. All right, let's go into my movers. And of course, let's start with bonds. Even though stocks are having a nice day, that is the big story. Continues to be the pressure in bonds and the persistent climb in the yields. That first got to that 1-year high with the 30-year last week. And now we're seeing the follow on to the 10-year. Kind of makes sense that we should just keep moving down the duration and the spectrum of bonds towards the shorter end, as we see now economic data generally impressing. Most of the articles you're going to read about the economy right now are going to be very positive in tone. I was hearing a very well-argued case from Connor Sen from Bloomberg's editorial pages this morning about why the persistent strength in the economy can continue. Pointing towards
There it goes. There we go. 4,400. That's great.
That is definitely going to be the highlight. One thing that's very important here, especially for the bond market, is that the spread in yields is acting very differently from what you might expect at quote-unquote this stage of the cycle. I think this is a very important thing just to come to grips with real fast, which is that the yield curve is widening again, but for very different reasons than it did earlier in the year. And I think this is the most important thing to consider as we prepare for Jerome Powell. This is the chart of the 10-year minus the 2-year. The spread a lot of folks watch to get a gauge on how good the economy is doing. On the left side, when regional banks got hit in the spring, the yield curve popped, and we saw that big rise.
NVIDIA just gone ballistic.
Certain the Fed was going to have
Wow. Shit.
Probably going to need to update his language a little bit, which over the last 4 months has been more about worries about the economy, the worry about lagged effects of their previous hikes. But now the market is saying that we actually have growth potential. The yield curve on the right side of that chart is widening out now from the long end yields going up. It's very, very important. This is a market now that is pricing in growth for the economy at a rate nobody really expected. Atlanta GDP estimating 5% plus, so even if we fall short. And so you've got the literal exact opposite message from the bond market than we had earlier in the year when the Fed really became convinced that they needed to pause, to slow down, and to be a little bit more gentle with their process. That's the context I think is crucial here this week going into Jackson Hole. Are we going to have to see a bit of admission from Powell and team? They were a little too cautious on the economy, which now the bond market tells us is heating up again, potentially producing some problematic inflation. The dollar is not doing much today. That's what you want to watch to know if Jerome Powell is going to have to take a more hawkish tack. Yields going up, that gives us a message about growth and potentially inflation too. But if the dollar goes up alongside it, that's telling us more. It's telling us that the Fed is probably going to have to once again lead the global stage on fighting inflation if that becomes an issue. Today, though, the market has some different things on its mind. It's got NVIDIA on its mind, the possible saving grace of the bulls. Chart looking pretty darn good. Look at NVIDIA there in the top right. Really amazing. A lot of the chip makers, especially in NVIDIA's closest peer, AMD, have given back the gains they made from AMD's last earnings. From NVIDIA's earnings. Obviously, NVIDIA hasn't. So you still now have this continuation of strength. We're pushing right back to the highs after today's rally, after the stock caught itself last week. So there's a major now multi-day turnaround happening going into this earnings. Hopefully that doesn't use up all of the gasoline that investors are going to need to get this. That's a bridge we'll cross when we get there, but it's a heck of a start to the week. A couple wild cards in watching. Number one, crude oil.
We continue to trend along the 105, trending along the 105.
The upside to have to worry about inflation? Possibly not. Possibly crude oil doesn't play a major role in the marginal surprise to inflation right now. I'm also watching Bitcoin too, because the wild card utility of Bitcoin still, I think, will be one that is in the camp of risk on. And so if BTC breaks down further, we should probably be on alert for stocks to do the same. But note the trend still holding generally of higher highs and higher lows for Bitcoin, even after last week's drop. So we will once again keep an eye on big moves, not the small ones for Bitcoin. You got to watch for big moves. And today, you're just not getting it. BTC little change. This is basically an NVIDIA story. I got Renita Young and Kevin Hanks here with me in studio. Let's start there, Renita, because it seems like some of the commentary is finally catching back up to NVIDIA. We had all these positive notes last week. It sort of quietly bottomed, and now this week to start off the day, stock's jamming.
It is. And so we saw this morning, we were talking about two specific analyst notes that came out. And since the morning, it's gained another price target hike.
There
This
you
one
go.
came from BMO Capital, who raised the price target to $550 a share. $450, that's around an 18% move to the upside, maintained an outperform rating. And just to remind us all of the numbers, HSBC raised its price target to $780 a share. That's around a 68% move to the upside from where it's trading today. KeyBank raised its price target to $620 from $550, around a 33% move to the upside or so from right now. But it's a similar message among all of them. They feel like the AI trade has not been fully captured in the shares, and that this stock has a lot more to go when it comes to it, especially as AI normalizes in the market. Other companies catch on, and other companies devote spending to the AI trade. They also raised their fiscal expectations for the company as well, like HSBC raising the full year 2024 and 2025 estimates. Nothing but positive. We did remember about how ARK Invest did divest of their shares in NVIDIA, saying that it's overpriced. And so one would wonder if other investors would go that route But so far today, we haven't seen any of that. We've only seen everything to the upside.
Amazing that we're getting to 2024, 2025. I mean, how far out are they going to push up the expectations? The confidence in the stock is oozing right now. Kevin, is that a setup for success or disappointment?
Well, there's a term that was used in the past called irrational exuberance. I hate to pull that one out of the archives, but you know, you had me on this morning, Oliver, and then you had a guest on right after me. And he said he's long puts in NVIDIA.
Right.
Why?
Purpose.
Valuation, right?
Yep.
And the valuations are, I don't know if they're gaudy, they're ridiculous.
Yeah.
But this company put up ridiculous numbers last quarter and growth and guidance. So the question is, how long can this last? Remember, because take AI and take it out, move back 12 to 18 months, put in streaming. Take that out, move back 12 to 18 months, put in crypto. And
don't forget metaverse.
And yeah, exactly. So, you know, these sectors go through euphoria trades that never last. Remember, Netflix is the clear winner in streaming, and the stock's $250 off its high.
The thing with this last earnings, though, overnight, the valuation of NVIDIA actually went down because their guidance lift to the bottom line was so huge. But that's where I feel like the perspective comes in again. Now the analyst expectations have been ratcheted up even more. And can you get two earnings in a row where your entire outlook has to be refreshed to the upside? I mean, it just seems like it's such a high bar for them to reach. Just not compared to anybody else in your group, not compared to any of the software companies that might have their own AI tool. I mean, the hardware shows us, but to themselves, to compare to last quarter, that's such a high bar to reach.
Last quarter was such an incredible move through the expected move. It was incredible how far it went from what the options volatility thought would be the expected move, which was not a small number, by the way, and it blew through there. Now, can you do that again, or are you setting up everyone with high expectations up for disappointment? I have no idea, Oliver, but this is going to be fun Wednesday to cover this.
Also, a little sleeper today, too. We had Tesla up 7%, revving up again. You know, not the same compelling setup chart-wise, because it just rolled over almost $100 in the last 2 weeks since earnings. But still, it's a nice pop today.
It is, especially since it had been on a 6-day losing streak, right? Finally popping that losing streak if it closes up by close, which it appears to be. Now, Baird said that those recent price cuts that have been happening have actually had positive impacts on margins, just as the company decided that it would do, sacrifice the prices for the moment in favor of better margins. And that'll be the Tesla in the second half of 2023. Now, the analyst over at Baird in this bullish note also said that there are several potential upcoming catalysts for Tesla. That includes the Cybertruck launch that everyone's been waiting for since the day before forever, right? And then a wider scale adoption of full self-driving vehicles that continue growth.
All right. Looks like you're going to maybe close above 4,400. That'd be nice. 4,425 would be the next level I'd be targeting. We're very extended. I'm not buying calls at the high of the day. That would be ridiculous. The buy was this morning, or in the afternoon, I should say, right around 12:10. We got a buy signal on several indicators, looking for a follow through and a push higher.
Self-driving vehicles, which is like the most incredible AI potential, but the market has been so focused on the chip makers and language AI and generative AI and kind of the chat element of it. It kind of feels like Tesla, strangely enough, sort of fell in the background of that conversation.
Oliver, if you are a Tesla skeptic or bear or a short, what keeps you up at night is the
Look at NVIDIA. Man, NVIDIA's smoking the bears here. Jeez. NVIDIA pretty much taking the the high road today. Nice work.
Is what should frighten all Tesla skeptics. Well, it feels like this is where it's such a big week because if Nvidia can deliver enough to keep this story going about the next secular tech wave of disruption, that might be the only force that can compete with the might of the bond market.
Wow. I'm very impressed.
Keeping up and pushing back against the pressure from bonds because we thought this market for the NASDAQ would probably be under more pressure today based on bonds.
This is a rare event where you get a spiking yield market and higher stocks. Very rare.
Okay. Would certainly be like the golden goose that nobody expects either, by the way, if suddenly the correlation just stopped. We got higher yields and higher stocks. What a week that would be. But all right, well, it still has a lot of proving left to do. Thanks, Kevin Hankson, Renee Young. Good stuff. Let's talk about what to expect from the Fed chair and the bond market. Maybe some of the regulatory action coming down on banks. William Isaac returns with us, former chairman of the FDIC and chairman of Secure Isaac Group. Bill, thanks for coming back to the show.
Very impressive today. Very impressive. NVIDIA.
Things are not much changed since the last time we spoke. I think that we've had the problem banks that have failed, and we know about that. There don't seem to be any banks on the edge right now, but I wouldn't rule out more bank failures. I think the economy is drifting, and I'm not sure what it's doing. I would think that the economy would be showing a lot of softness, but it does and it doesn't. So I don't think Powell has. I said I wouldn't tell him what to do, but I don't think he has much reason to change course. I think things are pretty much the same as they were 3 months ago.
I think is to thank for the higher expectations for GDP that we see from a place like the Atlanta Fed right now. They're saying we can get to 5% possibly. I mean, no one really had this in their playbook at this point. I think a lot of folks came into this year thinking it was just naturally time to slow down. Is that like still our deficit spending working its way through the system, or COVID stimulus lingering around? How come we're hanging on so well?
Well, I think there's still a lot of money in the economy that needs to be dealt with. I mean, the PPP program was incredible. How much money was put into the economy in such a short period of time. I mean, we got a number of other multi-billion-dollar, even trillion-dollar infusions of money. So I think there's a lot that needs to be soaked up, and I don't think the economy is showing amazing strength. I think this economy is probably softer than we realize it is. There's so many people working from home. We don't know how to account for that even. So I'm not an optimist right now. I'm on guard for problems ahead, and maybe I shouldn't be. Maybe I'm wrong, but I really think that it's a time to be cautious about what we're doing.
How do you think the government has handled the bank risk that showed up earlier this year? Is that something you think is past us, or if rates blow out to the upside again, are we going to see other financial institutions struggle with pricing their securities in the bond market again?
I don't think that the troubles in the banking industry are all behind us. There's still weakness, and particularly in commercial real estate. There's a lot of commercial real estate that is not doing well right now. I'm not saying we're going to have a collapse. I'm just saying
Wow, NVIDIA just killing it. Jeez. Yikes. What is SMH doing? I sold SMH too soon. That's okay. SMH is still going. Wow. Nice follow through. So if you're still in SMH or NVIDIA, talking about a short squeeze. NVIDIA still going ballistic here, pulling away from VWAP. Wow. NVIDIA up $34 on the day, 8%. Very pretty chart. What's US Steel doing? All right, continues to push higher. Tesla near the highs. Tesla.
That's the case anymore. Do we need to kind of shred the textbook a little bit on what financial institutions are rooting for economically right now? Do they want to see the bond market sell off?
I'd hate to get into all that, but I would say that banks need to be careful about their portfolios. I'm sure that there are banks that have portfolios that have more long bonds in it than they should. I'm sure there are banks that have a couple of real estate in them that they're going to have to be cautious about and take care of. I'm not predicting major issues.
It's really this paradox. If you look at what has happened since that, what appears to be a very benign CPI, it looked like nothing but straight up. That was 50 basis points a year ago. And I think what's important when you put this in some historical context, the question we're getting from clients is, why would rates still be going up if inflation's falling? And our answer is very simply, when you look historically, rates tend to trade at a premium to CPI. I think the historical average is something like 200 basis points over headline CPI. So we posed the question in our work this morning, is a 3% CPI number and a 5% 10-year yield number that out of bounds? Not at all. Chances we could overshoot? I think absolutely. If you just do a pure kind of
Applied Optoelectronics at the highs of the session. AAOI, highs of the session.
I think where this is manifesting itself is how the leadership complexion of this market, I think, has changed pretty dramatically over the last 12 weeks.
Interesting. Meaning we were reliant on FANG and now not as much, or
yeah, I mean, if we look since that kind of July CPI time,
X clearing 32. Okay, looks good. Maybe we'll get a little run into the close. Thank you, Corey.
I think that's a bounce in the downtrends. I think ultimately the bigger message is that energy has reclaimed the flag of leadership here, and I think rates have a big part about that.
Right. So you're looking for some loss of momentum in technology in particular.
Yeah, and I think we've seen it. I mean, just go stock by stock. All these bellwethers have, in many cases, lost their 50-day moving average to the short-term trend. More and more are starting to lose the 200 here as well. So I think when you think about this in terms of where are the most attractive technical setups, what was tech for a good chunk of the year, I think that's deteriorated in a pretty meaningful way. I mean, think about the big names. Apple below the 50-day, Microsoft below the which is the last holdout here. They say the best ones fall last. Expectations are really high.
Intel. Okay, looks good. Intel.
Yeah, it's funny. I think both of these statements can be true.
Okay, that looks good. Needs to get back above 35 Intel.
We forget that 15, 20% corrections are not abnormal, particularly in an environment where interest rates are more volatile. So I'm kind of thinking about this more in like 1990s, 2000s, or even you go back further in time, 1960s type environment where volatility in rates leads to more volatility in equity.
Finally, home builders.
Yeah.
You think the sledding gets tougher from here?
Yeah, I think you had the first real meaningful crack of what was a very resilient group last week. And it's a reminder that there's no untouchables in this.
Rivian, high of the day.
You broke the 50-day on Lennar. You broke it on D.R. Horton. There's a lot of air between where they trade today and the 200-day. I think ultimately lower.
Carvana.
That oversold. They can probably bounce in the short term.
Yeah, a lot of these look good. Carvana. Nice trend in Carvana. And reversal off the lows. I have some covered calls. I'll probably roll those up at some point. I got $6.14 for the December 50 call. Carvana. Sold the, let's see, 12.15. 50 call. Okay, so 4,400 level. Looks like it's going to hold for now. Right at 4,400, just above it.
Trading higher to start the week ahead of the company's results after the bell Wednesday. Stock's been under some pressure this month as part of the broader pullback for the cloud sector. But our next guest says cautiously optimistic the snowflake melt is over. City's Tyler Radke joins us. He has a buy rating on
Culminate, Tyler. Great to see you. I was just thinking, it must be nice not to be the name that everyone is thinking has to make or break the market, but you do think we've probably seen the last of the guidance cuts, right?
Yeah, thanks, Carl. So it's been a disappointing year for Snowflake. You showed how it's underperformed a lot of its peers just this month, but you look at it year to date, hasn't done much, hasn't really participated in
NVIDIA
the tech rally.
hanging out at the highs of the day. Very, very nice. Very nice.
They've been surprised by cloud optimization headwinds. IT budgets have been under a lot of pressure. We think we're nearing the end of that. We believe last quarter was the final cut. They have some interesting new products coming, especially later this year into early next, that we think investors are going to get excited about once we get through the earnings this Thursday.
It's been a while since ServiceNow really started talking about sales elongation, and certainly Snowflake has had some of that, but you're saying it hasn't gotten much worse, right?
Yeah, I think you're starting to see some light at the end of the tunnel. So one of the surveys that we run every quarter is we interview over 100 CIOs. And the second quarter survey, we ran this towards the mid-June timeframe, was the first quarter in about a year and a half where budgets hadn't gotten cut.
All right, look for profit taking. Look for profit taking end of day.
We started to see budget growth expectations stabilize and slightly improve. We're hearing similar things when we talk to channel partners, both in the Snowflake community as well as Microsoft and AWS. A lot of folks really hammered on their cloud costs in the second quarter and third quarter of last year. And so now you're starting to lap those compares. And so ultimately, we think that can support a stabilization in the growth of these companies. And especially as you get into the back half of this year, set up a much better environment for the stocks.
I wonder how you think about sort of the nature of their guidance in general. I guess I would argue Slugman is not subtle, right? When he wants to deliver a message to the market, he doesn't sort of beat around the bush with corporate speak. Would you expect him to be direct on Wednesday?
Yeah, I think he's always been a straight shooter. Now, I think the concern maybe investors have had with their guidance is it hasn't been particularly conservative or sandbagged. A lot of these hyper-growth companies will purposefully guide low to beat it by 9 or 10%. That's never been the way Snowflake has operated. Now, during the good times when IT spending was strong.
Okay, so again, that was about, 6 minutes of selling. We got a reversal candle. Let's see if, or rather a bullish candle. Let's see if we continue to see selling here at 4,400, or do we close above on more strong price action? It looks like it was just selling, some profit taking there.
Yeah, so I think in general, we are more cautious on the sector. Most of our ratings out of the 30-plus stocks we cover are not buys. We have a lot of neutrals and some sells. Among the buy-rated names, look, it's hard not to like Microsoft. It's got, a great accelerating growth story, levered to AI, probably just about as good as anyone outside of NVIDIA. And then on the growth side, we also like names like MongoDB, which we think there is a lot of upside to numbers. We have a little bit more conviction in the fundamentals. So probably call it in the third to fifth place bucket, definitely towards the top of our list though.
Right. And then is there a macro test that the names in your coverage universe need to pass, whether it's exposure to financials or AI or China or something else that sort of levers the favorites and the non-favorites?
Yeah, for sure. So I think the nice thing about software is there isn't a lot of China risk, right? I think at most you're talking 2 to 3% of revenue. So you don't really have that. Generally speaking, the end markets are very diversified, no more than 15 to 20% of a single vertical.
So this time of day, I often talk about distinguishing. Maybe I'm just entertaining myself, but I do watch the kind of selling that we have at the end of the day. If it's just 2 to 4 minutes, maybe 2-minute candles, and then we follow through and push a bit higher, then I'm anticipating that was just profit taking at the end of the day. If we continue to move higher here and break above 4,400, there's no sell signal yet, that's for sure. There is no cell signal.
Thank you. Coming up next, we're going to track some of the biggest movers as we go into the close. Christina Partsinevelos is standing by with that. Christina?
Well, Dara, I mentioned a new COVID variant and what it means for certain pharma names. I'll also have details on one potential cybersecurity deal that has
Of course, there's a new COVID variant. We've got an election next year. How convenient. You watch. Watch them try to lock everybody down again. All right, so SPY looks good. $334. Just cracked open a Modelo. Those crab cakes for lunch were good. Maryland crab cakes with big lump crab meat from the seaport. Fresh seafood. That's what's great about living near the ocean. One of the great things. Looking for another break higher. $43.64 up to 4,400. So 40 handles. Not bad, not bad. 40 handles. NVIDIA looks like it's still going to go. That's crazy. Congratulations if you took NVIDIA or had it from last week. I had NVIDIA calls, but they expired on Friday. I took some SMH today, calls. That worked out really well. And I still have some SOXL from last week. Those are green as well. So my plan is I'll probably day trade SMH again tomorrow if we're strong. Let's take a look at SMH. All right, so let's say we come into the day. Here's the start of the day over here. Okay, here is the open. Notice we move higher. VWAP is up and to the right, and we consolidate a little bit right around 10 o'clock. We pull back, and then we start moving higher, semis. So I'm looking for something similar, not exactly, but something similar tomorrow. If we do, I'll probably take some calls and day trade semis tomorrow. You know that NVIDIA is going to be all that anyone's talking about. It's a subject that everybody will be, a lot of people are watching for. You know, you'll have, I'm sure they're lining up analysts to talk about NVIDIA's earnings on CNBC and Bloomberg. So there'll be a lot of chatter about it. That'll cause a lot of shorts. If they haven't already covered, they're probably covered today. And I'll be looking for it. Doesn't mean it's going to happen, but I'll be looking for the trade. Okay, so it has to happen. It has to give me a green candle in the morning or a bearish candle, but it has to give me a green candle. And then around 10 o'clock, I'll be watching how does it break out or what? Okay, so that'll be the plan for tomorrow for semis. Same thing with NVIDIA. Okay, NVIDIA probably just going to keep going. Here's the opening range. Here's 10 o'clock. Okay, 10 o'clock. The rule of thumb is take your opening range high, take your opening range low. Where is price after 10 o'clock? Well, it didn't happen until about 12:15, but NVIDIA took off and took out the opening range high. The 10 o'clock candle is what I'm looking at right there, the high. So if you draw a line over here, you can see at 12:30, it started taking that level out and took off. Now, some of you were along from over here. My point is that I'm just looking at the price action today to gear what I'm thinking about for tomorrow. So I'll day trade it again tomorrow. Maybe some NVIDIA spreads or SMH. I already have SOXL. Plus, we could also look at some other stocks like Micron. Nobody's talked about AMD today. It's certainly not me. AMD reversed back above VWAP around 12:15, 12:30, and it's at the highs. So unfortunately, I had some AMD calls that also expired. But you know, the winners are outdoing the losses. So everything's fine. S&P continues to push higher. I just have a feeling that semis are going to be very hot this week. A lot of chatter. And then after NVIDIA earnings, maybe we'll take some profits off into earnings and then after earnings, and then see how the markets react after NVIDIA is out of the way. So that's my plan. That's my plan. I'm sticking to it. With the S&P above 4,400 and breaking higher, I'll be looking to continue this trend. 44.25, 44.50 is next. There's no sell signals yet on the S&P. Okay, we got that buy signal right here at 12:10. We got a buy signal, and we have no sell signals since. Okay, right through resistance. Wow, what a day. What a day, huh? All right, congratulations, folks. Very nice trade today. Wow. Steven, you have calls? Or are you in SPY? Nice job, Frano. Bank it. Lock it in. All right, here we go. Holy smokes, look at this market. Okay, so what were we looking at coming into today? Well, on the weekend I talked about this pretty, I won't say extensively, but I did send out a couple of tweets into the Twitterverse. Look at that line's about to turn. When it gets down to this level, like October and March, follow the green lines, we tend to see a reversal. Also, you got NYMO, which had a 108 last week on Thursday, I believe. Corey, you can verify if you will. We're looking for NYMO's minus 74. It was 108 on Thursday. Last time we got down this low was March. So everything is starting to line up. Okay, let's look at advanced decline percent. This is the way I look at the markets. You know, it's not for everybody, but I found that over the years, excuse me, it's the beer talking. I found that over the years that this particular workflow that I share with you every single day works. It is a consistent way of looking at the markets that makes money. It keeps you out of trades when things aren't the best and gets you in trades when the markets are set up. Last week we saw capitulation, and that led to people selling, just like throwing shares away. That's generally what institutions like to look for and what we look for. Once we have the setup, then we know what the money flow is going to be like in the next couple of days, or at least we think we know. We have to see it. as Sunrise Trader on Twitter would say. You have to see it first. So it's not just have the plan, but you have to see the turn. So we haven't seen the turn yet on this particular extreme oversold volume oscillator. Okay. So extreme oversold, meaning people were selling everything last week. And smart money just sitting here waiting for you to throw shares away so they can buy them up. Okay, Tesla looks good. Tesla. All right, so Tesla, I was thinking maybe we get down to 50% retracement. Didn't happen though. Tesla. So congratulations. Let's see, where's my Tesla? Daily? Is this it? No, maybe it's on the weekly. Weekly. Okay, so we almost got down to 50%. You see where 50% is? 200. We didn't get it. We got the reversal instead. So far for the weekly candle, we have an inside week. Okay, so that has to shape up tomorrow. Hopefully we get a bullish candle tomorrow. That would lead to a potential bullish trade candle on Wednesday. That would be 3 white soldiers. That'd be awesome. Okay, so that looks good. Oh, that looks good. All right, so if we take this pivot, let me just look at this pivot right here. If we take this pivot low up to the pivot high, okay, that is a 50%, almost a 618 Fibonacci. You see what I'm doing here? I'm taking confluence. So we got 382 and 618 right in this area. 618 and 50% right in this area. Okay. So now we just have to see Tesla follow through tomorrow. It most likely will. I would think it most likely does. I got some angry bears out there. Angry bears. Specifically in Nvidia and Tesla. Got some nasty comments. All right, so if you recall this morning, we had 60%, a little bit more than 60% of the NASDAQ 100 was red on the day. Now we have about 80% of the NASDAQ 100 green, maybe 75%. 20 looks like about 25 stocks are still red. The worst off today is Align, Dexcom, Siri, SIRI, Marriott, and Team Atlassian. Okay, those are the top, or the bottom 5. The top 5, the same group. All right, so I like to watch the top 10. If you have Schwab, Street Smart Edge, if you look at the top 10, they generally stay in the top 10. So if you're going to day trade, you want to see these top 10, but you want to look at these top 10 as potential candidates. You had Palo Alto, which did well, reported really weird thing to do. Reported earnings on Friday after the close. You have Moderna. They're already starting to talk about vaccines and a new variant. How convenient. Nvidia. Okay, pulling away from VWAP. That's number 3. Even as well as Nvidia is doing, it's only number 3. Tesla is number 4, above VWAP. And Zscaler is number 5. Okay, so if you just pay attention to the top 10, there goes Tesla. Tesla's starting to go again. If you just look at the top 10 or the top 5 for your day trades, I mean, that strategy alone is worth its weight. Okay. Which one, Frano? What were you trading? Which one, Frano? Oh, that NVIDIA? 457. No, that's got to be. Oh, Palo Alto. You got to be talking about Palo Alto, right? No, no. Oh, okay. Nice work. Okay, so we got another 6 minutes of selling, profit taking. Tesla looks good. Look at S&P. That's a beauty. Nice trade on the S&P.
Jackson Hole is the big focus this week. We want to hear if Powell is more dovish or hawkish tone in his commentary. There isn't a Fed meeting in August, and the next meeting is still a month away. So we think this week's Jackson Hole meeting will be important.
Was that a margin call you were?
Jackson Hole meeting last year. Powell said the
Yeah.
inflation fight.
Okay, here goes Tesla.
And he was largely talking about job losses, and the market didn't like that phrase. We've seen job losses over the past year, but the unemployment rate is still very low.
I love this room.
I think that most of the market's gains are already in for the year. Our year-end S&P 500 target is 4,500, and that's like upside from current levels. So it would mean a full year gain of about 14%.
Yeah, 4,500, and then I think your 12-month is not much higher than that, right? 4,700. I just wonder if you think this is going to be a deadly 12 months, or if there's going to be wild swings within it.
Well, we acknowledge that the backdrop for stocks is improving. Clearly, the market has already run a lot this year, and we think returns are a bit more muted for the rest of the year. And as you said, in about 12 months from now, our price target, S&P 500, 4,700.
Tesla back up to the high.
Because we're expecting 9% earnings growth across the market in 2024, and that's compared to no earnings growth this year. So
Yeah.
as growth comes back into the picture, we think the market really starts.
So much good content. So much good content.
Energy, consumer, staples, industrials. It sounds like your sector view is supportive of a pretty benign macro.
Yeah, I think we continue to see an improving environment for stocks and a better risk reward than we had a few months ago. And as you said, we're favoring sectors that haven't
Red Solo Cup.
rallied as much so far this year, and those are energy, consumer staples.
Anybody got a Red Solo Cup?
Energy's only up about 5% so far this year. You've got rising oil prices, improving economic backdrop, and that does bode well for energy stocks. And we also
Red Solo Cup. You're a friend of mine.
the time to be locking in higher interest rates. We're probably near the peak of central policy bank rate raises, and so you'll start to see
Yeah, everything's overbought.
down over the next year. And so where there's still
Only whiskey for your horses?
lock in 5 to 10 year rates where they are, we still think that it is attractive as well.
All right, congratulations, folks. You had a great day today. Celebrate. Open a door for an old lady, old man. Smile at somebody. They might think you're a little crazy, but smile at somebody. Say hello. Pay it forward. I try to do that every day. Pay it forward. Share my knowledge. Share the things that I've seen over the last 37 years of trading. December will be 38 years. Be 38 years of trading. And investing. Buyers caused the stock to move higher. That's what. Baird adds Tesla to the best ideas list.
That it may hurt their 2023 delivery guidance. Just take a look at shares of Nikola over the last year. The company also issuing
Nikola.
$325 million in convertible bonds. Remember Nikola chair Steve Gursky. He became CEO earlier this month. He's got a lot on his plate if he's going to stabilize the situation at Nikola. Carl, back to you.
Phil, really quick, Xpeng, for example, has been in the news last week. They were forecasting this loss.
Yep.
Today, it's more about saying, look, the cost cuts we've implemented are going to mitigate some of that loss. We got a partnership with VW. Is Tesla sort of riding alongside this general view of what Chinese EV makers are doing?
Yes, to a certain extent it is, because remember, China is the largest EV market in the world. Tesla is the largest player within that market. Now, it's insulated to a certain extent because it's a much better run company than a number of the Chinese EV companies, which are startups that are just starting to get their legs in terms of production.
Oh, that's right. You're up country, right?
Capitalized and
You're in the Catskills?
than many of those Chinese electric vehicle companies. Nonetheless, when they go lower and the market goes lower, that weighs on Tesla.
China, we'll talk some UAW, I'm sure, in the coming days. Phil, thank you. Phil LeBeau today on Tesla. Let's turn to Pippa Stevens on Zoom, coming up in a few moments here. And another name, Pippa, where not necessarily going into the print hot.
Yeah, that's right, Carl. Expectations are pretty muted ahead of this report, with analysts saying there's a lack of catalyst that could lead to a re-acceleration in the company's business, with limited visibility for...
Yeah, okay, cool.
That said, Morgan Stanley noted...
Oh, there goes Tesla. Boom.
Enterprise downsell and churn, thanks to deals that were signed during COVID. So maybe some stabilization there looking forward as the company tries to expand its product.
Tesla going here.
Video calls. Now, in addition to opportunities outside of video, investors will also be focused on...
Boom, there goes Tesla.
...has been investing in. That includes timeline and monetization opportunity for products within Zoom IQ, including meeting summary and...
Okay, looks good.
Shares are about 1.4% higher right now.
We'll be seeing you in just a couple of minutes. Pippa Stevens watching Zoom. Meantime, looks like we're going to put
Stock
together the
twits.
update of the month so far. Yes, two updates. So remember, the bottom was on Friday at 43.40, right at the open, and we're just passing 4,400 at the highs for the day. You notice the Dow is flat today? That's because it's all about tech and consumer discretionary and communication services. Elsewhere, banks, energy, consumer staples, really weighing on the Dow right now. And this is where you see the differences in the market capitalization. The Dow, of course, a price-weighted index as well. So two things.
Nice move.
Tech stock is up today. And again, most of the bottom was on Friday. Number two, and this is the most important thing, 9 basis points up for the 10-year yield. This would have been catastrophic in the last 2 weeks. And yet, all throughout the day, the S&P has been rallying and has not dropped tech, not dropped communication services. This is a changing trend. We've been talking
Nice move on Tesla. Mm-hmm.
weeks now. And today, suddenly, it stopped mattering as much.
Very nice. All right, S&P is still fading. VIX is turning. Tesla's rising. NVIDIA's at the high of the day, making a new high. 3 minutes to go. Got a nice shoulder roast marinating last 24 hours. Got to go get some garlic after the close. So I got a hard stop after the close.
So the numbers are not coming down. Nobody's cutting their numbers on these slightly higher rates. So far in August, I see seasonally light volume. I see the VIX below 17. It just dropped below 17. And so I don't see the panic out there right now. I see a little bit of concern about the speculation.
What's up, buddy? Your mother's got it. How was school? First day? Did anybody recognize you with that long hair? So we're going to get your hair cut? You sure?
Sure. It's always decisive, but there's nothing I'm looking at that I'm worried about. I see the volumes are seasonally light today. You know, if it was really a problem, there's a fundamental issue. People were
Okay, nice little pop there on Tesla. All right, so Baird with its best idea. Tesla. Best ideas list. After a pullback, Tesla being bought up. You got to love it. Got to love buying pullbacks. Okay, more selling into the close. Got less than a minute to go. Couple of seconds to go. All right, folks. Have a great evening, everyone. I will see you tomorrow bright and early. We'll take a look at the market, what our best setups are. Before we close out, let me just look at what the watch list, how the watch list turned out. I know Tesla was the top of the list. Tesla. Okay, Palo Alto and Tesla were the top two. Applied Materials number 3 and Regeneron number 4. DraftKings number 5. DraftKings. All right, that's a wrap. Take care, everyone. I'll see you in the morning. Ciao.